morning. There we go. Sorry. Transition not working there for some reason. Good morning, one and all. How are we all doing? Hope everyone is well. What's happening, guys? Let me know in the chat who's in with us, where you're watching from, and how your Thursday morning is going so far. Let me know in the chat. Peter, good to see you. Raj, FR Trading, Don, who else we got? 4X Guru, Martin I, Angela, loads of you already in. Poom, Chantel, good to see you. I think that's everybody that I can see so far. Alday and XD as well. Good to see all of you guys. We've got Trading Noob from Poland. No to witam. Cześć. Zapraszamy. Duarte. Where are you from, Duarte? Let me know. Pablo as well. Jonesy, good to see you, bud. We've got Frick, we've got Erdl. 4X Guru. Am I muted? Pretty sure I'm not. Guys, let me know. Can you hear me? Hope you can hear me. To rozumiem, że słyszycie, bo jak nie, no to będzie problem. Evening for Ishan in New Zealand. Good evening to you. We've got Pakistan, we've got Portugal, we've got Sri Lanka. We've got everyone in. Great stuff. Martin is confirming that you can hear me as well. Beautiful. That's what I want to hear. So how are we all doing, guys? What's been happening? Who has been trading already this morning? And if so, what have you been trading? I am done for the day. If you caught me on the AlphaBeta Labs stream just under an hour ago or so, you would have seen I took a nice little scalpy trade on EUR USD, and that has got me my 0.5% profit that I needed to pass my phase 1 on my 5k high stakes. So I am now sitting on my hands. Well, not literally, because if I did, then I can't click the mouse and show the comments and everything else, but I'm not going to be trading. Okay, so I'm counting on all of you guys throughout the stream today to hold me accountable. And if you see me going, looking at my MT5's closed. Okay, I don't want to open MT5. I've got TradingView open, but we're not opening MT5. No more trades. Okay. So yeah. Trading Noob. Yes, I do. I do speak Polish. I have lived in Poland for 17 and a half years. So over that time, I have learnt to speak a little bit of the Polski, as they say. I do also have Polish heritage through my grandparents. So I did speak it as a kid, but I was never educated on it. So yeah. Thank you very much, Jonesy. Thank you, Louis. We got the Build DJ in Croatia. We got Adakwa in Ghana. We got Ishan trading gold. In the market, says gold trapped sellers after taking liquidity on the 30-minute. Now we buy to all-time high. That's a very bold statement. I'm not so sure about that one. And we'll have a look at that in a minute as well. But I think the sellers are in control on gold. Is my view. So we'll see. Alexandro, UK what? You want to look at the NASDAQ? I'm confused. FR's from Vietnam. We've got Kenya. Amazing. Lovely to see all of you guys. Welcome, Betty. Long and chill the NAS. Possible idea? It's a possible idea. The GBD app from, it says STEMI. We got Alexandro from York. Excellent stuff. But I'm assuming you're trading the NAS. Is that why is that your answer? I'm from the UK and I'm trading the NAS. Gotcha. Alrighty, guys. Well, listen. Let's get straight into it, shall we? First, I will show you that beautiful trade that I caught on the Euro USD earlier. So I didn't take this one. This was one that we just pulled out. We were joking about. There we go. That's probably a bit better, isn't it? It's not ideal, but we'll do it that way. What was I saying? So this one was a kind of a trade idea that I shared with everyone on the ABL stream, but this was the trade that got me past phase one. Reason for it was we were still in a downward trend. I was looking for us to come lower to retest this area. We'd had this pullback onto this engulfing candle, which I was expecting us to come and retest. So I was actually talking about buying from here, and I didn't take the buy. I dithered. But then I saw we had this inside bar here, so liquidity. So I was looking for price to come and tap that liquidity and to then shoot off, which it sure enough did. My TP was down here for retesting this wick, which sure enough it did. You can see there it came, it retested, it didn't take the lows, and that was then the second trade idea up there. But this one was enough for me to make the $50 minus commissions to give me my $25 profit that I needed for the day. So yeah, very, very happy with that one. So that's the day three. Actually managed to do that this week. So Monday was the gold trade, the epic gold trade that I took live on stream with you guys. That got me a $700 profit. So that was the first trade on the account. Then yesterday had my second profitable day, and then today is the third and final day. So roll over tonight, and then be on to phase two tomorrow. So yeah. How do you not get wicked out with a 0.6 stop loss? That is because the fibers have ridiculous spreads. So yeah, you just got to look at the spreads. You can see it on your screen right now. They're scrolling through. Spreads on Euro USD, for example, are practically zero, if not 0.00001 or something like that. So very tight spreads on major pairs like Euro USD, Pound USD, and so on. So trading this one, I was quite happy, and it was literally just tap in there, sell off. So yeah, it was a very, very nice trade indeed. So let's go have a look at what you guys are talking about in the chat, because I saw there were some requests to have a look at a few bits and pieces. Miguel was asking, how am I going to trade the news today? I'm not going to trade the news today, Miguel, unless I decide to become a degenerate and get another account, because I'm not trading that phase one account. I refuse to do it. I've been blowing way too many accounts over the last few months, so now this one is going to be protected at all costs. I'm even tempted to uninstall MT5 just to remove even the slight possible chance that I might trade with it. So we'll see. Martin I says he's already in gold. Jonesy says already closed his GU short thanks to PMI. Let's have a look. GU. That's a nice solid sell off there. Very, very nice. Very, very nice trade. Looks like it could go lower, Jonesy, if I'm honest. It hasn't really come down to anywhere just yet to see a reaction, I would say. Although it has tapped into this structure here, this wick. So it may pull back. But it does mean that we are... I actually had this notification that came in overnight, and that was for us to come into this, I think it was a 4-hour wick, and we smashed past it. So for me, all that suggests is that we're going long, and the added confirmation of that is the fact that we've got these 1-2 wicks here of engulfing candles to the upside just on the 4-hour alone. So probably ideally I'd be looking for a retest of this wick area here, which theoretically could happen. it might come down and retest these wicks down here on the 5 minute, for example. Let's see what sort of structure is it forming on the 1 minute. Yeah, you can see we're pushing down at the moment. So potentially more sells coming in on the pound. So I hope you left yourself a little position there still to ride it on down. Martin's in on gold, so let's have a look at gold. Gold, sure enough, has come up into this wider pocket here, into this higher zone. I've got to be honest with you guys, I think it's taken this level of liquidity down here, just that teeny tiny pocket. But what it has done is, let's just check, those are not equal lows. So we haven't got that there, but we have got this inside bar on the 1 minute down there, suggesting weak support. So at the moment we're in this higher time frame structure. We're breaking past this support here, so it looks like the sellers might be back in. Remember, we broke out this structure here, and if we put a fib on that to, well, let's put it down to there, we came right to 2360, bounced off it, and we're off. So nice break and retest potentially there. So I wouldn't be looking, personally, I'm not looking for buys on gold if I am trading. I'm not, remember, I'm not trading. But yeah, Erdal, if you want to buy gold, that was 10 minutes ago, I wouldn't, but you do you. Okay. If you want to look at silver, silver looks more promising for buys. You've got this, if we take it out to the 5 minute, broken out of this structure, from there to there, 38.20, bounced off it. Not something I would get in right now, but I don't particularly like silver and the way that moves. If we look at it on the 1 hour, the 1 hour, you've got to look at it kind of the opposite angle. You go from here to here, and you can see that we are, let me just delete this fib, we've come to the 50. So I would be very, very careful, because the higher time frame is always going to be more powerful than the lower time frames. Right now, go to the 4 hour. Let's see, what does it look like? You've got 1 engulfing, 2 engulfing to the downside. It has wicked from here, so let's go higher and see if the higher time frames give us anything. We've wicked again off this area here. 11 hour maybe give us anything. 11 hour not showing anything. 11 hour closes in 10 minutes, so I'd wait and see what the 11 hour does on that. But we have left levels down here. There we go. I knew we would find one on the 12 and on the 14 hour, and on the 18 hour we don't have anything. 22 hour we don't. We're basically bouncing off this. Yeah, nothing clear for me on silver at the moment, I would say. You could argue that yes, it's going to go higher, but I'm not seeing it right now. Go to the weekly. We're pretty overextended already, really. I mean, if I was going to shall we? We're not at the all-time highs yet that we had from 2011. So silver and gold, you can't really compare the two, personally, I don't think, because they're not the same structure. Overextended, I would say, to some extent. Take it out back to the weekly. Let's just see if we can find a clear fib structure. I mean, this one here looks pretty clean one. Right to there. Yeah, I mean, you can see we're just come up to the 161. So, I mean, theoretically, you could see it push higher. but yeah, I personally I don't like silver. I don't like silver. Is my honest opinion on it. So I would steer clear of it. What else we got in the chat? Tovaru. I'll give you my Euro USD opinions if you give me yours. And then we can compare notes. Obina Nwagu is long on the FTSE. Let's go have a look at the FTSE, shall we? There's my mouse. Taking all these lows down here, reacted off this wick on the weekly and pushed on up. Very. Again, where would you draw the fib from? I'm not sure where I'd put the fib from that, if I'm honest. Maybe from the lows up to here, and then yeah, I'm not sure I like. I mean, I don't trade the FTSE. I don't like the FTSE, if I'm honest. So I wouldn't want to give you an opinion on it. But if you're trying to catch it, I would. I mean, if you're in along, congratulations. That's a very nice catch. I don't know where you're targeting, but anyone thinking of trying to sell it now, please don't do that, because you're only asking for trouble. And if you're buying it, it's already gone. So I'd be careful with that as well. So yeah. We've got Anastasiia joining me very soon. So hold on to your hats for that, because she'll be with us very, very shortly. But in the meantime, what else have we got happening in the chart? Let's have a look. DJ from Detroit, short gold, I guess. TP is looking at 33.60, 33.30, maybe 33 or 3,000. Good idea. Here she is.
Thank you for waiting. Hey, Mike, how are you doing?
I'm good, thank you. How are you?
Yeah, very good. Thank you so much. How is our audience?
We seem to be good. Your microphone seems to be a little off. You're very echoey.
I will try and change it right now. Let's try this one. Can you hear me well now?
Very well now.
Yeah, fantastic. That's it. Needed to shift the microphone.
There we go. What else have we got happening in the chat? Let's see. We've had a look at the FTSE. We've had a look at gold. We've had a look at the euro. We've had a look at GU. We've had a look at a whole bunch of stuff. We've gone right around the houses. So
I just bought GU right now.
Just bought GU this very second.
Right, like just a couple of seconds ago. Yeah. Hey guys. Hey Lewis. Welcome. Good to see you. Good evening, Henry. Evening for you, morning for us.
Mm-hmm. I can see a GU buy. Yeah, it's tapped into the little area that we were talking about a little while ago. It's taken that level that I was looking for.
However, it goes just a couple of ticks lower. I'm going to be closing that.
Hang on, you were buying or selling?
No, I'm buying it.
Yeah.
Buying it.
Yeah.
But my area from which it's supposed to reject is literally just a couple of ticks.
Okay.
If not, I'm going to be closing it immediately.
Okay. Got you. I hear you. Yeah, it's actually pushed further down than I probably would have liked on a buy, if I'm honest.
For me, it's just reached this level that is like final level that I'm waiting for the rejection from. Mm-hmm. And then if not, I'm going to be getting out.
Let's see, where have we broken past this level? I think we have, yeah. It's pushed a little bit too hard for me, but we will see. We'll see how that plays out. We have still got the German PMI. We've got the pound PMI coming up. So please be careful, guys. Watch out for.
There is an unofficial information that Trump is scheduled to visit the Federal Reserve today.
Oh
It's
God.
confirmed, but if it
God.
happens, he's going to be the first president to ever visit the Federal Reserve from the moment it was opened.
Oh God. Oh
So
no.
make sure that you protect your accounts today, guys.
I'm done trading for the day. I'm done.
You good?
I already did the trade that I needed, and I'm done. I have done one trade past phase 1 of my 5k high stakes.
Amazing.
So yeah, like 750th time a charm, something like that. Eventually got there. So yeah. Glad you got your lion's share, my friend. Martin, I can't see any links, I'm afraid, my friend. So not sure what you're sharing. Forex Guru, why you complicated the chart like this? It's complicated for you. It's not complicated for me. I'm guessing what you're probably referring to is my gold chart. And yes, it does look complicated and messy, but for me, it makes total sense. It's like a piece of art. It's like a painting that just came to me in the middle of the night. It makes complete sense to me. It will make no sense to you, but it's not meant to make sense to you. It's supposed to make sense to me because I'm the one trading it. So, so there you go. Don says, how do you mark imbalances? How do I mark imbalances, or how does anyone mark imbalances? Because
I suppose you, because I don't do imbalances at all, so perhaps
I don't really do imbalances personally. As I know some people talk about like I've heard, some people call an imbalance like a fair value gap or something, isn't it? Isn't that one of the definitions, if I'm not mistaken?
Yeah, ICT, yeah.
So if you're looking for a fair value gap or an imbalance would be somewhere like this here, where it's the price hasn't, the body of the candle still hasn't been mitigated or hasn't been kind of gone back to. So this would have been a fair value gap from here up to here, and it's now closed that. So a lot of people would be telling you, we've closed the fair value gap, now go and buy. I'm not telling you to go and buy. I'm not telling you to sell either, but I'm not telling you to buy. And Doobie, I am not trading today because I have done my trade for the day. I'm going to show you what it was because it was a beautiful.
One trade today.
One trade today, and it was this one here on the 1 minute. This one here. That one right there. We came in, took the inside bar level, and shot straight down to come and retest this wick. We came back up. That was a secondary trade idea that I'd shared in the stream that I didn't take because this one was enough for me to get my $50 of profit that I needed minus commissions to give me the 25. I think it ended up being about $35. So I'm $10 up above the target that I needed. So yeah, all good.
So you passed the phase 2 already?
No, that was phase 1. That was day 3 profit, phase 1. Millennium Management says, watch this for entertainment, not for education. They talk about their dogs and other gossips. I love to pass the time with their gossips. Thank you, I guess. I'm not quite sure. I don't really know if that's a compliment or not, but thanks, Millennium.
It was
great to have you with us. Sujoy, if you want us to have a look at New Zealand USD, that's fine by us, but tell us what you're seeing, because we're not doing a signal service here. We will either see what you're seeing or we'll see something else. So yeah, share us what you're seeing. Albert, the same for you. Gold, silver. If you throw an ass at me, I'll throw one back at you. Short the dollar like a lot. Less of the foul language, please. They're insanes. Trump's going to give Powell a black eye. We'll see, Henri. We'll see. It's going to be an interesting one.
We'll see. If it goes there today, it's going to be very interesting.
The Reddit guy is in with us asking about thoughts on EAs. That is a very broad question, and you need a bit more context. What do you mean by EAs? Do you mean like algo EAs? Do you mean trade management EAs? What exactly are you referring to? Long the Euro USD. Let's see. It has come and taken this little pocket of liquidity here. So yes, you could indeed long the Euro USD right now. I wouldn't.
Euro USD is more short actually.
Let me have a look. Yeah, I wouldn't. On the 1 hour, it's a bit indecisive because it's just contracted down. So if you see here on the 1 hour, we've got an inside bar. The previous 1 hour candle that just closed a minute ago was an inside bar. So it came down, took that liquidity down there, and it's taken that one up there. But it's now created liquidity on either side of it. So I would be cautious on Euro USD at the moment. But if we have a look at the Dixie, that might give us a better picture. And sure enough, the Dixie looks rather long, if I'm honest. So I wouldn't be trying to long the Euro USD if the Dixie's looking long as well, if I'm honest. I'd be trying to short it, and I'd be trying to long things like USD JPY, for example, which is looking quite strong. That 1 hour candle closed quite strongly, so certainly could see that heading higher for the moment.
Mike, what are your strength scores saying though about the strength of the US dollar? What are they saying?
Strength scores, strength scores, strength scores, strength scores.
How happy it makes you.
Yeah, absolutely. I love it when you guys ask me for the strength scores. It's amazing. It makes me feel all warm and fuzzy inside. It's actually showing nothing right now on the dollar. It's showing the dollar is doing a slight bit of strength, but not much. Yesterday, you can have a look at it. And yesterday, the dollar was actually quite weak. So we had obviously a lot of weakness in the dollar. We had a majority of the weakness was in the Swiss franc, and the Aussie and the New Zealand pairs were showing the most amount of strength. So Aussie CHF, I know you all say to me that's not an offset pair. Who would trade Aussie CHF? Australians go skiing, all right? I believe they do, right? Even if it's a long flight to get to Switzerland, there are Australians going skiing and they're exchanging their Australian dollars for Swiss francs.
Of course they do.
Exactly. So I believe it's happening. But yeah, you could look at one of those or Aussie USD. Aussie USD has been on fire. And so a pullback on that might be a good shout, which I know LJ was looking at as well. But right now, Aussie's still looking strong. Pound looking very, very weak following that PMI news. So I'd be keeping an eye on those at the moment, if I'm honest with you. But yeah, that's what we're seeing.
Looking forward for the PMIs later today, and really actually very interested to see if the news about Trump and Powell visiting the Federal Reserve is going to be true, because otherwise then we're going to have bloodbath in the markets again. It's
going to be insane, isn't it? If you see the market start to move, and there's nothing in the news, it means Trump's already there.
Mm-hmm.
That's the thing, because then somebody's front-runned it because they know that he's going and they know that the market's going to go bleh. So watch out for that insider trading again. Remember what happened last Wednesday? Could all happen all over again. So Adil, good to see you. Insanes is saying, wait, why, if the DAX is long, would you short the Euro USD? Well, because they're two different assets, and just because the dollar, just because the euro might be strong, doesn't mean that the DAX is going to be strong as well, or vice versa. So they're all on their own merits. Yes, there are links to them, but it's like with the dollar and the indices.
Yeah, exactly.
You know, historically, yes, there was a confluence that if the dollar goes up, the indices goes down, and vice versa. But that hasn't been the case lately. So it's not a hard and fast rule like it was before. Ellis, your companion from yesterday, Anastasiia, is saying USD CAD longs for him at the moment. I was looking at this on the ABL stream, and yeah, I quite like USD CAD for longs at the moment. It does look decent.
It actually does, yeah.
Yeah, I can see us coming up to try and close this gap here. So yeah. We've got some big comments in the chat. Hang on, let's see. Diego is saying, I'm long on Aussie JPY. It seems to have reached a resistance level. Do you believe it might climb higher, or should I pocket my profits? I got in at 96.529, aiming for a 3R. Let's go and have a look for you, Diego. Aussie JPY. Got in. Where did you get in? 96.529. All the way down. Oh, that's a very nice catch. Just about there. I mean, the thing is, Diego, I don't know what your stop loss was. So the 3R. I mean, 3R was theoretically there, give or take, if your stop loss were down here. So I need to know where your stops are to better know. But you've got resistance up here anyway, so you're getting to it. The 1 hour closed quite strong, suggesting it might continue higher. 2 hour closed strong. The 3 hour closed strong. So it looks good still for further longs, but I don't think you're going to get up high as this. I think you might get somewhere probably around about there, around the 97-100 mark, something like that. Just looking at it on face value, kind of seeing where you might see a reaction from, maybe a little bit higher, maybe up to kind of the 97-160 mark, something like that. Might be worth looking at.
I'm not sure about the USD CAD. I'm looking at it now, what Ellis shared, and since I also look at the futures market, not only at the currency itself, it wouldn't be an immediate long right now. Now let me share my screen. Perfect. Thank you so much. So this is USD CAD, and this is an inverted chart. This is 6C, so the futures for the CAD, and this is an inverted chart for the USD CAD. So we're right now above the weekly point of control for the futures, and this is what I rely personally on when I make my decisions. So as long as we are above this volume here, we've been rejecting it several times since yesterday, and I'm expecting more something like this to happen. Unless we do break the zone, we also break the previous lows, and then we pull back here, and then maybe yes, then I'm going to be looking for shorts. Up until that moment, I'm expecting the price to keep rejecting the same area. For USD CAD, it looks slightly different. So looking only at the USD CAD, I understand why Alice is looking for longs right now. So if you look at the USD CAD, it totally makes sense. If you look at the 4 hour time frame, we also reached the previous lows right here. So it's a perfect rejection, right? It looks absolutely perfectly. Now for the futures, I do see the volume here, the weekly one. So I'm expecting the rejection from here once again when the price gets here. So I'd say we are up for a consolidation unless we break those highs and then continue. So I would probably be looking for this entry point instead of trying to enter right now. That's my personal opinion first.
Yeah, no, I mean, you're right, because we're essentially in the middle of that structure right now. So it is a bit of a 50-50 throw up as to which way it wants to go from here. So better opportunity is obviously sell when it's high potentially, or buy when it's low, but get the right structure. Otherwise, for me, that's a bit more of a 50-50 kind of toss of a coin to some extent. So we'll see. But the guys in the chat seem to think that Alice is onto something. Louis saying we're going through a 1 hour quasi. You're confusing. You're confusing me for Victor, Louis. I'm not Victor.
Yeah, this is the structure. I understand what Louis is talking about.
And Henri is saying it's in a daily symmetrical candle as well. Could well be. What's your thoughts on Anastasiia on gold? Because I know you were selling gold yesterday, or were you looking at sales yesterday?
Yesterday I was selling gold. It was quite successful. I was selling from here as well. So right now I'm looking for the pullback to the upside from this consolidation here. At the same time, it's not only this consolidation, but also the previous quite important zone for gold. So we reached it several times. It's the first time we are coming to it from the other side. We do have the developing point of control of the week here as well. So I'm expecting, as long as the price stays in this gray zone, I'm going to be looking for the correction to the upside, slightly at least from the current level. Now, the target that I'm aiming for is preferably this consolidation volume. So the point of control of it is 33.88 to maybe here is the above value area low. So this zone would be my main target for gold longs. And now this, if I'm going to place my volume profile over here, that's going to be also the area I'm going to be watching for how the price reacts to it when it gets there, because also might close the trade at 33.76 instead. So I'm actually looking for this movement today, and then eventually continuation to the downside, maybe, unless Trump visits the Federal Reserve, and then of course we're not gonna most likely see.
All bets are off.
Downwards continuation, sorry?
And then all bets are off.
Mm-hmm. Yeah. So
who's to say that Trump isn't going to the Fed Reserve? Just go and have a nice cup of tea with him. He's gone. You know, they've been doing this big renovation, supposedly, that Trump is trying to now pin on him, saying it was a misappropriation of funds and fraud and all these sorts of randomness, right? So all he's trying to do is he's just trying to go and see, let me go and have a look. Trump likes to redecorate buildings. He likes to do his interior design. So he's obviously decided to go and check out what Powell has done at the Fed Reserve. That's all. Could be a completely innocent, hey, do you know what, Jerome, we've had our differences. Let's bury the hatchet over a nice cup of tea, shall we? Like the Brits would do, Maybe that's what could be totally innocent.
I'm saying that.
Yeah, totally.
Maybe in life or in different universe, yeah. Yeah.
It's do you know what? Stranger things have happened in this world.
Sure thing. There are limits to how strange things can get.
I'm not so sure about that.
Trump is going to the Federal Reserve and saying, let's talk our discussions over a nice cup of tea to Powell.
I'm really not sure about that.
Let's see. So yeah, what are you looking for gold? What's your opinion on that?
I think we're selling gold overall on the wider trend, on the higher trend line time frames. If you look at yesterday's daily candle, closed as an engulfing bearish candle to the downside, reacting off the previous wick zone. So I'm definitely looking for sells overall. As you say, Trump could come out with something random and it would throw everything out of the apple cart, and anything's then possible. But from a technical perspective, I'm looking at sells. That's my bias at the moment. So yeah. Sam the Man says EU is looking nice. Reckons shorts is looking good on EU, which would tie in nicely with USD JPY and USD CHF going long, along with USD CAD. What do you think?
I think that short for Euro USD definitely. I did miss this nice entry point here. I was looking for the short from yesterday. I did miss it in the morning, but right now I'm mainly short on Euro USD. So from here, when you were saying that it might be long, I was already saying that for me personally, it wasn't long at any point today, really. So I'm expecting the price to reach, at least a couple of more ticks, but preferably I'd say that I'm aiming for 17,380. So definitely I'm more short for EU. And very similarly also for GU, I closed my trade here at break even because it started to melt down and it doesn't seem like it's getting any strength from buyers, so any buyer momentum right now. So it feels like it's getting slightly weaker, and I'm expecting it to rather go back to 35, 36 also. Now from 35, 36, I'll see if I can long back for a couple, like a 20, 25 ticks movement here. Right now we are at 35.49 level, which is my reversal zone for 6B. But to be quite honest with you again, if you look at the 5 minutes or 3 minutes, there is no single sign of buyer strength. So it's been just consolidating here, and seems like we're just going to slowly but surely go back down. And that would be in the confluence with Euro USD, which I'm looking for shorts right now as well.
Good stuff. Nicely done. Very nicely done.
That's my opinion personally.
Gold
Let's see if
is just coming down. Gold is just testing the earlier lows from today and breaking past them. So sells are in. Sellers are in on gold. Yeah, I mean, it could be that the sellers try and get the best positions possible now before anything happens with Trump potentially going or not going to the Fed or something like that. It's possible. So we'll see.
What else do we have here interesting? I was looking for a yen in the morning as well. So also for the USD JPY, we're expecting the reversal back to the upside. So I'm looking for longs here. We did reach a very important volume zone for the USD JPY. And if we zoom in, we will see that the price is trying to break the previous highs in the weekly point of control. So it did reject it here. And now it seems like we are getting the buyer's momentum and the price may push up. So for the USD JPY, I want to see the price closing above, let's say 146, 650 maybe. So holding above this whole zone. And then on the slight pullback, looking for a buy as well for the USD JPY. So, and then until at least 147,400, and then 148,400, 148,700 as well. So there's quite a good long potential for the USD JPY today, if nothing changes, of course, if the narrative doesn't change. And then from here, looking for those three targets. 1 second. Here, this one right here, this one right here, and the lower one here. So those would be my sells. So buys for the USD JPY to then sell it eventually if it gets to the higher zones here again.
Insane saying the worst part is we don't know how the market will react to the visit. No, we don't.
Well, in the first place, we don't really know if the visit is going to happen.
Yeah. This could be just, you know what, this could just be Anastasiia just feeding us some news so she can sell the market one way with her billions and billions in market capital, just so we all go another way. Just be careful, guys. I
wish so.
You know, she could be trying to, create a fake out for us here. So just be careful, right? Don't become Anastasia's liquidity, all right?
Now you know what I'm doing now.
I'm just warning you.
Why? I could just share with you the profit, Mike. We could just agree on something. We could have a nice discussion, but now you blew it all, no?
If you told me beforehand, then we could have come to an agreement. But you can't come in here telling me, Trump's going to the Fed, this, that, and the other, and then then I'm going to share the profits with you. Nah, sorry. You got to make a deal beforehand, otherwise there's no deal. Oh dear. What else have we got in the chat?
Of course I would. Why are you thinking about me so badly?
Don't know. Do you see Daniel? There you go. Daniel says she wouldn't do it. See? It's every man and woman for themselves in this world. Every man and woman for themselves. Hayden says that the Dixie has hit a higher time frame, 0.7 fib with perfect rejection. Suggesting what exactly, Daniel? Hayden, sorry. Are you suggesting that we're going to go long? I'm guessing that's what you're saying. So yeah, you see, look, Maya's skeptical as well. You see, Anastasiia, they're all very doubtful of your willingness to share your profits with me.
There we go again. Why?
I don't know. You know, Louis just laughing. So I don't know.
With Mike, of course, I would share the profits. Maybe
really?
Not with someone.
Would you?
Of course.
Okay, if you say so. I don't know. I'm not sure I believe you. But we'll let the guys decide, shall we? We'll let the guys decide. But what do you guys think? Do you think Anastasiia would I be getting the money from her? Would I be getting the profits? Or would she just be laughing all the way to the bank? I don't know. No idea. So who knows?
Thinking about it so poorly.
All we do know is that she's a cool customer and she doesn't give anything away too easily. So, but she's got great analysis and we're delighted to have her with us. Remy wants to know, how can they learn your strategy, Anastasiia? I think, let me check, but I think your Telegram is in the description, if I'm not mistaken.
I'm not sure.
I'll have a look. So if you check the description, Remy, you should find in there a link to Anastasiia's Telegram. I'm just going to check it now. Yep. Telegram link is in the description. So if you head on down into the description, you'll see a Telegram channel there. And she shares all the secrets of the world. Well, maybe not all of them, but some of them. Maybe not some of them, just a couple. You get the idea. Tommy says Anastasiia is actually the only trader at JP Morgan. Now it's all coming out. Coming out.
That's a big compliment.
Tommy's just outed you there, Anastasiia.
Tommy, we agreed with you in the back. Like, why are you doing this? Why did you have to come in and say it? Huh? I thought we had a... Tommy.
Can't trust anybody these days. Oh, look, Louis now going back on his word. Louis not laughing anymore. He's now saying he trusts you.
Louis just wants a part of the profits, I think.
I know, he just wants part of the profits. That's all it is.
He's like, trust you. Now I trust you.
Yeah, exactly. You see, when the money's thrown and everyone loses their morals, everyone's like, oh, I trust you. Yeah, I trust you. Yeah. Got to sell gold to support at 33.58. Yes, maybe. It's taking a whole bunch of liquidity at the moment. It's in this buy area. So I wouldn't be looking for sells just yet. I think you might get a better price to sell at the moment, a little bit in a while. My brain, we're not allowed to talk about, see, Millennium Management says we're not allowed to talk about entertainment or dogs. I was literally just about to mention my dog and I had to take it to the vet. Mustn't talk about it. Sorry. Okay. I'll shut up. I think gold, you see how it's come and taken these liquidity levels down here. It's taken 1, 2, 3, 4, 5. It's already in this higher time frame zone. So I wouldn't be surprised to see it maybe come down, take 1 more or 2 more of these, maybe the green one, then pull up for a bit of a pullback up and then maybe look for sells. So if anyone's looking at sells on gold right now, I would wait and see if you can get a better price for selling down. So yeah.
I agree with that. GBP USD is showing a buy entry at the moment. Still not for me, because as you can see, like on the 15 minute, we are still at the same area. Like it's just stuck. This was my buy zone here, but it's been stuck here for a while, and I would like to see the perfect rejection. So when the price comes here, buyer stepping in, you can immediately see the buyer momentum, which we didn't see at all, by the way. So we are right now just barely moving. So in fact, for the GU, I would say I'm rather short right now. Biased. Maybe a slight pullback, but I wouldn't be buying it because the momentum is really, really low. There is barely any volume for GU.
Sam the Man is saying, I've got the 20 and the 10 EMA cross, the VWAP, and volume in my setup. Do you think is a good strategy? Sam the Man, I have absolutely no idea because I don't know what you're doing with them. It might be a good strategy. Have you back tested it? Have you got kind of data to suggest that it's a good strategy? It's not a strategy I have or that I know, so I wouldn't be able to tell you whether it's a good one or not. Maybe Anastasiia knows better than I do, but
I still don't know the list of the indicators that you're using is not the strategy, right?
yeah, exactly.
The strategy is much more than that. So how could we tell you if it's a good strategy or not? The combination of the indicators, perhaps, but is it a good strategy? We don't know, right? Because we don't know how you manage those indicators and what are those confluences you're looking for. What are your no-goes? Like, what are the setups that you take? What are the setups that you ignore? There are so many different details.
Yeah. So. Yeah. Exactly. So, what's your risk? What's your target profits? What's the time of day? Are you swing trading? Are you scalping? Are you intraday? All sorts of things. So, give us a little bit more information and we can maybe look at it. But ultimately, if you back test it and it works, then, that's already a good indication, right? TechTide reckons that pound is showing a buy entry at the moment.
Yeah, I was looking at this comment, right? Remember? I looked at the GBP USD afterwards.
Oh, sorry, that was still that comment. Right.
It's pretty dead still, as we can see, so it's barely doing anything here.
Yeah, it's not really done anything at all. I can see the thoughts behind a buy, but if you look at how the 1 hour closed, I would say you've still got a little bit more of a sell coming in. I don't think it's quite finished there yet. If you look at the 3 hour as well, I mean, I do think it's good for buys because we're in that little pocket of that 4 hour candle. But I think on other time frames, we still need to come down just a little bit further before we see more buying levels, is my thoughts. Mr. Nobody says, I think PMI is going to be positive and gold will be going down. Could well be, but it might not be. Who knows? But just make sure you don't trade the news, trade the reaction to the news, and you should be all right. See, there was education, Millennium. I don't know what you're talking about. That was it. That was a perfect tidbit of education, surely, wasn't it? No. Trying my best here. Don't do drugs. Is that a good education thing? Which education is that?
Which kind of education are you looking for, guys?
Exactly. Reality is, Millennium. The reality is, we actually had a conversation about this with Jonatan. Nobody wants education on these streams. People say they do, but the viewership tells us otherwise. When we start going into the great big depths of explaining stuff and all that sort of stuff, we can see the viewership just go. So, there's a clear data that says people aren't interested when we start trying to educate them and everything else. They want quick, fast trade ideas, this, that, dumb entertainment. That's, they go to recorded videos for education. They don't come to live streams for education.
Exactly.
Unfortunately, or fortunately, depends which way you look at it. What's the best strategy what's the best strategy for trading gold? Relaxing crochet. The best strategy for trading gold.
Yeah, we get this question at least once a week, don't we?
Once a day, more like. At least once a day. Best way to trade gold is don't trade it. Then you don't lose any money. That's the best way to trade gold. Or if you want, actually, here's a better way to trade gold. Go and buy some physical gold. That's the best way to trade gold. Just go and buy some and hold it. But you need a lot of money to buy a decent amount. So yeah. Trading is reactive, not predictive. I don't agree entirely.
I don't agree with that.
Because you need to kind of be able to not predict where price is going to go, but you need to at least plan your trade ideas and what you think is likely to happen, different scenarios and so on, right?
Yeah. Well, I work with scenarios, right? I don't react to what the market is doing, because the quality of my trade is immediately going to go massively down. So I personally disagree with that. I think trading it's not about prediction, it's about planning. If you have a plan, if you have the idea what you're going to be doing, and no matter what the price does, then you actually can execute the trade accordingly to your plan, and you are prepared for different market conditions, different changes, and so on and so on. Now, if you're reactive, most likely you're going to act emotional, right? You're going to react to especially on the high volatility events, unscheduled news releases, Trump trades, and so on. You're going to react out of emotions, out of fear, out of greed, out of FOMO, and so on and so on. So if you don't have any plan and you are just purely reactive, I think there is a combination of both. There is a planning and there's a reaction at the moment to obviously trade what you see, not what you think. And you can react at the moment of the price moving, of course, at the moment when it gets to your zones of entering the trades, and you need a quick reaction, you need a quick decision making. But if it's purely reactive, I don't think it can work long term.
Amen to that. Shivam, that's very kind of you. I didn't know I did any, to be honest. But it says it loves my genuine psychology tips. Any tip for the day today? I'll come back to you, Shivan. I'm gonna put a star next to your comment, and I'm gonna try and think of something. I'll come back to you. I'm trying to think of something that won't seem as entertainment, because Millennium, apparently I gave the correct answer. Thank you, Millennium, for confirming whatever my answer was. I appreciate your confirmation. I don't know what the answer was, but who cares? Marina's in the house. Marina, good to see you. How are you?
Yeah, Marina, welcome.
Always a pleasure to see Marina, one of our regulars. Rajiv, I'm pretty sure you asked me this the other day, and I'm pretty sure I gave you the answer the other day as well. So with that in mind, I'm going to ask Anastasiia to share her confluences.
Oh, Mike, I cannot share them, unfortunately, because they are on the futures charts on my other screen. List of confluences include basically anything from price action on the 5-minute time frame. So for entering trades, I use a 5-minute time frame. And on the 5-minute time frame, I use a footprint and order flow on the futures chart that I'm using. And the confluences from the order flow, things like, for example, stacked imbalance and the cluster statistics to see the increase or decrease in volume and decline or increase in delta, for example, numbers, to see the activity of buyers and sellers at the moment of entering the trade. It can be volume that is coming in the market, for example, on the specific cluster. It can be the dynamic levels that are shifting position with the price, like, for example, on TradingView, right? It can be the moment when dynamic level shifts with the price, then I know, okay, I should be starting to look at their entry point. It can be that the price closes above or below the specific volume. So to be honest with you, there are more confirmations for me to enter the trade than there are to identify the major zones that I'm interested in. So it's very simple and straightforward for me to identify the zones. I have a very clear, straightforward process for the weekly analysis, for the daily analysis afterwards. If you look at the confirmations for entering the trade, this alone is like a 50-page playbook if you want to write it down. So that's quite a big one.
There you go. Rajiv, I hope that answers your question. Sharon, good morning to you. Let's have an awesome day of trading. Thanks for all your insights. You're very welcome, Sharon. Thank you for joining us. And Pip Skylark is asking, do we do this every morning? Me and Anastasiia would love to do this every morning, but alas, we are simply just too busy. So you can catch me and Anastasiia every Thursday morning on this segment at the moment until somebody decides to change it around. But the Fivers live trading room is live every Monday to Thursday from 9:30 a.m. UK time until 2 p.m. UK time. Am I right?
Yeah.
Yes. 9:30 a.m. 8:30 GMT, 9:30 UK time.
Yes.
Yeah. So yeah. Make sure you like and subscribe and hit the bell, and you will get notified every time we go live. So yeah, we've got a whole team of traders in here. We've got Dirk, we've got Jonatan, who lead the whole live trading room. We've got Deanna, we've got Pedro, we've got Sal, the CEO of the Fivers, who often comes in. We've got, of course, Victor, the masked trader. We've got LJ, who joins me from the AlphaBeta Lab. We've got Griff. Loads and loads of great traders all joining us. So make sure you like and subscribe, and then you won't miss any live trading room. And are we full-time traders, says Mr. Nobody? Yes and no. Yes, in the sense that I work for AlphaBeta Lab, and that's a trading educational platform. That's trading related. So technically, I do trade. I trade in the live trading room, but I'm not sat 40 hours a week sat in front of the charts. So I don't think. How would you describe yourself, Anastasiia? Full-time trader?
Well, everything I do is around trading.
Yeah. So it depends on how you define it.
The majority of my income is from trading.
Yeah.
So I guess if you are asking if I only do trading itself, then no, I do many different things. So many different things. I was counting just a couple of days ago, and there are many of them. But they are all trading related, concerning trading specifically.
Okay. Daniel says, Daniel can't decide whether he trusts you or not, Anastasiia. He's now saying that you're number one. So there you go. You've got him back on side.
Daniel, I'm not so sure in profits. No, I changed my mind. You guys didn't trust me.
I'm picking up severe sarcastic vibes here, like proper sarcastic vibes. And so I don't know, Millennium. Genuine answer, right? I'm going to look into the camera. Tell me, just be honest. Are you trolling us, or are you genuinely enjoying it? Because if you are, that's great. If you want to troll us, just be honest about it. Come out and say it. Yeah. Let's call out the trolling when it's trolling, and let's be sarcastic. We're going to be sarcastic. Sam the Man says, big thanks to you guys. Trading can get real lonely sometimes. Appreciate the good vibes. Thank you, Sam. Thank you. That is what we're here for.
With a friend that, for the 7 years I was trading on my own only. I had some traders in there, that I knew and everything, but it wasn't the same. Now for the past year, since I've started joining the Fivers, and my own community, I have so many amazing traders around me from all around the world, and it's nothing like before. It's incredible, and it truly makes a big difference.
Yeah, it does. It really does. Maya found a quote this morning that says, the market doesn't care about your feelings, your dreams, or your margin call. It's just a slaughterhouse for egos. Quite right. So yeah. Millennium says, I'm enjoying it because I am a full-time trader and I have a lot of time because profitable trading is boring. Wow, there's an ego right there, huh? That's very humble of you there, Millennium. Congratulations on your profit.
I'm gonna agree with one thing, that trading is supposed to be boring. Yes. Is the rest?
exactly. And is it trolling? This is the thing, we don't know. This is what I'm honestly, I am a disciple of the art of sarcasm, right? I love me a bit of sarcasm. I know Anastasiia does as well. But the thing with sarcasm is it just doesn't work in written form. It's just, you lose the tone of it, you lose the impact of it. So Millennium, if you're a full-time trader and you're doing really well and you've got that much free time on your hands, send an email. You see just down at the bottom, just down there, in the ticker at the bottom, there's an email address. I think it's livetradingroom@thefivers.com, something like that. You'll see it in a minute. Just send an email to that, and Jonatan will happily have you on the Fivers live stream if you've got a good microphone and a camera and everything else. He's always looking for people to join the live trading room because we're already busy, and we don't have all the time available that he would like to have us on. So yeah, there you go. Down at the bottom it says tradingroom@thefivers.com. So just pop an email, and yeah, profitable traders are always welcome. Always looking for profitable traders to come in, join, share their ideas, share their insights, share their experience. So yeah. I'm not sure what I said, Louis. Of course it doesn't, Mike. I forgot already what I said. I find it very difficult, but not boring at all, says Thomas. You'll get there, Thomas. You'll get there. Don't worry. When it gets boring, that's when it gets good.
Yep.
So yeah. Thing is that's so everyone's picking up on this boring thing, picking up on the boring. So the boring is the end game, right? Boring is the kind of the you see, Louis, I didn't even pick up on it. See, I didn't even get it. See, you want trading to be boring. The journey that you're on with it is, it's exciting and it's entertaining and all that sort of stuff. But that's when it gets difficult. When it gets boring, that's when it gets easier, because it just becomes logical and regimented and routine, and you just go in without emotion and you trade and you make your money, and then you go and live your best life, right? You go to the gym, you go traveling, you go hiking up Mount Kilimanjaro, or you go running a marathon God knows where around the world, and all these crazy wild things, right? That's what a profitable trader does, right, Anastasiia? I think
there's some judgment in your voice somehow.
That's not judgment. That's genuine, sincere answer. That's genuine.
I don't know how sincere and genuine.
That was complimentary. That was like, no, seriously, yeah. If you're profitable enough to be able to go climbing up Mount Kilimanjaro and go running a marathon and do all the other things that you managed to do, then that's a profitable trader, right?
That's for the next month, though.
Yeah. Okay. All right. So we need a few more trades for Anastasiia, guys. Anyone got any signals for Anastasiia so she can pay for a trip?
Guys, signals, because I need to pay for my Kilimanjaro trip.
Millennium says, I've created more than 7,000 strategies, more than 1,000 EA and custom indicators. I learn with all this research and nothing works all the time. I met traders, no one makes money consistently. Brilliant. So Millennium, are you trading with the Fivers? If you are, genuinely send an email and Jonatan will have you on the stream. He would love to have you on. Somebody with your experience, I'm sure you could share a lot of knowledge and insights with our audience, which we'd love to have. Anyone who is saying trading is boring, clearly not intrigued by the market and not learning anything from their stop losses. I disagree, Rahul. I disagree. When you get to that point where trading is boring, that is because it's become routine. It's become like muscle memory, or it's just become instinctive. And you look at anyone who isn't a profitable trader, one of the biggest things that gets in the way is them, not their strategy or anything else. It's them. And when you remove that emotion and all that psychology away, then all of a sudden it becomes boring, because you remove all of that, and then you suddenly become profitable, because you just you follow your plan and you go through it day by day, week by week, month by month, year by year. And that's where you want it to be boring. The journey isn't boring, but the end goal is meant to be boring, so you can then go and enjoy your life with the money and the profits that you're making. So
yeah, I mean, execution should be boring, right? When you have your system, it's not exciting. It's not about excitement to get in the trade. It's not about excitement to trade every single day, not essentially experiencing all these emotions daily. It's about following your system, and following your system routinely day by day can be boring, and that's where the boring part comes in, right? If you follow the trading system, if you do exactly the same thing every single day, you execute 1 good trade per day, 2 good trades per day. Ellis said yesterday that he took two trades in a whole month. I mean, profitable trading can be boring. It's not the same as sitting 15 hours on the front of the screen, taking hundreds of trades. Like I've met people in the past month who took hundreds of trades per day. Like, can you imagine the level of anxiety and stress, but also excitement and hype and FOMO that someone goes through, and the whole cycle of emotions, a range of emotions daily, that someone goes through when they execute hundreds of trades per day?
Yeah.
Like, that's a lot. I mean, I used to try myself as a scalper in the beginning of my trading journey, but I didn't have hundreds of trades. Like, that's massive.
Exactly. Yeah, I completely agree. Shivam saying, if we've created a profitable system, should we learn new systems and stuff in trading, or should we just master our own system? I have an opinion on this, but I'm keen to hear yours first.
I think that stick to something that works. That's my opinion. I'd say stick to something that works. Learn your system in and out, all the stats. So if the market changes, and it's going to change after a couple of months, a year or so, you will know what to twist to be able to adapt your strategy to the new market conditions. Yeah. Like, I have my system. From time to time, I need to twist a couple of things, pay more attention to some confirmations, pay less attention to other confirmations, adjust the stop loss and take profit sizes, for example, using the limit orders or market orders, but the base of the system remains the same. I just twist and trick it to the market conditions, because that's what I've spent my time on. I've spent my time learning about their systems, all in and outs and details. So my opinion is stick with something that works, but obviously work on understanding why it works. Yeah. Problem for traders is that when they get a strategy, for example, they learn the strategy from somewhere, and they don't understand the base and the foundation and the reasoning behind the system, then after some time passes, the system stops performing the way it did before, and people are like, okay, why am I doing the same exact thing I used to do before, but I'm getting horrible results? Well, because you didn't learn in the first place, why does this system work and why does it make sense? So you don't know what to adjust now to keep having good trades and the same performance as before. So that would be my opinion on that.
GU might be ready for a buy depending on how this 1 minute candle closes. Just let me just quickly pull that up. Yep.
If you say so.
Not great if I'm honest. It's not a very convincing setup. But yeah, you might see a buy come in now. We've reacted off this wick, tapped into it, so you might get a buy. I would have gotten in probably around about here. Stops just there, and maybe just targeting up here. That'd be a nice 2 and 2.7R, something like that. I had this marked out as an area anyway, because it was on the 15 minute, I think it was. No, sorry, it wasn't 15 minute. I think it was the 5 minute. Yeah, 5 minute. You had an engulfing candle to the upside. It's rejected down. Yeah, see, it hasn't hold. As I said, it wasn't a high high confidence because it was only really showing on the 5 minute, and we're heading lower. So yeah.
No, I'm definitely bearish on GU now.
Yeah. But where?
Well, I mean, I didn't enter the short. I'm expecting the price to return to the same blue area that you have marked up.
Yeah.
That's my opinion on GU right now.
And then would you look for buys?
I'd wait for the reaction first.
USD CAD slowly heading to those highs. See if it can break that high. It should break that high theoretically, seeing as how GU just moved, but we'll see.
I'm not really a big fan of anything, to be honest, today. Like, not GU, not EU. I think I'm gonna wait mainly for the second half of the day, the PM interest rate decision in Europe as well. I'm gonna wait really about the news about Trump visiting the Federal Reserve, and then their weekly jobless claims as well, because otherwise it's like it's in the moment where it's either can by my system I already see the entries, but how it's moving, how slowly it's hanging on those levels, I don't like the momentum. It feels like it's a calm before the storm. I'm probably going to wait for the momentum and volume coming in the market before making any other decision today.
Yeah, I agree. It's just not looking particularly pleasant. Ellie is asking, I think I've said that right, Ellie, or Ellie. Do you think there's a possibility of a head and shoulders on USD 4-hour charts? I see you've got it open on your charts. I don't know if that was what you were looking at already.
Probably your chart, right?
We've got yours up.
Oh, this one.
USD JPY.
Yeah, I'm not looking at head and shoulders. I'm looking for the price to break through this volume. Maybe if it does, then the head and shoulders like this, yes. But for me, it's more of a break of the trend. So we had the lower highs being created, and now I'm looking for the price to break the lower high, create the higher high for the break of structure, for the confirmation of the trend reversal. The break of structure together with the break of the volume is one of my confluences for the shift in the trend or the start of the correction in the trend corrective wave. So yeah, I'm waiting to see. This is what I mean. Right now, technically, I could already take a buy on the USD JPY because it did close above the weekly point of control. It's trying to hold there. You see, it's trying to reject it. However, if you look at closer at 5-minute time frame, what is this price? What is this price action? What is this that volume in the market? There is literally nothing happening right now. So I'm really not the biggest fan of trading in these conditions. Like, technically, I could take a buy. Easy. Practically, I'm not going to do this. The same as here for the GBP USD, for the 6B, I could technically look for a sell right now, as well as I could sell from euro from here. But again, it's like right in the moment of the decision, like this is the zone. So I'm like, I'm not the biggest fan. It doesn't look perfect to me. But to be fairly honest, my system that I use for trading performs the best in the first 3 days of the week. The fourth one is 50-50. The Friday, I'm completely skipping now. So I'm not going to trade on Friday. My trading week is 4 days. Eventually, that's it. So
yeah.
I want to wait for the market opening for the new session.
Markets like this right now as well. Going back to the point about, do you educate or entertain or whatever on live streams? Reality is what do you do when you've got markets with nothing really happening? Everything is just sitting. I mean, even looking at those strength scores from earlier, the pound is the weakest right now today against the Aussie that's the strongest. So even looking at pound Aussie, yes, we've had that big move from earlier on this morning, and we've sold off. But now it's just sitting at the bottom of that move. It's really not doing anything. So what what would you trade? What would you do? Because I know everyone's coming in here thinking, oh, give me a signal, give me a trade, give me this, give me that. But the reality is that if we gave you a trade, A, we're not doing you any favors. B, we're forcing it. And so you'll probably then come back to us and say, oh, you were wrong. And well, yeah, because it's not ready. There's not a setup there, you know? Gold has sold off quite nicely. Again, it's come down, it's taken those areas. So gold is in that nice little pocket where you might start to see some buyers come in. It's taken this area. The way it's moving down looks like it might be good for buys at some point, but I wouldn't be saying so anytime soon.
Yeah, it's the same as gold. Theoretically, I can be looking for buys now. Practically, like again for a buys, because the previous one didn't work out for me. Closed with a stop loss, but now again it's that. Like looking at your chart, the same as GU, and I'm telling you, it's a calm before the storm. I feel something is coming in the afternoon.
Yeah.
Something's
coming. So then, what education should we provide for the viewers out there, whilst we await for the storm to hit? Because I don't know if this is what's expected of us. I don't know. What should we be doing?
Want to talk about your dog?
No, we're not allowed. We're not allowed to. We're not allowed to talk about dogs. No. This isn't. I don't know, crufts or whatever you want to call it. Dear. Let's see. We have got a comment coming through about gold. Sorry, my chat has gone. Pip says could buy at 33.60 up to 33.90, which is my current stop loss. Yes, you could. You could. The structure on gold right now, even on the 1 minute, is really, really choppy, and I just don't like the look of it. So it is gonna take levels such as this one that I've got marked out, which I don't know what time frame that's on. I'd have to go back and have a look. But there is something in here, maybe on the 5 minute or something. Let's go have a look. No, it might even be 1 minute. That I've got marked out for some reason as major liquidity. It looks like it's possibly a wickless candle. Is it? Or no, it's an inside bar. There you go. So we've come down. If we've taken this level, which I think we have, then yeah, I would say gold buys might be decent right now if we can create some structure, which we are at the moment. Sorry?
You think so?
Yeah. You could get in a gold buy here. Stops below this structure here. And you could probably, just looking at how we've moved, you could probably take a move up to say there maybe. Or yeah, about there. You can see
we just had lots of volume coming in the market at 33.67, just at the previous lows, like recent low on the 1 minute time frame, and that was more than let me check quickly, more than 300 contracts at once. So the buyers stepped in the market now. I don't know how long it's going to continue, but I think you're right about the current momentum for a buy.
Yeah.
Just looking at the future market right now as well.
Henri says, teach us about the art of hand sitting. Sensei Mike Sun Tzu. Henri, I am the last person to teach you about sitting on your hands. Trust me. No idea. I'm still working on it myself. So
I find these other things is like really, really useful. If you have a full life, like life full of different things that you are doing, you are busy with. It doesn't matter if it's work or family or hobbies or whatever it be, your business, your sports, whatever you do. If you have other things besides trading, it's going to be easier for you to sit on your hands. If the only things that traders doing is sitting in front of the laptop day by day, then of course it's going to be more difficult to stay away from clicking another buy or sell button and entering another trade.
Yep.
So what helps me is to get myself busy. I'm very good in that. Mike knows that. Mike, you too, by the way. You too.
Oh yeah, we both know how to keep very busy. Idris, I guess this is Idris. I get it. It can be boring when you're by your own, like me. I have no one to teach me, no one to take a trade and understand why and how they found it, but it's so interesting. Yeah, but that's why we have things like the live trading room. That's why we have the Fivers Discord. That's why we have things like AlphaBeta Lab as well. Communities to share and kind of enjoy this wild ride of trading together, right? Trading is one of those things where you end up with a very big virtual community, right? You're not necessarily going to find somebody down the street that trades, so you're naturally going to have to find somebody that is somewhere else in the wider universe to join you.
I like this comment from Stime. He's saying it's lunchtime in Europe, so try and enjoy the pizza because it's more juicy than the current price action. I love that. That is so true. I wish that I could. Stemme.
I would happily go and have a pizza, but alas, we are here to entertain you. We're here to educate you. We're here to not give you signals. Just to be clear. Yes, Idris. I'm French, and it's an Arabic name. Beautiful name. Like Idris Elba, but I don't. Well, he's definitely not French. But, the "you think so" from Anastasiia gives me the vibe that she is not aligned with the view. Yeah, I know, Maya. I know. Anastasia's always keeping her cards close to her chest. You never quite know what she's really thinking. So, it was like once when Victor came in to the stream, and Jonatan was trading something, and Victor just literally all he said was, "You're long." that was all he had to say. And literally all just wet ourselves with absolute hysterics. So
what are you doing? You are long?
Yeah, he just literally said, "You're long." So yeah, always good fun. That gold trade looks like it might be a decent one. We took that liquidity level that we had here. We created a new low. Wick rejected from it. And then we had this inside bar at price came down. You can see it took the low just. You see that? I think it did anyway. Yes, you can see how it literally just took the low of that inside bar and then went up. So that for me was the confirmation to get in on a buy. If you look at it on the other time frames, you can see that we've got this nice engulfing candle up. And yeah, I would say looking for maybe this area here for a reaction. So maybe the take profit might be a bit too ambitious, but maybe something like that. Where we had this engulfing candle to the downside, it didn't hold. So there'll be no doubt sellers sitting in that area to maybe push price down again. So we'll see. But looks semi-decent. So there you go. For those of you looking for a trade idea, you've had a trade idea. Those of you looking for education, sorry. And those of you looking for entertainment, I apologize as well. So guys, how did you find this long? If you mind sharing so I can understand. Idris, long story short, because I know some of the regulars have already heard this many, many times. But basically, I look for 3 levels of liquidity, which are the lines on my charts. They are inside bars, so where the price hasn't taken the high or the low of the previous candle, and that high or low of that inside bar hasn't been taken. I look for wickless candles, so where there's no wick whatsoever. And I look for equal highs and equal lows, perfect equal highs and equal lows. And those are areas that I believe and I have discovered that price is drawn towards. Then I look for reaction zones, and the reaction zones, the ones that I find work the best are, engulfing candles. Now, an engulfing candle, by my definition, the most strongest powerful engulfing candle is where it takes the entirety of the previous candle, the highs, the lows, the open, the close, the whole lot. So for me, a strong engulfing candle would be something like, let me find a good example. This one here, right? So this big one here, that's a nice big engulfing candle suggesting sellers are in. And then what I ideally do is I look for a retest of that wick. Now on that one, I wouldn't be looking at that one because that one's already retesting these other areas. But you can see here, for example, this isn't a bad example. It's not great, but it's not bad. You've got this candle where it's pushed down, and then you got this one, it's retesting the wick immediately and then selling off. That's an example there. And then I have that across multiple time frames, all the way up from the monthly, the weekly, daily, and so on. Mark out those areas. When it's dark blue or pink, then those are really high time frames. And then I drill down, and then that's why you see these multiple zones where I'm then looking for price. So this blue zone is somewhere between a 4-hour and a 9-hour zone where price has reacted in the past. So I'd be expecting some kind of reaction once it's taken that lower time frame liquidity, which it has done, and it's forming a structure at the moment. So yeah, not really doing much, unfortunately, though. So it's just kind of sitting there. So even that, not particularly wonderful, if I'm honest. So again, it just shows you the calm before the storm. Somebody was asking, is the calm before the storm, who was it? Somebody was asking about, where was it? Here we go, Maya. Maya was saying, this intuition of calm before the storm, is this purely intuition or some pattern on the chart or volume that you guys see?
Well, for me, it's personally the volume as well. It's the way that price reacts to the volume zones. It's barely moving. It's been very slow. Even if it reacts, it's consolidating there for a long time. There is no momentum. There is no volume. So the market is waiting for something. Well, the market, the people are waiting, right? The investors, the traders are waiting for something. So that's my definition of the calms before the storm. Because normally the price, like for my system, the price comes to the volume, it breaks through it, or it rejects immediately. It's not there like hovering. And if it's hovering like this, it can be on one asset or two assets, but across the whole market, that's different. Mm-hmm. That's my definition. What is yours, Mike?
Yeah, I agree. I think you don't need to do much to understand whether there's something happening or not, right? So, if you're sitting there and you're looking at the 5-minute chart, and the 5-minute chart is just barcoding like this, right? And it's not breaking out, it's not doing anything, it's just going up and down, up and down, up and down within that fixed range. And as you say, it's across multiple assets. You know that something's brewing, right? Everyone's just kind of like, who's going to make the first move? Who's going to be the one to show their hand and buy something or sell something or whatever it might be, right? And the other thing is that when you look at it, you've already had some significant moves on certain assets. So if you look at, for example, pound Aussie, right? We had that move on pound Aussie, quite a considerable move, right? If we look at that sell, but now it's slowed down. It's not continued that momentum of pushing down. So it's the move has happened and it's just now consolidating. Mm-hmm. And when you see that, where you've had significant weakness and significant strength in a currency pair, and then it just stops, that shows you that there's wider market. What's the word? Patience, I guess, to a certain extent. Where everyone's just kind of like, okay, all right, we got to our price where we want to be. Let's now just get into a holding pattern and let's see where things play out. At least that's kind of my view. Khalid says, has anyone seen that the NAS close was different between the daily candle and other small time frames?
I don't really understand what you're talking about.
Well, let's have a look. So the close was here yesterday, I'm assuming, is what you're referring to. If I can get it to go down there. There we go. All right, so the close is theoretically 23,2593. My feed is forex.com. We go to go to the 5 minute. No, I mean, it was theoretically it was slightly off, but no, it was, yeah, no, it was, for me it was fine. So don't know. Maya is saying the engulfing look back alert indicator on TradingView exactly identifies those candles you look for regarding complete engulfing of previous candle. Thank you, Maya. I didn't know that. Let's see if we can pull that up, and it will demonstrate to everybody.
I didn't know about this indicator also on TradingView.
I didn't know either. Let's find a chart that's going to be empty. Is S&P going to be empty? S&P is going to be empty because I don't really trade the S&P. And let's go find the indicator. What's it called? Engulfing look back.
Look back.
Engulfing look back. Let's have a look. Interesting. So what's I'm trying to see what exactly is it showing. Okay, so it's showing, it's basically identifying the candles and saying these are the potential areas that you could look for trades, right? You've got to go and back test this on a particular make this up. There we go. You've got to go and back test it, but the idea is, I mean, theoretically you had one here, right? So you had push back down here, wick was retested. It wasn't a full engulfing candle, but these setups still do happen, and then it sold off, right? So you could have had a sell trade by just sticking your trade onto the start of the wick, stops just above it, and you could go for a 2R, for example, right? And that would give you a 2R.
Wait a second.
What?
It's showing the engulfing candle as a blue candle, and you are showing as an entry the candle before the engulfing candle. So your entry can be based on your setup, but not based on this indicator.
Yeah. But yeah. I'm giving you, but I'm showing you as an example of what you could look for as that was just a good example where you had a wick being retested by another candle, right?
Yeah, but it has nothing to do with this indicator, basically.
No, but
because if then after the indicator showed the engulfing candle itself, then it would be a loss.
What you would do is you would then say, okay, so here's a zone, right, where we would look potentially for a reaction, right? So we'd look for buys maybe from here. As I say, you've got to go and back test it, but if you look at it, let's see, does that one work? It doesn't always work. That's why it's more refined. It's not a case of just one engulfing candle and away you go, and that's why I look at multiple time frames as well. So you go in onto the daily time frames and you just look at these zones and you'll mark them out and you'll say, right, okay, that's an area that I'm going to be looking for a reaction from, especially if it didn't have a reaction. So if you had an engulfing candle and it wasn't respected and it didn't have a reaction, it just blew through it, there are still going to be orders sitting there. But this indicator also doesn't seem to work very well, because like you have one there and it didn't get flagged for some reason. So it's not a great indicator. But again, so take that as an example. That would have been your entry, the top of that wick on a daily chart. Stick your stop loss just above it. That's obviously not a good example because it's too wide. Let's take it there, and then you go for your TP. You go for your risk reward target. You could do a 2R, for example, and you just set them. You know, if you go back and back test it, you know, you can refine the entries, refine the approach, and you can probably find a system that works quite well. Martin saying that gold 5-minute candle closed bearish engulfing. Does this mean it would sell? Not necessarily. Not necessarily. So let's go and have a look at the gold 5-minute.
Yeah, so, gold 5 minutes is still hovering at the same low. So basically, I'm looking at the futures, and it's still holding exactly the same cluster volume that was coming in the market on the last 30-minute candle, so half an hour ago approximately. Yeah. And it's still holding above it. So as long as we hold above it, I'm still expecting some movement to the upside. Not sure how far, but I'm still seeing the potential upwards movement now.
If you look at it right now on the 5 minutes, you've still got another 2 minutes, just over 2 minutes left on this candle. It's taken the low of this. It's still respecting this low wick. That's why my stops would have been below there, and then potentially heading higher. If we look at it on the 1 minute, it's done the same thing. It's taken these levels. It's respecting this, and it's respecting this wick here at the moment, basically.
Would you look for sells if gold goes up to your target from where your target is?
Potentially, yes, because you had these two. Actually, it's ironic. You've got these two engulfing candles here. So you've got buyers and sellers both coming in here. So yeah, theoretically, yes. But ideally, I'd look for more confluence in that area. You can see sometimes for me, this is the thing. This is why it's more refined than just simply an engulfing candle, right? Because there's more nuance to it, and that's where it becomes more instinctive. Is, for example, I can see here that price had a reaction point here in this wick and changed direction. So for me, that could well be another area where we then sell down from, right? You could draw a fib on there, and you probably find that that's the 50%. Yeah, there you go. So that would kind of be where I'd be looking at potentially for sales. But overall, I'm still bearish on gold.
Yeah, overall, I'm still bearish as well. So that's why I was asking if you could reverse sell, for example, after the target is reached.
Definitely, yeah. Especially when you look at how the 1 hour closed, it didn't really wick back up, didn't really reject. Same with the 2 hour, same with the 3 hour, same with the 4 hour. So it suggests heavy selling momentum coming in, and the lows of those candles haven't been taken yet. So right now, that buy would just be us retesting some of this wick, some of this candle body back up before we then sell again.
Yeah.
Let's have a look at what's happening.
Daniel says, see what gold does after 9:30 a.m. New York. Yes, I agree with you. Yeah. I would wait until the New York opening, but also gold has a market opening 30 minutes before. So at 9. So I'd say 9:30 a.m. is the standard time. We already are going to know what to do with gold afterwards.
Yeah. So there you go. We've seen that. It's on the 5 minute. Looks, I mean, it's not confirmation that it will go up, but that's an added confluence for me, an added confidence to say, we're looking to go higher. And you just drill down. So I just drill down into the lower time frames. When I have all of these zones marked out, then I just know what I'm looking for on the lower time frames. Gold is the one that I look at the most, so that's why the chart looks so colorful. So yeah. Just having a look at the news on financial juice coming in. I saw there was some EU commentary coming out about the trade talks. So it'd be interesting to see how that plays out. At the moment, I would say if gold is going to break this level here, then the trade is negated. The trade idea falls flat. So we'll see. At the moment, it's holding, but I really want to see it. I really want to see some buying momentum come in here. But we were talking earlier about what does calm before the storm look like. This is what calm before the storm looks like.
Yeah, this is basically the definition.
Yeah, because just not doing anything. So,
and the moment you set it, it starts doing something. Let's see.
There you go. You see, Pip Skylark says if gold rejects your take profit, I'll add another short at around 33.64.67. Yeah, I mean, just to be clear, guys, full disclosure, I'm not in this trade, right? So I have done my trades for today. I've passed phase one. I'm not touching that account, so I'm not doing anything. So, any trades you take, guys, make sure you're careful. Maya says it's only if found on key levels can be very useful in isolation indicator. Yeah, exactly. Yeah. But it doesn't seem to be picking up all of the candles. So there we go. There's some movement into the market.
There is finally, yeah.
There we go.
Let's see how long can it last, of course, but the start is looking promising.
Start is looking promising. That 1 minute candle looks very, very promising. The way that it's just pumped. So yeah.
Now the dynamic level of the day also shifted below the price. So the point of control of the day is now at the bottom of this whole range. So I do see the possibility of reversal right now of gold. Yep.
Consolidation move is happening because of buyers and sellers in the end will win. I think you missed another word in there, but yes, consolidation is because the buyers are equaling the sellers and the sellers are equaling the buyers, and that's why price isn't moving. 33.58 to 33.50 is area where I would like to look for small buys, but my overall bias is to sell on every retest to new form resistance. So I would sell till gold reaches 29.50. Wow, that's a long way down. To get us down to 29.50. That's all the way down here, which I don't disagree with, if I'm honest. I do think we are. Let me just hide all those. 29.50 is, where are we? Down here. So breaking all of this structure, but I agree. And if you look on the daily, you can see as well. You see, Maya, that's why I'm not sure about this indicator, because you can see this one. That's an engulfing candle, but it's not been marked out for some reason. So it's not picking them all up for whatever reason. I don't know why. But you see how, so an example here is you've got this wick, right? You've then got an inside bar, price comes, takes the low, and then shoots up. So if I'd had this area marked out as an area of interest because it had wicked up, then I'd be looking a couple of days later for some kind of setup. If I went to the 4 hour on that time frame, you had the same principle, and what I'd be looking for is price. This is an inside bar liquidity level. Price comes and creates this engulfing candle. So it's again just drilling down. I would have that level marked out, and if I see price reacting in such a way to say we don't want that level, then that for me is confirmation. I don't think I'm going to have enough data to go back to that point though. Let's see, probably not. But that's kind of the idea basically. But interesting indicator. I didn't know that indicator existed. So thank you, Maya.
Yeah, actually.
Khalid says was talking about futures. Okay. Maya says, I must be wishing if I'd ridden this trade. No, never. I'm not feeling FOMO at all, Maya. How could you know that? How could you think such a thing? I'm not so wild and desperate for wins.
That crying there.
But yeah, you got another engulfing candle in there. Again, nice indication there. Added suggestion of.
It's right now hitting the value area high of the day at the moment. So that's quite a big volume. If we reject from like literally tick to tick, if we break through this, we are up for a bigger move to the upside. But we may also go down from here slightly again and reject back.
I'm just looking here. We've got all of these levels here of wickless inside bars, all that lovely stuff. So there's plenty up here for us to come and target. And that is even, it doesn't look like it. And I don't think it is. According to the price it is, but I don't think it is. That's also an equal high, but I don't think it is. Just up here, these two. Price suggests that it is, but you can see quite clearly that it's not. So that's price is saying they're both at whatever it is, 36, but they're not both at 36. One of them's at say 36.5 or something, and the other one's at 36.
Yeah.
So Maya says, yeah, okay, all right, yes, I know you can feel it, Maya. I know, all right, but I'm being patient. You wanted to know. Henri wants to know, how do you sit on your hands? This is how you sit on your hands. You go on a live stream and you talk mumbo jumbo.
Is it Mia or is it Maya though?
I don't know.
Is it Mia?
Or is it he or is it she? I don't know. No idea.
Is it like a shortcut, shortened version for something? Abbreviation? It stands for something, or is it a name?
It's capital letters, so I don't know. Okay, Khalid was saying about that close on futures. I don't know if you could maybe have a look for Khalid on the NAS. I think it was on the NAS on your futures feed, Anastasiia. That the daily close was at 23.11.5, but the hourly was 23.41.
1 sec.
So in other words,
can I pull up a chart?
I think it was 10 points essentially.
Okay. Interesting. That is not how it looks on my other feed, though. I think that's TradingView is losing it. Let me refresh it, of course, on another feed, but I don't think this is how it's supposed to be looking today. Because this is just not okay. This is a closure, and this is an opening for today. And that's a big difference. Now, let's if we switch on the hourly, it's something it's completely off. No, but it doesn't look like this on the normal futures market. So I'm looking at the second, at the second chart, and that's not how it looks. So there is a slightly difference between the opening and the closure, but it's normal for NASDAQ, and it's not like this totally, because on TradingView is completely something out of this world. Because look at this is a closure, and it doesn't even get a confluence on any hourly candle at all. So it's somewhere in the air flying. I think TradingView messed something up with the feed this time.
X the trader says you have to run off set on the bottom right of the chart? No idea what you mean. Not sure I follow. Oh, I see you've got a little set button there, Anastasiia. The bottom right hand corner. I don't know what it does on your NT5. Not your MT5, sorry, your trading view. The bottom right hand corner of your chart, it just says set, but I don't know what that's for exactly.
Yeah, no, this is how it normally looks on my other chart. Yeah, that's why I don't trade on TradingView.
Turn it off, he says. Don't know. Okay. Double top on Aussie dollar on the 1 hour time frame, waiting for a break and retest of 66.078 before shorting. Do you want to pull up Aussie dollar, Anastasiia? Yeah. Let's see what Henri is seeing
right now. 6A. We're above the previous highs. We finally broke through the highs of the previous range. We've been ranging here for a while from literally the beginning of the July. And right now we are finally back to the upside. At the high time frame, we can't see much besides the daily, and on the hourly candles, the daily point of control is right now above the price. It's trying to close. The price is trying to reject this volume and go lower. I would say that I'm aiming towards the previous range here or towards the area here. So those are the two areas I would be aiming for the price to reach for the AUD USD. And I agree that it's a nice short, not necessarily because of the double top, just because, you know, we had this attempt to recover. The price was trying to still reject the volume. It failed again. The sellers still pushed through this big high volume node, and the price is coming now back to the yesterday's levels. Now, for me, what I'm looking at is this small consolidation, because this is what the price has been rejecting. This is where the high volume node, another one, comes in. So my personal opinion, I'm short. I don't have an entry point yet, because for the entry point, I would need to wait until the price goes lower by my system, breaks through the volume, rejects, and then sell it again. But then I would be selling it towards another volume zone. So I would literally be selling it into my buy zone immediately, which is a couple of ticks movement, and it's not worth for me for taking a trade. So I can see the shorts. I don't see the entry.
Got you. Guys, it is past 12:30, and we have esteemed colleagues waiting in the background. That can only mean one thing. It can only mean that it is time for us to, first of all, bid farewell to Anastasiia, and get ready for the weekly ABL podcast. Anastasiia, thank you ever so much.
Mike, thank you so much for the stream together.
It's always so sad when you have to leave us. It's always so sad and disappointing when you have to leave us.
It does makes me want to stay.
But we do have two esteemed colleagues and one more coming on their way for the weekly podcast. So we'll be doing that very, very shortly. But Anastasiia, thank you ever so much.
Mike, thank you so much. Have a great trading day, guys. And
thank you. We'll be right back after this, guys. Hello.
Hey, how we doing, guys?
Richie Rich, and Victor, how you doing, gents?
I am fine. I'm sure Rich is doing well as well, but I'll let him tell you guys that.
I'm doing well, mate. I'm doing well, thanks. What have I missed? Bring me up to speed. What have we got in store today?
Oh, Rich, you've missed so much. It's just you have no idea what you've missed. Well, for starters, I think we've got an interesting topic that I've got in the back of my mind to look at, which is I have done a phase 1 high stakes 5K this week. Started on Monday. Took a trade on Monday, which was a gold trade, which basically was ridiculously good, and took me into $700 profit, so $300 above the overall profit target.
Okay.
I'll show you the trade in a little while. I'm quite proud of it. I took it live on stream as well, in fact.
Not visible. That proudness is not visible.
It's not at all. I'm hiding it very well.
So
And then yesterday was my second profitable day of 0.5%.
Mhm.
And then today I've taken another trade, a very quick scalp, and I am done. So we had a few comments in the chat about the kind of the idea of sitting on your hands and how do you not trade when you shouldn't trade because you don't need to trade because you've done what you needed to do, right? So I wanted to first of all understand, because like Anastasiia and I were talking about it a little bit earlier, about what do you do to distract yourself, to keep yourself sit on your hands, and there was an element of the concept of the fact that trading should be boring as well, that trading shouldn't be exciting, it shouldn't be entertaining, and there was a bit of a disagreement in the chat as well. So I was keen to just kind of get that as a kind of a starting point for the topic, but I will share publicly again just the trade
Humbly, very humbly.
Humbly, of course, Victor. Absolutely, as you would expect. Nothing else from me. Let me see if I can find it first.
Modestly, very, very modestly humble. Your nickname wasn't Modest Mike for nothing.
Exactly, Victor. Exactly. I've got to find it now because I think I might have hidden it or deleted it. Is it that one? There we go. There's the beast. Wow. Now, admittedly, I didn't ride it all that way. Right? If I'd ridden it all that way, I wouldn't be 700s. I'd be ridiculous amounts. But I basically, the original trade was up to here, right? So it was on the 1 minute. Long story short, it was looking at liquidity levels. Funnily enough, prices right back at that level. It was looking at that we had a liquidity level just down here on the 3 hour, if I'm not mistaken. And then I saw this structure set up on the 1 minute, and we had 1, 2, didn't hold, but then we had 1, 2, and then it was basically getting in here and off it went. Now, when we were watching it on stream, I basically, I was saying, right, we'll see what it does here. And it just, as you can see, it just smashed through when it got to that level. And so it was then just going to go higher and higher. So in the end, anyone who held it, and I do think some people did hold it, if you'd held it all the way, then it was going to be, what was it going to be? It was going to be something like, theoretically, all the way to the top, it would have been 100R from the bottom there. Obviously, I didn't get 100R, but I did take $700 profit and was quite happy with that. But anyway, aside from that, I've gloated now. That's my little, modest moment. That's my modest moment. But I'm curious to understand from you guys, maybe going back to your early days of trading. I know this was a long time ago. Don't want to age you both, but this was a while ago. Did you find yourselves at some point in a situation where you did have to sit on your hands, almost force yourself to do so that you didn't mess things up, so that you didn't go degenerate style and just go all in and, maybe, I don't know, for example, keep on going on a winning streak or try and stop yourself on a losing streak? And how did you guys, first of all, how did you guys process it or feel about it at the time? And then what have you put in place now to help you prevent them from happening again?
Victor, please.
Sure. If I had to force myself to sit on my hands, yes, absolutely, a lot, all the time, because at the beginning when I started, and I still am. I consider myself, and actually, objectively speaking, I am very competitive, and that may be something that a lot of people resonate with. But that's a good thing, but it's also a bad thing. A good thing is that it drives you to try harder, but it also it can be affect you negatively because it's hard to to stop yourself because you're so competitive. And I compare it to when I don't know if you guys remember when you learned to drive, not to drive, to ride a bicycle, right? That equilibrium was very delicate, right? You didn't need, you should go, you would have been you would need it somewhere flat, no obstacles, no other moving objects, going, you know not too fast, but as slow as possible. Any slower, you would fall down. You know what I mean? It's very, very delicate.
I want to interrupt you there, Victor. I feel as though maybe I might have some unlived trauma that I didn't realize I had because my learning to ride a bike was where my uncle pushed me down a hill.
Oh.
Literally, just down you go, down the hill. It was like down sideways down the hill, and that was how I learned to ride a bike. So
Where are the brakes? Where are the brakes?
Yeah. I'm starting to wonder.
Crashes into the tree.
I'm starting to question: do I have some unresolved trauma that I'm going to be pulling out from this conversation?
But that is actually how I felt and how I was doing at the beginning of my trading career, having a very delicate balance between um, eagerness to trade or greed and fear. Right? If I had a little bit too much of this, I would start doing things that I shouldn't be doing, trading trades that are not ready yet. And if I were a little bit too cautious, I would go into fear and not be able to trade or close it before it hits TP or before it hits stop loss, but without anything happening, just because the market did one little thing that scared me off. And I think that is something that grows on you. It takes time. It takes time for you to manage and feel comfortable and knowing the limits of what is, because at the same way as when you're learning to ride a bicycle, you don't know exactly what the limits are of your motions before you actually are irreversibly going to fall, right? Nowadays, I mean, if for any rider, you know that you can do some stuff which is technically out of balance, but it's not, you can still correct them. And it's the same thing for a trader. I still do things that perhaps get a little bit too excited, but it is within a margin which I can handle. Or I may be extra cautious and I'll check things twice, three times, four times because I'm cautious, but it's not going to affect the execution in the end because I now know what my margin, what my free area is, which I can uh, you know execute my plan without it changing it completely. So did I had to? Yes, I really had to. And is it a problem? What did I do to stop me from needing that? I would say it may sound a little bit boring or I don't know, repetitive, but my way of dealing with this is working on my trade plan. In my trade plan, automatically one of the checkboxes is already tells me to check whether or not the all the alignments are present, if all the conditions are met. And automatically, if you follow the trade plan, at least the one that I made, the chances that you're going to be entering on a trade that is not valid is very slim, because you would have to skip so many things in order to allow yourself to trade. And that is going to be very evident. It's not just one thing. There are so many checks and balances in place that will force me to double check, triple check. And so my answer is it's the routine, right? It is the infrastructure of my trade plan that automatically makes it very difficult for me, very evident if I'm going to do something that I'm not supposed to, meaning I need to stay in the I need to stay in stay out of the market in this case, not trade. Or it could be stay in the trade as well, right? Because that's also could be something, right? When you're on the other side too excited, that's what you're dealing with, or you're getting better at, Mike, not trading because you hit the target. But it can be the other way as well, where you have emotions that stop you from leaving that trade, the one you had, because you I mean, it's not something that every day you have trades like these and profits like these, and you can already see the target coming, because you can start calculating, right? If this goes another 10 points, another 20 points, I'm going to be this far or this close to my target. And all kinds of thoughts can come in, and if you got too much of that fear, that the other side of the spectrum of the emotion coming in, not the eagerness, but the cautiousness coming in, it could have stopped you as well, and it didn't. Why didn't it? Right? Probably because you're building in some rules, some guidelines that you're following, and to me that's at least to me that was the answer to keep me in balance on my bicycle as I trade into profits.
I do want to say trading noob. It wasn't actually in Poland, but he was from my Polish ancestors' side. So I guess you could say it was in Poland to some extent. Thank you, Victor. Rich, what are your thoughts? Because I just want to, before you come into that one, Rich, because Maya's saying the thing is, having a winning streak should not stop one from taking a trade if that is according to the plan, right?
Yes.
And I totally agree, right? Now the thing is though, is when you're having that winning streak, right? We were talking earlier in the stream that that when trading becomes boring, that's when you start to succeed, right? Is that it should be boring, because theoretically that then means that you've become more systematic, you've become less emotionally charged, you're less emotionally connected to your trades, and you're able to disconnect and not trade with emotions, right? You're able to trade with your plan, right? There was a lot of disagreement in the chat about whether trading should be boring or not. And Rich, I'm curious to, obviously your experience in this whole sitting on your hands and everything else sort of thing, but your thoughts on whether trading should be boring or not.
Firstly, hi LJ, how you doing? Nice to have you join us on this. Look, a lot of traders I talk to have this kind of constant concern of how do I hit the profit target. So Mike, you're definitely the outlier, because you've not just hit the profit target, you've doubled the profit target. So
I'm trying to find a nice emoji for this one. Hang on.
Modest Mike things this morning, not just hitting it, but absolutely doubling it. Now, we've all seen like Formula One or GP, stuff like that. So you've never seen anyone like do the lap, do the race, finish the race, and then keep going. So Maya, as much as I agree, traders need to pride themselves on consistently executing good quality trades, we have to understand that when we're trading prop, we have a target, we have a criteria that we've got to reach. And so when we reach that target, it becomes illogical to continue trading. Now, I'm not talking about personal accounts, I'm talking about only reaching a target. So I'll give you a little story, actually. This was a little personal story from maybe 4 years ago. One of my friends was trading with an account, trading with a prop firm, and he had to finish above break even to get the monthly reset. Now, for those of you that don't know, back in the day, we won't relay our age here, but going back a little while, it was common practice that a lot of prop firms would have this rule where if you were not in profit at the end of 1 month of trading, you will lose the account. And so what would happen is about a week out, you would make this decision, I'm down 2%. I'm going to lose the whole account if I don't finish just above break even. And what we would experience is this massive, immense pressure of doing silly stuff just to try and to get above break even so that we can go again, so to speak. And one of my friends, this is going back several years, one of my friends, he was trading a big account. It was a 100K account. And he'd been trading it for a little while. And he was on his very last day. And this day he had to finish in profit. If he didn't finish in profit, he's just lost his $500 or whatever it cost him for the account. So he was down about 1%. And he found himself in a good technical valid trade that met his trading plan. He used the right risk management and he was up about 1.5 hours. So he was trading and he's now $500 above the target he needs to be. Potentially, and LJ's smiling, he knows where this goes.
Yeah.
And he's already done his lap, right? He's already finished his race. All he's got to do is click close that trade. And I remember being in a call with him, with another trader, and he said, you know what? I just want to trade my plan. And my plan says that I need to hold this trade. My target is 2 or 3R, and I'm not going to break my plan. And as admirable as it was, come on, we all know what happens here. As admirable as it was, the market pulled back and hit his stop. And so he found himself down 2% on the account. And then the stress really hit, because it was like, I should have stopped kind of objectively, because I need to understand, depth perspective. The race I'm running right now, it isn't a marathon, it's a sprint, because I need to finish above break even by this date. I understand the importance of my trade plan, but what's the cost of trading my plan if it's going to cost me $500 to follow that plan for one trade? Or do I close it and say, look, the exception here is I need to finish above break even, and then I get a whole month of free practice. So it was just something that I remember being an incredibly stressful environment as he was battling to get above break even. Now, I'm not going to tell you what happened in the end, but let's just say there was a lot of stress involved in trying to move that account with the final few hours left before the market closed. And we don't want to find ourselves in that position. So, Mike, please, can you remind me because I wanted just to touch on that, but you asked directly a question. I just wanted to touch on that before.
If you had the need to sit on your hands, and what are you doing nowadays to stop yourself from trading when you're not supposed to trade?
So Victor covered that wonderfully. I don't think there's a rock left unturned in that. It was something Mike said just as I started talking, and I was like, I want to try and follow this trail of thought.
About the winning streaks?
No, that was about stopping from trading.
Somebody go back in time.
Falling off his bike.
Yeah, me
probably.
me going down a hill on a bicycle. Was that what it was?
Yeah,
we'll go with that. But the main thing that we're trying to arise to with this is like, yes, we need to trade our plan. Like that's the whole premise of trade. Trading being boring. Should trading be boring?
Yes. Sorry. Yes.
Yeah. Right. Yeah.
So my experience of this was I didn't want trading to be boring. Why do I want to work a boring job? I want to be excited in my job. I want to enjoy my job. I want to get a lot of fulfillment, a lot of pleasure. I want to feel like I've done good stuff on a daily basis. So if you say get a boring job, well, maybe I'll just go and get an office job or something that probably didn't resonate. So for many years, I was able to keep trading incredibly exciting. And one day I hit a crossroad where I'm like, look, Rich, this is really exciting and all, but it's kind of not paying the bills. What's more important to you? Do you want to accept that maybe we can turn it down a couple of notches? And what I found is when I took my excitement level from a 9 down to a 7, I started to earn a little bit more money. When I took it from a 7 down to a 6, the same pattern occurred. I earned even more money. When we went from a 6 to a 3, the money suddenly became large enough that the excitement shot back up to a 7 or 8. And I'm like, oh, hang on, I've kind of got this wrong again. And I think there's this constant balance with traders. And we talk about kind of leveling up and moving outside of our comfort zone. What would it take? Well, when we increase our risk, when we increase our lot size, when we take on more funding, I mean, the fivers, some of their accounts can scale to $4 million. And that's per an account. So we have the opportunity to start on something that's very small. We'll take the hypergrowth model. We can start at $5,000 or $10,000, even $20,000. When we hit that target of 10% gain, the account doubles. Effectively, what it's doing is it's more than doubling our drawdown because we've also got a profit buffer in the account. And so how do we navigate that without getting incredibly excited? Mike, you've just doubled your phase 1 on a 5K high stakes, I believe you said. Now, as you go into phase 2, that account, let's call it what it is, it's going to feel a little bit different. It's a little bit more exciting. You're moving into phase 2, right? Like, this is affirming your identity as a trader. Now, when you move into live phase, you've been there multiple times before. When you move into that live phase, all of a sudden, it's even more exciting. And there's one common practice I see with traders as they move from phase 1 to phase 2, and then move from phase 2 to phase 3, the quality of their trading drops at least by 50% per phase. If you look at the stats, you will see the percentage of people that pass phase 1 relative to the percentage of those that then pass phase 2, relative to the percentage that get a payout. It can only be explained by human behavior, and that human behavior has to have a relationship to how we feel about the money, and the money comes full circle back to the excitement. So there's definitely things that we need to do to regulate ourselves and keep trading in a balance, where sometimes we're excited by it and other times we're kind of a little bit turned off by it. Like, there is a happy medium, somewhere to be in the middle. Victor's level of excitement is not going to be the same as Mike's. It's going to be very different. They're very different people. There's going to be as many different excitement levels as there are people in this world. And we always come back to this point: know yourself. And so when we can learn kind of what's our triggers, what's our excitements, what's the thing that gets grinning from ear to ear, what's the thing we wake up in the morning and go, I can't wait to send it. Like, we all have these thoughts, right? Or we got the interest euro rate decision. What have we got? 300-400 people in here? There's going to be a good half of them that are sitting there going, right, what can I do with this information that's coming out? And are we chasing dopamine, cheap dopamine? Or are we really digging down and drawing our dopamine from wells that are deep enough, longer term, lasting dopamine? So it's just kind of a little bit of thought around the idea of, like, at what point do you recognize you're trading your emotions? Because when I swapped those emotions for P&L, it was literally, give me 1 point of your excitement and I will give you $1. It was a direct correlation. And what I'm training myself to be, and actually, Victor and Mike, you were touching on this earlier, what I'm training myself to be as a personal trader is bringing that excitement down to a 1. Because at a 1, I'm going to be the most objective, the most disciplined, the most focused, the most logically reasoned trader, and I'm going to earn the most money. I'm going to get paid the highest potential hourly rate. And we all know this to be true. There is a direct correlation between trading with our logical brain, the one that follows the plan, and trading with the other fella who doesn't often like to follow the plan, but likes to do dumb stuff. But that's my thoughts on it. Mike, you shouldn't be waving. Look, you earned that. So big congratulations on that, by the way.
Thank you very much, mate. Thank you. LJ, I know you came in a little late, so I don't know how much you caught of the initial question, but what you've been through all sorts of market conditions. You've been through all sorts of trading conditions, trading assets and everything else. What's your thought on kind of, because your trading, I think it's fair to say, I know you quite well now in terms of your trading, is quite instinctive, right? It's quite, you see something and it all just comes together. We look at your charts and it's Picasso art, but it makes sense to you, right? So how do you know when to sit on your hands, and how do you just keep going?
So it is quite instinctive by this stage. After doing something repetitively for so long, you do build that just instant, switch that goes off and you can just see it all. And the other part of that, obviously, you've got that backlog of experience, information, data, all that kind of stuff, like you're saying, which plays in the background. That sort of is a constant, like, background sort of music going along. And then it's kind of like musical chairs or something. And you can just, when the music stops or goes, and then you punch the trigger. As far as how do I start going, stop going, when to stop, if I've made enough profit, that kind of thing. And like Rich was saying with the account sizes and stuff, I think from that aspect, I've always viewed things as the percentage gains, right? So that's a good way to make it so-called boring, per se, because then whatever number you're at, if you're just looking at the percentage, then you're not getting wrapped up in whether it's, $30,000 on the line or $300 or anywhere in between, right? So that's definitely that consistent piece, because you can ride that the whole way to you know, multiple billions if you wanted, right? And it's the same thing. So that's the first part I would go for. I also know at this stage sort of the expectations from what I should see from my trading when it is sort of in that pocket. And then hence it makes it easier with that experience as well to tell if you're deviating from that. So if I'm definitely feeling like, you know, I'm on a hot streak or whatever, in my opinion, yeah, you should keep punching that throttle. And then notice you don't want to get wrapped up in like a hot hand fallacy, like basketball. You know, someone's just sinking buckets. Everyone's expecting the next one come through, fail, right? So I think that's sort of where you cut it off. You keep going until you get that slight slip, and then you pause and reset. Yeah.
I want to add something about the hitting the targets, because you know, if you're trading, and I completely agree with Rich, because in the end, hitting the target, if that is, you know, what you're doing on that account, that is the only thing that matters, right? Yes, we say focus on the process. Yes, we say trade your plan, be disciplined, but in the end, the game is won or not by hitting the target. So it makes sense to adapt the rules of engagement, if so to speak, that is one of the targets. Not the target of the account, but one of the targets of your plan, right? So that
Yeah.
is the goal. So once you hit the goal of your plan, right, you could build in something that says, "That's it. I'm done for today," for example. Since that was there's no need of going laps after the race. However, when you're trading multiple accounts, when you are copying from a master account to, you know, multiple slaves, there isn't one goal, right? Because there isn't one account. Actually, the master account is in an everlasting stream of signals to be taken, to be copied to these accounts. So what I do is recognizing that for that account, it is the end game. Once I hit my target, there's no need to keep on copying anything else, because what's the point of getting more risk if there's no more upside? And on those accounts, what I do is I have a little EA that will automatically close the position that is even open. I don't see it. It is automatically closed when it goes over the target, and it turns off that automated possibility. So it's not copying anything new. So I know that even if the original trade may even go back to my stop loss and hit and get as a loss, that account, once the equity hits the target, that account is basically frozen, and I know for sure that I will hit the target without giving anything back. But on my master account, I don't see that, of course, right? So on the master account there are no targets, right? Because it's a private account. So there are no targets, and I just keep executing my plan regardless of what happens to the slave accounts. So it is I think important to recognize that, you know, hitting the target is a real thing, and you should design your process to accommodate that, right?
Then,
Because go ahead.
so then, what do we need to be doing as traders to get ourselves to the point where? So Maya was saying, you know, about just if you're on a winning streak, if you see a trade, it hits your plan, meets your plan, just trade it. Rich gave the example earlier of his trader friend who followed his plan and ended up going against him when he didn't need to go that far, right? Rich, what do you think people need to be doing to be able to actually stick to that plan? Like, is there like a one thing that everyone watching right now could go away today and do that would help them stick to their plan, other than have one in the first place?
So, like, I'm trying to make this as generic as possible because it's going to be a different trigger for every person in here.
That's a hard part, eh?
Yeah, like LJ's medicine
Very
won't be.
subjective.
I'm not going to make him easy. Come on, this is Rich we're talking about. I've got to make it hard.
Yeah.
The common underlining theme would be that each and every individual person would have to recognize that following that plan, not just recognize, not just believe it, but feel it at a really deep subconscious level. They would have to believe that following that plan is the most proven, evidence-based way that they're going to be brought closer to their goals. So the reason why we don't follow the plan is because we humanize everything, we get super emotional. If you can absolutely stack so much evidence that your plan will bring you to your goal 99 out of 100 times, given or take a bit of luck, right? Then you will want to follow that plan. Nobody ever gets a map out in a maze and then goes, well, look, it's saying go straight on, and I've walked this path 100 times, but I'm just going to go left here just for the sake of it because I feel a bit of a hunch. So if we walk that plan, if we've walked that maze and followed that map, and we have an evidence or a track record of back testing or forward testing that you have stacked so much information, you would be insane to not believe it. So once you believe it, and that's what we've got to do as traders, put in enough work to give ourselves enough insight to say, I've got something good here. And what we want to do is get to a point where it's us screwing it up, and we know at its core that the strategy works. What was it? Something like 70 or 80% of drivers reckon they were above average in their skill of driving. And we also done a poll more recently, and 80% of traders, this is a big number as well, we done a big poll, and 80% of traders said, I know I have a profitable edge. I know it. Okay, that should be 80% of traders making money then, right? So why weren't they making money? And
that's because your edge isn't your strategy. Your edge is you.
Your edge is your ability to execute the strategy, right? Like they come hand in hand. Yeah. Absolutely, as you said, they're hand in hand. So what gives us that will to want to follow that edge, that strategy, is knowing at the pit of your identity that strategy will take you to where you want to go. And until we believe that, why on earth would we want to follow it? It's just a bunch of written down stuff that a previous version of us wrote, and we did it on a, probably half wasted on a Saturday afternoon or something. Like, why would we follow this plan? But if it's logical and if we can follow it, like every single funding account I have ever achieved, bar one, and there's an interesting story to that, but I won't go into it, was achieved by following a proven profitable plan with consistent and great risk management. So I'm stacking evidence that every bit of success I've had in trading has been logical, thought out, and proven. And so as you said earlier, like, well, if you even have a plan. So that's the first step, is recognizing why a plan's important and then installing it into your subconscious at such a deep level that you're like, this plan is the thing that gets me there. Not hopes, not dreams, not waking up and playing spin the tail on the donkey or whatever it is and spinning around wildly and clicking buy or sell. It's having a reason to execute in the market and then measuring your ability on how well you achieve that. And that's like, when you get to that point, you're now in the real area of trading where you are measuring your ability to execute on a plan that you know has an edge. It's just a matter of time until you close that gap from being unprofitable to profitable. And when you close that gap, as LJ said earlier, if we measure in R values or percentages, it indefinitely scales. So what we want is something that's repeatable. And I know it's a bit of a ramble and it's totally boring, but generically, if you look at your plan and you say, I believe this can take me there, you would want to follow it. Like, we would be more inclined to follow it, right?
I think
sorry, LJ, I was just going to say, I think the challenge is, right, is you take that edge and you discover your own self-awareness, right? And you leverage your own self-awareness, right? If you can take that self-awareness and you can harness it and really fine-tune it, like you were saying, Rich, to know when you should be trading and when you shouldn't be trading. Because part of it is, can I follow the plan, right? Yes, I can follow the plan, but am I in the right mindset to be able to do so, to control my emotions? Am I in the right frame of mind? Am I overly stressed, etc., etc., etc.? LJ, I know you had a thought, so go with your thought, and then I've got a follow-up question.
Yeah, that was pretty much right on what I was going to say. The way I've always thought about things is like, if I could give one thing to anyone, one like magical ability would be self-awareness. And same with my kids or whatever. Because I think if you have self-awareness, discipline, which is putting together a plan and then following the plan, in order to keep that in line, is impulse control. And then that wraps back around to self-awareness, and it becomes this virtuous cycle type thing, right?
Yeah.
So I think if you can nail down those three, that is what you can execute on. And the more you work on each one, they help fulfilling each other, and that it gets better and stronger and more robust over time. Because I think that impulse control part is definitely one of the biggest parts. I often go with mates here, go to the casino sometimes, play a bit of poker, blackjack, sort of do, play properly, not gambling, like card counting stuff and that sort of thing. But take $500, come out at 1,200. That's the part where my mates don't get it. I'm like, I'm good. I'm up on the casino. I'm out. They're like, dude, but you just cleaned up the extra 700. Why not just put that at risk? You came here with 500. You get to 2K. And then they go and do that. They're back at 500. Now they get frustrated because they're where they started. And then so they try just, I'll get to 600. They'll be happy and leave. And then they end up at 300 or something, right? And that's because of that impulse control portion and when to step away and know that you're good.
But that's learned, right, LJ? That's an incredibly learned skill.
Somewhat for me, this is the hard part as far as giving actual things to other people, because for me it's always been very intuitive and natural. For whatever reason, I'm wired that way or something, I don't know. I think also I've had, just in terms of when we were talking about the goals and your objectives as far as like trading and the accounts and where you want to get to and desires and that sort of thing, I've always I kind of start anything I'm doing and what is the absolute highest, most peak exception level.
Mm-hmm.
And regardless of whether it's realistic, not realistic, that's kind of where I set the bar. And then so you're all the way down here. And then so it gives this duality where the hill is so massive that you're not in a rush to get there. So it's very slow and steady. But at the same time, it's so massive that you're like, I need to put in a lot of work, really be excelling, really be making progress in order to have any likelihood of getting up there. And then I think that duality there, at least for me, that's sort of how I view things. And then it kind of just gradually goes along. But yeah, I don't know. It's instinctive to me for whatever reason.
What's you guys' thoughts? Because we got a question here from.
Before we continue, maybe before we continue to something else, Mike, or the next subtopic, I got something here, a little experiment for everyone, because that was the question of what can we give to any trader, a generic exercise idea, suggestion, tip, whatever that they can apply today and everyone in helping them become a better trader, and not trading too much or too little, sticking to the plan, etc. Well, this one thing for the next 20 trading days, follow the plan. At the end of the day, follow your trade plan as as well as you can. And the end of the day, score if you did everything perfectly or not. Okay, that's one thing. And you do this for 20 days straight. And if you had days that you didn't follow your plan, mark them, tag them, identify them. And by the end of that 20 trading days, and if you want to, you can extend this even longer, add up the results of the days that you didn't follow your plan and add up the results of the days that you did. And actually, if you want to do it even better, you divide it by the number of days. So let's say you had 5 days you didn't follow the plan. You add up those numbers, you divide it by 5 to get the average day of you not following the plan. You do the same with the winning days, right? So let's say you have 15 days you did follow the plan, and you add up the results divided by 15, you get your average day when you do follow the plan. And look at those numbers. If you have a trading plan that is profitable, your winning days, right? The days that you, not winning days, the days that you follow the plan should be profitable. And likely the days that you didn't follow the plan will not be as profitable, but actually they will probably be losing days. Once you have that evidence in front of you, stick it next to your monitor the next time you enter a trade. What happens when you follow the plan? And what happens when you do not follow the plan? And which group do you want to be in?
Very, very sound advice. And essentially, in a nutshell, go away and journal. Daily journal. Right?
Or as Victor says, measure it. Measure
yeah.
it. Find out what it is and just measure it. Put numbers next to it.
Yeah.
I think that would be the most normal thing for most people. Journaling, planning. It's like going to the gym. A lot of people write down their workouts, what they did, how much they lifted. For me, that's completely foreign. And same with other stuff. I just kind of have it all as a stream. So
The question I was going to ask was, so Daniel made a point that he has a target percentage. If he hits, then he's done for the week. And that got me thinking about Gary Langley, Scruffy Trader, and his approach, where he will, those of you know, he has a very specific way of planning out what does he need to make to pay his bills, to do all the bits and pieces that he needs to do, right? And he then divides that down per week and divides it down per day, and then he doesn't trade on a Friday and this, that, and the other, and then he ends up with what's his daily profitable target, right? So he's not shooting for $500 a day or all these other things. He's just saying, right, what do I need to be able to pay my bills and to not have to worry about the money, right? And then that's essentially kind of like is almost, I guess you could call it your break-even area, right? And then anything on top of that is gravy, right? It's profit, right? How do you guys feel that sits, considering the narrative of the trading industry? Because I think it's solid, sound advice. Because you're essentially treating trading as a business, you're treating it as a job, right? You like any other job. If let's say your job is to sell coffees, like I do, you've got to sell a certain number of coffees to be able to pay your bills, right? So why wouldn't you necessarily do the same with trading? Why, or maybe we should, maybe we shouldn't. But there's almost like this infinite ceiling that we can never reach, right? That we jump in, we're constantly trying to achieve more and more and more and more. That greed comes in, right? What do you think about that method? What do you think about that kind of that approach, Rich?
It's a beautiful system, because what it's doing is it's putting a system in place that makes us dependent on following rules and stopping. Go to the gym, squat 300 kilos. You maybe okay, that's an extreme example, right? 100 kilos.
I can show you a video.
Okay,
no.
I don't want to see your videos anymore, mate. So what we'll do is, so you go to the gym and you do a heavy load. Okay, you do 3 reps. Now you'll get under that bar after a rest, and maybe you only manage 2 reps. You'll have another rest. You'll get under. You'll do 1 rep. We see the pattern here. Eventually, we're going to get under. We're going to carry out that strenuous load, and we're going to collapse. We are fatigued, and the brain is not able to sustain peak performance from the moment we wake up to the moment we go to sleep. So if we recognize, and this is why some traders take 1 or 2 trades a day and they're done, if we recognize that our best decisions are made in the earlier hours of the morning, maybe that's when we're more likely to hit our target, and later on we're likely to fatigue and give it back by making subpar decisions. So if we can systemize that, again, you've got to know yourself, you've got to know what works for you. I think it has a lot of benefits to it, definitely.
I got some ideas, but I'll let LJ, I'll be a gentleman, let LJ first.
Yeah, so I definitely agree with that, Mike. That is sort of what I do. Like I was saying before, how you have the big mountain, and then you're kind of doing this stuff here, and you've got a lot of levels in between, right? I do have sort of that base rate sort of in my head. That's kind of the hurdle rate. You knock that out, and then everything from there is kind of like free lunch, per se, right? But that's your kind of level to sit at first, and then also, because it's free lunch, I'm happy if that excess is nothing, or it's a bit or a lot. And similar to even when I draw out the trades and do my Picasso stuff, right? I kind of have like TP1, TP2, TP3, and I'm happy to take something anywhere in between, right? So I'm not sitting there trying to get the whole bag and go to the buffet and come out huge round stomach, right? I'm happy to just have my little nibble, get my snack, have my lunch, and then out. But if the buffet's on offer that day, then I'll stick around. And that's kind of how I do it.
All right. First off, I do not agree with any of you. I think it's not true. No, I'm just kidding.
Hang on a second, Victor. You're not supposed to be the funny one here. That wasn't part of the deal.
I think this topic is very diverse. You can go with many different direction with this, because there are many points of view here. What Rich said about having peak performance and recognizing when you're able to execute your plan and when you're not able anymore is crucial, obviously, because we're humans. We're not robots. Recognizing that that threshold where you're not going to be able to stick to the plan is very important. And knowing, having sort of a base, as you said, LJ, where you that will automatically stop you from being all too eager, or not be content with a little. Because you have a base and it's not that high, so you keep on hitting base hits easily with that practice. So I totally agree with that. But what I do want to say is that it depends, because and I don't know all the intricacies of Scruffy's very profitable system, and if it works for him, by all means he should stay. I mean, who am I to say anything about that? But if you have a system and you have enough data on, you will be able to know what are the margins, what are the 95% of the times, what are all the trades, what are the averages, and with standard deviations. And you could recognize when something is an outlier. And now you have to think about it. If something is an outlier, how much longer can it still continue? It can, and it will. But the more it becomes an outlier, meaning, let's say in a week, normally you only get, I don't know, I'm talking in R's here because everyone is different. If I use figures, let's say you are 3 R's is 3 R multiples is your average. Sometimes you go to 5R, and sometimes, losing days, it goes to -3. Let's say something like that. And that those are the averages. Average win day, average win week, and average losing week. And the outliers is a bit higher. So let's say the average is 3 in a week, and the outlier, the one you have measured, the most highest or the highest is, let's say, 6, as I said, or 5. And the day you have something that is, let's say, you're floating 6 R, or on a week, or maybe 7, you recognize that this is more than average. Not only that, it's an outlier. It's more than I've ever measured before, right? Looking separate from the setup and following the rules and things like that, you should always do that. But if you have a probabilistic information that tells you that this is unlikely to happen because I've done this so many weeks in a row, I know that there is something here that is likely, it's likely only true for a little while because it's way too away from the mean. And in those times, it makes sense if you have the information, right? If you have those standard deviation and you have enough data, it makes sense to get out in strength instead of letting that equity curve come back to the mean. Because there's also, with your equity curve, there is a fluctuation, a very natural fluctuation that has some elements of random to it, right? Because we do not know the sequence of the wins and the losses. We don't have control of that. So automatically, randomly, there will be fluctuations in the equity curve as well. As when you can recognize that something is an outlier in the positive sense, then you can grab it, and understanding that you're catching an opportunity here, because given enough numbers, it will go back to the mean. Even if the mean is positive, you're catching something that is excessive in the positive sense. And so there is value in that, but you got to have the numbers, in my opinion. And two, if the fluctuations are very, very small in your equity curve, in those cases, I wouldn't I wouldn't tend to want to stop myself, because the fluctuations going positive or negative are not gonna, because the fluctuations are small, you'll stay closer to that average upward sloping line of the equity curve, and then it makes sense to just continue to go on, right? But if you have big fluctuation in your equity curve during the week, during the day, and you can recognize a peak, an outlier, then I'll grab it. So it depends on the situation, depends on the stats, and how much deviation there is to the mean in the equity curve of the strategy. And the more fluctuation you have, the more you can use that, grabbing that opportunity of an outlier. And the less you have it, the more I should just keep on hitting the next trade on. It doesn't, and not having a target. That's where I'm going to.
Brilliant. I think the general gist really is start treating your trading professionally. Start looking at it with data. Start looking at it with facts, and start to understand, what your triggers are. Right. Start to understand your own personal triggers, your own personal, issues that make you more profitable, less profitable, certain moods, certain experiences, certain things that, get you up out of the right side of bed of the morning, the wrong side of bed of the morning, and so on, right? I think that's, if people are going to take something away, Victor's idea of doing 20 days, capturing the data, following your plan, capture the data, whether, if you follow the trade plan, right, were you profitable? If you didn't follow the trade plan, what was your results? And give yourself something to review. Conscious of time, we've got Dr. Deanna Cole coming in shortly. I'm not sure if she's got somebody else with her, but we've got her on in a couple of minutes. Any last thoughts, any last words from you guys before we wrap up this week's podcast?
Is there any chance I can show my screen?
I don't know. Do I have to? You can, but you're not sharing it. So if you share it, then we can show it.
Because what I after saying what I just said, I understand that perhaps it's a little bit difficult for people to follow what I'm saying without having a visual aid to indicate what I'm talking about. So I'm gonna I indicate this, and this is what I meant with having a strategy. Okay, thank you. I started talking before, where actually I should change the colors of this for it to be a little bit more better. Let's see, a little better. Let's make this red, something that well, that wasn't a great of a plan, but anyways, what we have here is the average of the equity curve, right? And if you have enough data, you can mark these and know what the average is. And if you have a strategy where the fluctuations are very small, and you have enough information, I would just not have a target and just continue hitting, because you have edge and you have a positive expectancy, and the more trades you put in, following the same plan, the more profit you will have. So it has very little value in getting out when you're up or above average. But if you have a strategy that has big fluctuations, it makes sense that when you're above average, to artificially get out. So it's not part of the plan. The plan tells you, the setup tells you to do something else, but your equity curve, you're recognizing that this is an outlier, and then you can get out more than you're actually supposed to even have based on the trade plan itself. And this, to me, is what helps you understand whether you should have a target or not.
Excellent.
Yeah.
Good stuff. I hope those of you that were in that gold trade took your profits when I had my sad face emoji, because I'm afraid it didn't go higher. The Mayor indicator has failed. But if you took profits up here, then it would have still been, what's that? It's still a nice 3R trade. So there you go. So if let me just put it up. Mayor has failed on this occasion. Those of you who know what the Mayor, if you know what the Mayor indicator, if you know what the Mayor indicator is, then you know what I'm talking about. But yeah, alas, it has failed us this time. Gents, thank you ever so much for your time and your input and your commentary, as always. Guys, we'll be right back after this with Dr. Deanna Cole. I believe she'll also have maybe a guest later on as well with her. So we'll be right back after this. Gentlemen, thank you ever so much.
Thanks a lot.
Gotcha.
Hello, hello. Am I here by myself? It looks like I am. There we go.
There you go.
Hello, how
Hi,
are
Diana.
you? Good to see you. It's been a bit since we've streamed together.
It's true. 1 second, I just need to remove the audio from some other places. I was listening to on the back end. Okay, I think everything's good. Hi, Diana. How are you? Good
I'm
to be
doing
back.
well. Yeah, good to see you. How have you been?
Yeah, good. Busy. Working, trading. Preparing for stuff.
Awesome.
Yeah. What about you? How is everything?
Same. It's summer, so, busy time, but doing well.
Yeah, it's good. Second, I just need. It's the first time I'm joining with this mode, so I'm just trying to change a few things. Okay, this one. Okay, I think I'm getting there. Just need to bring my monitor as well. Yeah, hi everyone. Hi chat. You are looking at the S&P already on NASDAQ?
Yeah, I'm looking at, I just made it a little small. Let me make it bigger here. So looking at the S&P, not really much to do here today just because, I still have runners on, but prices just really up in the clouds. So we had this monster move and we're kind of flying high. So this was kind of like an arbitrary little thing that I put on here to kind of remind myself, like, if we start really pushing higher, time to chill out, take it easy. And boy, did that deliver yesterday. So huge push up in the S&P, and now it's just kind of time to take a break. We might see a little bit of continuation, follow through. A lot of times that can happen where you get like a big day and the next day you see like a continuation follow through to the upside. So we may see more, but it's definitely not the time to be super aggressive for me. Unless there is some kind of setup that really makes sense. And we saw like overnight for me during the Asian session, price consolidated, and then we finally got kind of this move lower for the London session, found support at 63, what is that, 63.94 or so, 95, and now starting to push higher. So that's what I'm watching, but just kind of time to like sit back and let your runner work for you. Hopefully you've already booked some profit. Again, there might be some like shorter term opportunity today, but the big move kind of has happened,
Yeah. Is that the approach that you usually take? I think you were more intraday trader, right? If I recall correctly before. And this is kind of now, is it because the indices are out at all-time highs again? So are kind of trying to see or catch some of the moves and maybe try to extend your target and try to go with the trend, basically?
Yeah.
Is that the approach that you are trying to get into?
I combine day trading and swing trading. So, as far as swing trading goes, definitely, let your positions run for a bit. But absolutely for a day trade or, a smaller trade, there could be opportunity here. So it's a combination of the two.
Okay. That's good. Are you expecting to continue to go even further up, or do you think there's going to be some kind of situation where the S&P, by any chance, are going to go, or the indices in this case, that are going to move to downside?
I mean, this is super bullish chart action. It's been super bullish. But I try to keep out expectation. I don't know. None of us know where price is going to go. So I'm just looking for probabilistic setups that I can capitalize on. And it's not to say that you might not find something up here, but to me, it's a little bit of a time to just be a little bit lighter because price is so high and it could use a little break, a little time to consolidate. And we did get a nice consolidation here. So we have consolidated since the open in the Asian session. There is a consolidation here. So, it would be possible for, some kind of opportunity to set up, especially because we did get a really nice pullback. And this could just be an ultra, like shallow pullback that we're getting.
Mhm.
And so I would be willing to add, but I don't want to get super, super heavy in positions right now. And I believe, let's see here, today is the one day that we have high impact news this week. So red folder news. And there are 2 events coming up. So it could be a day where opportunities will show up eventually. So we have one high impact news event coming up in about an hour. At an hour in an hour and an hour before the New York Open. So I'll just put that on there so we have it marked out. So I'll definitely want to pay attention to that because that could be a place or a time that could create some, volatility in the market, and that could be an opportunity then to, find a setup or something. But that is what I'm looking for here. So we have 8:30 and then 9:45 is PMI, flash services PMI. So, that maybe we'll get some kind of volatility in the market that could provide another opportunity. But for right now, unless here's one trade. We did have a really nice move where price has consolidated and it is starting to look pretty strong. So that would be a possibility. But with these 2 high impact news events coming up, I am more, and the fact that this is all-time highs right here. So I don't have it marked just yet. It's kind of more of an opportunity or a time to just kind of just sit tight for a little bit and see what happens. So that's what I'm thinking. What about you? Are you trading the indices or what are you trading today?
Yeah, I'm tracking a little bit the indices as well. By the way, TechTide saying that the S&P is still going to continue to go higher. I'll just bring my monitor. Maybe it's easier. Let's see if I can work with this. Maybe it's to wait 1 second. Yeah, it's working. Okay. Yes, the S&P, the indices are definitely still quite bullish. They look like. What we have also at this point is that we are into the earnings. Like we are in Q2 earnings. Yesterday, AlphaBeta and I think Tesla announced their earnings. So that's definitely something I believe that's going to have an impact, maybe even more than the traditional news that can affect FX. I think the earnings are going to have a big impact on the indices. If we take a look at the earnings yesterday from AlphaBeta, I think they beat expectations both in profit as in revenue, whatever. I think one of the issues is that the capex. I think it was a little bit higher than expected, and I think that's why even Google didn't really move as much to the upside individually as it was expected. Because it's good to see that enthusiasm into AI continues. I think the concern at this point from the investors is try to see how can monetize on those actions, because it's good that everything is going really well into AI, but how to monetize them, that's a big issue that can come up, because they are spending a lot of money. The market is happy that there is still enthusiasm and they are literally going all into AI. However, they want to see some returns in there, or some at least money being made with that. So that's going to be an interesting one. So if next week we're going to continue to have, even on the day that we have the Fetcher Power, then I think we even have Apple and Amazon and so on announcing their earnings. So next week is going to be a really busy one. It's going to be interesting. And I think that can define what to expect next in terms of the direction, how the earnings going to be, because again, the earnings that we had 3 months ago in April, in regards to the first quarter, that was the big factor to have this big recovery that we had in here after that big drop after the Trump's announcement of the tariffs. This recovery, it was because of the earnings. The enthusiasm of the earnings, the investment into AI and everything helped the S&P in the US indices, NASDAQ inclusive as well, to go to push the upside and break to all-time highs. So yes, we are still bullish. Personally, as a counter-trend trader, I still don't see any signs that the market is close to top. So I think we are going to continue. Dow, I think, is also getting really close. If you take a look at the Dow, I think it's getting really close to break all-time highs. It's closer and closer, to be honest. Dow is the only one that hasn't really managed to break it. S&P and NASDAQ already did it a few weeks ago. So we may still go as well, may take the highs before even anything. And NASDAQ, the same thing. Yesterday, we did manage to once again break slightly new all-time highs after last week high. So, sorry, we may continue to push a little bit higher. So I'll be tracking, I'll be following. I'm more of a counter-trend trader. I'm actually looking more for shorts and longs in here. But for now, I'm not going to be interested in any shorts at this point. Yeah. Someone is asking about did you trade more S&P or NASDAQ as well? Then is it?
I've been trading more the S&P lately, but we can take a look at the NASDAQ. It's been a little bit interesting looking at, typically the NASDAQ and the are pretty aligned, and it's been interesting lately because when we looked at it yesterday, that really wasn't the case. So the S&P was hitting all-time highs. Maybe that was 2 days ago. And the NASDAQ was, kind of in the middle of the previous day price action range. And so, of course, now we have price has caught up, but is still below sort of earlier weeks levels. So we have this Monday and Wednesday. And so it's been a little bit different between the two indices, but still obviously super strong. I still have my all-time high mark there. Super strong price action, and definitely not something that I'd want to be shorting, but I would like to see price continue. So kind of made this higher high, this high was not quite higher than this high. So, paying attention to that. But I think this is pretty strong market, and it would not surprise me to see the NASDAQ press through that. But again, we have a lot of news coming up, so things could get pretty shaken up. But however you slice it, this is pretty bullish price action. But you never know. The indices could be due for some type of probably, I don't know about correction necessarily, but at least an opportunity to get in that's a little bit more probabilistic. So, kind of the same analysis on the NASDAQ. Looks super strong. I personally wouldn't want to be shorting it. If you're looking for shorter term opportunities, this does, it looks very similar to the S&P on the shorter term time frame, in the sense that, a really nice consolidation here and starting to push up. But again, these two couple high impact news events coming up. So let me see.
What's the question? So if it were you at the opening, you consider call or put? Talk about kind of buying or selling. Is that? Go ahead. Sorry.
That's for options. I don't trade
Yeah,
options.
that's for options. Yeah.
Yeah, I'm only trading futures. So, you know, let me see. If you were at the opening, you consider a call or put. So I'm not trading futures. I pay attention to the open. I pay a lot of attention to the open, but that's just an opportunity where you might see some volatility increase. A lot of volume is going to come into the market, but I'm still paying the most attention to or taking my trades off of price action, so technical factors. So just because the market opened doesn't mean that I'm necessarily going to go long or short. I want to see some price action that makes sense for me to take a high probability trade.
Yeah.
Do you
Let us
trade
know, guys.
options?
No, I don't trade options.
Okay.
Yeah, his question is more toward the options, at least the way he calls it. He mentions call and put. I try to translate it into kind of buy or sell, because that's what we are doing in here, not trading options. But let us know, guys, in the chat, if you do, first of all, what pairs do you want us to take a look at, and what is your bias as well on the indices? If you are still bullish, if you are looking for any shorts, if you by any chance think that price is topping up and starting to move lower, let us know on the chat as well. And by the way, if you do want us to take a look at any chart, as usually I always ask, try to be a bit more specific on the time frame or what levels actually you are looking at, because that helps us as well to give our feedback instead of just being general. Look at euro dollar, look at gold. Don't try to be a bit more specific. I look at gold. I'm looking at a specific level. I'm thinking about going long or short, so we can have a little bit more of an idea. And it can be more. Yeah, go ahead.
Yeah. Let's take a look at gold too, just while you mentioned it. And gold has been pretty interesting because we've been talking about gold. I think every day I've been on the channel. So gold is one of the favorites, right? And I like to trade gold as well. It's been a little bit interesting lately, a little bit messy, and then we started to get this high, this move up, and then of course yesterday had a pretty nasty move. I thought it was interesting, and this would be a high probability setup for me that failed. Right. So depending on what your time frame is, anyway. But for a swing trade, you might still be long. But for a shorter term trade, this is a really good setup for both a swing trade and short term trade. But in the short term, it definitely failed. So when price dips below the previous day low, which this wasn't a huge dip below, like here, this was a pretty big dip below. And it didn't really spring up a whole lot, but it did close above the previous day low. But it just absolutely continued the move today so far. So this would have been in the short term a failed trade. In the long term, again, depending on where your price or where your stop was, you could be okay. Gold tends to do this kind of like continuation. I think that's why it's probably one of the favorites of the stream and other places, is that when it goes in a certain direction, it tends to continue in a certain direction, of course, until it doesn't, and then it tends to get a little nasty to the other direction, and then so there is sort of this nice trending pattern that happens in gold that you can really capitalize on. Since about April, though, it's been a little bit messier. Not totally, but it has definitely been a little bit messier. So this move, though, does make sense if you think about price action as kind of like this wave where there's these peaks and valleys and peaks and valleys. That's what gold has been doing. It goes up, it goes down, it goes up, it goes down, building higher highs and higher lows. And this was a little bit of, I wouldn't say, I don't know if blow off top or parabolic move is accurate in the context of the price action we've seen, but this explosion to the upside, and then there is an equal type move. So you see an explosion to the upside, and then the pullback is going to be more severe, or the move back lower is going to be more severe. So it's just kind of an interesting one. Now, maybe this is where price will find support, and then we'll see a continuation higher. Long term, I'm definitely still bullish on gold. But the other thing that's been kind of interesting is that often we see, and I'm pretty sure when we were on stream together last time we talked about this, because it was back in March, because I remember I was
Maybe.
traveling. So I remember
Okay.
us talking, or maybe April, March or April. But anyway, how typically the indices and gold move inversely to one another. So as one moves up, the other one goes down, and vice versa. And we really haven't seen that lately. Both gold and the indices have been moving higher. So messy action, and then just recently has been moving higher along with the indices. So it's been a little bit unusual to see that. I think Mike even talked about that maybe yesterday, how things have been just a little bit atypical in how price is moving on gold relative to what we're seeing in the indices as well. But this could be a place where you could potentially find a high probability setup to go long on gold. So it's funny, today's Thursday. I think on Tuesday we were talking about where to get in long in gold, and that's a really good example of like, okay, I know it feels like this rocket ship is never going to end, but just waiting patiently, and there will be another cycle in gold. Maybe we might see that here. So here is our previous day low. It's this light pink line here. This is the previous day low. And if price can kind of, flush, wait, that's not the previous day low. Here's the previous day low here. Okay. So ignore that. Previous day low. Now price is below that. Nope, I still have it wrong. Sorry about that. That is the previous day low. Here we go. So price is now below that. If we start to see price start to come up, maybe in some kind of range here, where it's showing evidence that like this is maybe some type of a rejection wick. It hasn't happened yet, but if we see something like that, where price starts to move above this previous day low and kind of hang out in this level here, that could present a really good opportunity to get long. However, we could see more continuation to the downside.
Yeah, that's great. Yeah, I'm going to maybe share my my monitor. A few of the guys are commenting in terms of gold. We have in here Abdul mentioning that maybe gold's going to go towards 3280 and maybe before going to the upside, kind of rejecting from the highs. Raj, as we mentioned just literally before we jump into gold, if you guys want to be a bit more specific on the comments that you are making, that would be great. Okay, because we are indeed talking about gold, but if you want us to be specific, share with us what time frame, what levels are you looking for, longs, are you looking for shorts, and so on. And Fabia is asking what level is that? Which level, Fabia? Which level are you asking about? Is it something that Diana just mentioned, or maybe those ones at the top? Maybe
talking about like here.
Yeah, those ones. Yeah.
So the daily time frame. So I'm paying attention to the previous day low, and then price pushed above it. But here's another one. So what I drew here of an area to get along is just a general area. So it's not really a specific level. It's just a general area. But I would say if we see price start to move, like 34, this is a futures chart. So it might be a little different than what you're seeing on a CFD chart. But basically just generally above the previous day low. You could probably even move it a little bit lower because this is actually the previous day low. It's not enough just to pop in here and then, we could see continuation. I really want to see price kind of stay in this level. And you can see the where I have it drawn now is right around 3,400. This is the area, a general area where if price comes up and hangs out in there, it's kind of a it would be a high probability trade. But again, not enough just to poke in there. We want to see it kind of hang out in there for a little bit.
Yeah, let's just bring my chart in here. Yeah, and so was asking, and mine was asking why am I smiling? Because I actually am short since the top yesterday or 2 days ago on gold. At least yeah. So I've been yeah. I've been consistent. You guys, as Diana mentioned, like you guys love to talk about gold, and every single time for the last month or since July that you guys have been asking about gold. Gold has been trading in here, in here, and here, and here, and to whatever. Like gold has been trading somewhere around this level, and every single time I was answering about gold, it was, guys, I'm not really sure which direction gold wants to go towards. I have two levels in my mind. One of them is this one, and the other one is this one. So anything that gold does in between, I'm not really sure what you guys want. For me, this is kind of middle range stuff. And when price is in the middle range, price can break highs and all of a sudden can come break lows. And it's going to be a bit more choppy in terms of movement and maybe a bit harder in terms of looking what to look for. And then finally, one thing that I mentioned was, yes, when you do break above this level here, these tops, most likely we are going to have that continuation. In this moment, most likely we are going to have this confirmation that maybe price at least wants to go higher, at least to fill this space in here. That was something that minimum of a move that you were looking for. And then you had the price action, right? So this was Wednesday. So this was yesterday. Finally, you had the confirmation, the price action that ended up creating to catch the short in here. So there you go. Finally, it took me almost 3 weeks until price eventually got to the levels that I was looking for, and it got there. So it had a good pre-A. This is actually kind of a Quasimodo for anyone also that likes to trade Quasimodo. You can actually see this is also a move like that. So we have exactly that move. We have two other, price creates the head, pattern, reversal, and then we go with the trade. In terms of targets at this point that I'm looking for, I kind of like where Abdul mentioned around maybe 380. I would like to see gold maybe getting closer to here, and it can even go below this low, and it can even maybe go all the way back to this level. Of course, price can bounce in between. I do like that level that Diana mentioned as a potential continuation to the downside. So if gold does want to come back into this level, I think maybe you can find some more resistance around here and push price to downside. I was actually even looking for something before price actually started to make this move to the downside. I was looking for something like this, and then a continuation. But price just literally continue, so let's let it go. Yes, so in terms of maybe new shorts, maybe somewhere in here, if price does retrace there. In terms of longs, price can bounce, maybe can bounce in between this level or maybe somewhere in here as well. But eventually, I'm looking more for the target from this level in here. I'm looking more for towards this direction. And here we also had Marina. I think Marina is short since today as well. So she's short and she's looking for a target at 3340. So that takes us into somewhere around this level as well. Yeah, maybe I'll be paying attention to maybe this demand zone. So that's something that I'll be looking at somewhere in here. Maybe we can have a bounce around this level. That price also retested quite a few times in the past. But yeah, let's keep tracking it. So if you just even track the supply and demands, maybe this is the most recent supply level that you need to pay attention to, and maybe price can still retest that, can make a bit more of a pressure to downside, and then you'll see if we start breaking any opposite structures. We do need at least one break of a high before we start going looking to go long on this move. But yeah, this is a nice one. It's a lot of patience. Again, if you guys recall, if you guys have been here, you have been asking about gold. I was always not sure what gold wanted to do until it eventually got to the levels that I was interested in, and I didn't manage to get the trade there. In terms of Raj, which is asking me to ask us to 1 second. Can I bring the comment? I can bring the comment for a long swing trade over a week time frame. Yeah, that's a jackpot, right? Your question is it's a bit difficult for us. First of all, I may not even be looking for longs right now. So if I want to look for a swing position on gold, maybe I'll be waiting for price maybe to come back to 3,200s or even 3,000s. Maybe in there you can have a swing position long for gold. Before that, I'm not like I don't know exactly where you're looking for swing positions. I think price can bounce in here. I think maybe we can come back into this range, and maybe price can be in here a few more days, bouncing like that. So intraday, maybe can find those long opportunities, but as a swing position, I'm not really sure what exactly we're looking at.
I'd love to hear more about how you define your levels and how you arrived at that trade specifically. I think, Raj, I kind of just went over what I would look at for a swing trade long in gold. So maybe you, at some point you want to go back in the stream a little bit and maybe 10, 20 minutes ago and then watch back, because I think I just explained kind of how I would be looking. It's not ready yet, right? It's not ready yet. But if we start to see price move above these previous day lows, that would be a good swing setup. But it has to show that, you know, this down move is done. And right now, like, it's very strong to the downside. So not necessarily a time to hop right in. But can you take us through kind of your levels that you have outlined?
Yeah.
Somebody had asked about if you're using supply and demand, or what
Yeah,
it
nice.
is that you are using to not only outline your actual trade, but you have a level above that you marked out, and then a level below is your kind of area of interest levels. Maybe you can
Yeah.
walk us through what you're looking at.
Yeah, definitely. So yes, I do look at supply and demands and quasi-models then in addition to that as well. And in this case, so when I look at quasi-models, one of the main parts that I like to look at is the left shoulder itself. Okay, so when I actually, for example, the normal pattern of quasi-models, you know, is something like that, right? And then eventually price comes back into this left shoulder or something like that, and you have maybe a trade from here, or maybe similar to a head and shoulder eventually. But I'm not really. Yes, I do care about this breakout structure to confirm that maybe you want to move further down, maybe as a confirmation. But I do love to take trades from the left shoulder. Okay, maybe even before price even takes this level in here, maybe in between intraday, or kind of in between this low and this high, maybe there's already some confirmation that I can try to trade in alignment with this left shoulder. I think price is quite symmetrical. I think there are usually, when you do have an important high like this, there are some orders left behind even after the fake out. I think price eventually wants to go there and pick up those orders, and that's basically what you had in here. So I had in mind still this top that you have in here for a long time, and then you had the head created in here. Okay, so this is basically the head, and this is basically a left shoulder that we have in this particular case. Now, this may not be exactly the Quasimodo pattern, because, again, to confirm a Quasimodo pattern, basically almost this low needed to be broken, and then price will go there. So that will be, in theory, the definition of the pattern of the Quasimodo. But again, we did manage to break some structure at this point, and since we actually managed to break the structure, I was interested in looking for sales around this level whenever price eventually will get there. Another reason for me to look for that is because the way price actually moved to the downside in here. Oops, 1 second. The way price actually moved to the downside in this case, price left this supply behind. Okay, so what I mean by that is the way price, so price was moving to the upside in here, right? He created this move up, move down, move up, move down, eventually created the top, and then kind of created a little bit of a range in here, a supply, and then it dropped. Okay, so a move like this. Basically, I'm talking about this one. Is basically what you have in here, and price never came back. Okay, so price never came back in here to pick up the supply. When could price have picked up those orders? Maybe in here he could have done this. He didn't, right? It just paused in here and it dropped. So basically, we have the supply that is still fresh. Price never really came back to pick up those orders. And then we could even have done that afterwards. 1 second, just delete all this. Price could have also maybe done that. So he didn't do it in here. Maybe could have done in one of these times to go up in there. Never did it. So he kind of managed to hold this level in here as a resistance zone. So I've been waiting for to try to sell from this level for a long time. Basically, since the high was created on the June 25th, I've been trying and waiting for price to go there. But then price starts to evolve. As price continues now to move to downside, it starts to create new dynamics. So for example, if I was about to take a trade from this level in here, maybe one of the targets that definitely be looking for is maybe just to fill this range towards these lows. And that would be maybe the target that I'll be aiming for. Maybe with some other targets in between, but at least to try to fill this range. Now, since price never really went there, and meanwhile, we already managed to break below this low, maybe now my new target is no longer just in this level. Maybe my new target can also start to be maybe closer to this eventually to the structures or whatever structure is created after that break. So it goes into spaces like this. Do I think about it? But in particular, this level itself, I think is quite clear, at least for me. There is a clear level of supply in here. What I define as well as a level of supply at the extreme. So price is literally at the highs, right? Price is moving like this, and then it kind of creates the top. Okay, but then there is a movement in here. So price is still respecting the lows. Okay, so we are here respecting the lows. And basically in this candle, this is what I call decision point, or kind of a supply level as well. This is where actually the buyers try to go higher on more time. And you can see with this strong push up, but which we get rejected. So price doesn't really manage, or there are not enough orders or people interested in buy to actually manage to go and create a new high. Quite the opposite. Actually, price gets rejected quite aggressively, and there are kind of a strong set of sell orders that are placing in the market in here. If you go into the lower time frame, you can even be more precise exactly where maybe that level is. We're talking about 1 hour time frame in here. So that will be interesting. In alignment, we have that left shoulder, which comes back with this line, something that I usually look for. And there you go. So I've been waiting for that for a long time, and eventually price finally it went there. Okay, so it finally went there. It actually touched it, and now it's moving. It's moving to downside. And then the approach. The approach is also that matter. So what I was waiting in here, it's exactly that. Is maybe to try to find a new just confirmation pattern. Again, price starts to slow down. Okay, it has actually this spike in here. It's perfect. It's kind of the head of that move. And then again, break below this level, gave me the trigger, reacted from there, and then I entered in the lower time frame as a breakout setup in that position. So yeah, it's exactly the same pattern again, now as an entry execution pattern, and not just into the analysis. Yeah, that was basically what I've been waiting. And if you compare that with a little bit of the noise that's going around in here, it's a little bit different. There is much more noise in terms of moves ups, downs, comparing with we are trading the extremes. The extremes, the price action is so much cleaner. It's so much cleaner, but it requires a lot of patience. It requires a lot of patience to wait for price to actually go there, to just trade those levels and so on.
So when you entered there, did you enter on a limit order that you had standing, or you're waiting?
No. Okay. Yeah, I'm waiting. Yeah, I'm waiting for confirmation. So what I saw in here as well was then we have. So I saw this, right? So we have basically this range in here. Okay, this is something that this is one of my favorite confirmation patterns to look for just before the entry. Okay, it's basically price ranging a little bit. It's basically holding, even if it creates a double bottom or a double top, that's perfect. And actually, I like to see initially a little bit of a break to the downside, because this break to the downside out of this structure is going to bring people to try to short it, okay? Because the break, when you have a range like this, and all of a sudden price breaks to downside, immediately what everyone's starting to think is, yeah, I'm going to sell it. Okay, and there are two levels to selling here. Usually it's either the breakout setup, kind of retest and go, or maybe anyone that is still trying to sell then at this top. So everyone's going to be placing their stop losses somewhere around this level. Okay, so that's usually the type of range that I like to see, and then usually I wait for this. Okay, I wait for this move, which is basically collecting out stop loss from all these people, and usually I like to see this pattern when it's close to a level that I'm interested on the left side. Okay, so everything in here is happening close to the level that I was already planning many weeks ago. And then finally, now what do you see in this particular moment when price does this move to the upside, this moving here? Everyone that is still bullish, because everyone has been thinking about buying, because this is what they see in here. They are not looking left. They don't know what's going on in there. Now they see this breakout. Now they think long, right? Everyone's going to be trying to go long in here now as a breakout setup. So these guys also that are trying to go long in there, they are placing their stop loss either below here or somewhere in here, and now they're getting stopped out as well. So all of a sudden you trap 2-3 traders, either the guys that are trying to sell in here and now the guys that are trying to buy in there. All of them, they get trapped into this move. And now there you go. Now you have manipulated many people. Now you are reaching an alignment with a good level on the higher time frame that I've been waiting for. And now it's about trying to find the entry. Something that I like to see as well, as I mentioned many times, is actually to see this pattern like this. So when I actually see a high being created, I don't like to see just one low being broken, but actually I like to see this second low being broken in here. this actually confirms a lot that maybe price actually wants to go down. And talk about this one. So it's not just this move and price maybe goes up. No, it's actually this move goes up and confirms actually that price has intention to continue to move down. And then then usually I'll be looking for price to come back in here in alignment to the left shoulder with supply, whatever. And it's exactly the same thing but in a smaller scale. I entered somewhere in here when I saw that price was to have this structure as well. I saw that price was kind of starting to bounce a little bit. I put a sell stop in this case. As soon as price kind of broke it, then I got filled on this move. Sometimes that's what I look as well. If I have a square range, that price is fighting, I'm just placing a sell stop and to try to catch it. Otherwise, if I don't really manage to place a sell stop, usually then I'll try to enter in here. Because usually this level is exactly the same supply that I described before. There is price is fighting in here to try to go higher, but it doesn't, right? You can see the big rejection that happened in here. Usually price tends to retest that level. So if you don't really manage to get your entry in here, usually price tends to retest to that level again. But sometimes it doesn't. So many times I end up not taking the trade because this move is just smaller and price just goes. I end up not taking my trading there. But this time I decided to place the sell stop, so I was in straight away on the move.
That's thank you for walking us through that. That was excellent. So the two important things I think to keep in mind is you had an area that you already had marked out, you already had identified that has nothing to do with the price action that's currently happening or even kind of recently. It looks like that was a ways back. And you had that identified and then you were looking for a certain thing to happen. So there are two steps. It wasn't enough for price just to get to that level because it could have gone right through the level. So you're looking for a signature when it reacts or comes to that level, but also that level is pre-identified. I think that's really important too, because I can see in the chat some traders are asking about a long opportunity, and it's kind of like you have to have multiple factors so that you're positioned positioned ahead of a move, because price could continue much further to the downside. So just going long here, not necessarily going to be a great scenario. You want to find the areas, the levels that are important, and then have some kind of, I would call that like a confirmation or a confluence that you're looking for before you actually pull the trigger.
Yeah, and there would be a third step, which is actually before the execution. So it's about the level on the left side that I'm interested. I want to see this level fresh. For example, if price had already done this and then dropped, this one most likely it will be weaker. Like this level, this supply level, it will be weaker, which means that when price comes back in here, you may have some reaction, but then maybe price wants to find a new fresh level of supply with more orders in there. So the fact that price never really touched this level on the way down, for me, it's important. But then what I also pay attention to is in terms of the target, okay? Because when I'm looking at this swing move, for me, even maybe the target from this level is maybe this one in here that I'm looking for, potentially 3,200. So if price actually already had made this move to downside to here and now up, maybe there is a probability that price just wants to continue to go higher until it finds a bigger kind of selling pressure that may pop up in there. But because price actually is just pausing here, for me, this is not the final destination on this move. It's more towards this level. So this level in here is still fresh as well. Price never really came back in here. So that was another factor that I was still interested, or reinforced my interest in trying to sell in there. And then it's the approach. The approach and then execution is really important to me to find the entry. Otherwise it needs to be. There is a little bit of a combination of a few things that I'm looking at. Yeah,
that was excellent. Thank you so much for sharing that with us. And we have a new guest with us, so I'm gonna add him, and hopefully it'll work. There we go. Hello, welcome.
Thank you. How's it going? How are you keeping? Nice to meet you.
Nice to meet you too. Thank you for joining us today.
Of course. Excited to get it going.
Tell us a little bit about yourself.
So I am Derry. I'm from a small place in South Wales. If anyone knows the UK and Wales specifically, in between sort of Swansea and Cardiff. I've been in the industry 11 years, trading profitably for about 7-8 years. Took me 2 to 3 years, as everyone else, going in circles, trying to find the right strategy and things. So 7-8 years profitable, and in the industry 11 years. But that's my story. Obviously was an electrician before that. working the 9 to 5 as everyone else does. But that's where I come from, and that's my story.
Wow, that's actually really incredible story to go from electrician to profitable trader. That's pretty cool.
Yeah, 100%. I think it's probably a story that a lot of people strive to do, get out of that 9 to 5 and just have the freedom. I had a question on a podcast the other day. Actually, someone asked me, would you rather get paid 200,000 in a job or get paid 50 grand trading? And I said definitely the 50,000 trading, because of the freedom that comes with it, and not having to be, told by someone else what to do with your life and things like that. So it's just the freedom for me, and why I picked up trading and things like that. I'm sure that's probably the same for everyone that starts their journey,
Well, that's incredible though, because not many traders can pull that off or haven't found a way yet to do that. So tell us a little bit. And also 2 to 3 years is pretty quick to discover profitability and get there. But now you've been doing it a long time. So tell us a little bit about your style, what you trade.
Yeah, so I'll go back to the start. So I started probably trading every strategy you can think of. You do it, and here you go, sort of YouTube. Then you quickly go on a losing streak, and then you switch up strategies thinking that strategy doesn't work. But the reality of it is most strategies can work, but it's getting them to work from a psychological aspect. Right. So I sort of went in circles with it for, say, 18 months, strategy hopping essentially, and then found myself a mentor and went from there. I started off trading trend line, support and resistance and things like that. Again, they can work. People do get them to work, but for me, I just couldn't get it to work personally. I know people that do trade them profitably, but I went on then sort of on the SMC route and then into ICT and sort of took my own spin from that, and I've traded that for 6 years.
Wow. Okay, so you're an ICT OGer then. That's a long time.
I don't know if I'm an OG.
It sounds like you are.
I like to think I am, but I don't know if I am.
I would take it. It sounds good. So 6 years is a long time I'm not sure when he started, but 2022 model is what pops in my head. And you were like years before that. So
yeah, I would say more, it wasn't like what you would call in the UK term. Obviously you're in America, but the flat out ICT, but it was more sort of when I first started was the liquidity sweeps and things like that, fair value gaps and things that you notice. And then as ICT went on and developed, then it sort of became into that. And he was like, this is similar to me, and just pick things from here. And obviously like ICT as a concept, but I've got my own spin on things and different entry methods, although the concept's the same. My entries are different to maybe what he would place or other people in that concept place. It's the same as I saw you talking supply and demand there. Although the concept's the same, your entry method may be different to someone else that trades that supply and demand,
Mm-hmm.
I think that's one of the hardest things for traders to take on, right? Because the concept, you're absolutely right. There's no way that you're trading ICTs setups exactly, because there is, what depends on what time frame you're looking at, what asset you're looking at, the nuances of how you become a trader and how you kind of make it your own. But it's hard to accept that when you're trying to find profitability and get there. So what you kind of touched on a couple of things, that finding a mentor was really helpful, and then recognizing that it's not just strategy, it's more about sort of the psychology and the implementation. What really helped you kind of get over that hurdle?
For me, it was, you mentioned the mentor there. It was definitely the mentor, because like I said, I was what we would call, or anyone would call, strategy hopping, because essentially what you do, and I think it's probably it's relatable for I'd say pretty much everyone that starts their journey, is YouTube is the first point of call, is YouTube. And you go through all these strategies, and you'll have, obviously you're trading on your own when you first start, and you think, oh, I know a lot, but in the grand scheme of things, you don't know much at all. So it was, I would go on, you'd be in your bedroom trading or whatever it is, in your office trading, and you're on your own. You go supply and demand, or whatever it may be, whatever strategy, trend lines, support and resistance. And then you'd go on that losing streak, and you're sitting there like, this strategy doesn't work. But in reality, the strategy works. You're just on a losing streak. And you need, I would say personally for me and my journey, I needed my mentor to tell me, you're just on a losing streak. That's normal. Just keep with the strategy, adjust your psychology with that, and the outcome will come. But I think a lot of people overlook the psychology part of trading. You can have the best strategy in the world. You could have what you could call the golden strategy. And if you haven't got that psychology to go with it, which was the part that I had to master, to completely rewire the way I thought, because it just goes against everything with human behavior trading. You you just want to sit there, trade and trade and trade, when you have to sit on your hands. Majority of the time, trading is sitting on your hands. So for me, it was finding a mentor and saying, my mentor saying to me, no, everything you're doing is correct. You just need to sort of adjust this. The strategy works. Trust it. You're just going through a losing streak, which is normal in trading. And if anyone says they don't go through losing streaks, that's not normal. That's part of being a trader. So it was just having that one person to say to me, keep going. What you've done here is right, but what you've done here is wrong, and just adjust that and keep moving forward with it.
That's so incredible that you found a mentor that could really help you like that, because I think that's one of the things that a lot of people, and for me, I'm a psychologist. What you just said was like absolute gold there, because it's the thing that everybody misses when it relates to trading. I didn't hear you say anything about emotion. You said two things. You said, your thinking, your thoughts, and your behavior.
Yeah.
And to me, it's a triangle, right? They're all interrelated, but it's the thinking that gets traders tripped up, and that impacts their behavior.
Yeah.
And specifically with losing streaks, that can be a really big piece of it, that you start thinking, oh my gosh, I thought I was doing it right. Maybe I'm not. Maybe this isn't going to work. And not just the trade, but like the thing that you're testing out, or that your strategy. So that's incredible.
Yeah, 100%. You touched on emotions there. That is a massive part as well. And I was actually speaking to someone earlier, one of my friends, and he mentioned something. And through the journey of like entrepreneurial journey, or whether that'll be like a trading journey, the emotions things, you've got to sort of try and become numb to that, because you'll have the lowest of lows and the highest of highs. And if you can't control that and sort of plateau in the middle, then you'll have difficulties with it. But I always like to call it conditioning your mind and body to things that you've never experienced before. And that comes with time, if that makes sense.
Absolutely, it does. Absolutely. And training your body that, like, even like your heart rate accelerating when you're taking a trade, you can work on that, and you can train yourself to go, okay, no, that's just normal. That's part of it. Let me like calm my body down. Let me try to relax, maybe smile a little bit and just shake it off. Like your dog gets up and does a shake, gets rid of the nerves.
Yeah.
That's kind of the same thing that we need to do as traders as well.
100%, 100%. The nerves thing and the actual controlling the heart rate and things like that. When you first, it was the same as when I first started live trading, for example. Although I was a profitable trader, that really knocked me when I first started, because you're completely again in new surroundings, new environment, and you start then questioning yourself about, is this a different environment to you've been in before? So then you've got to condition yourself to that environment to then be able to go on and be successful with that as well, if that makes sense.
Mm-hmm. Yeah, that's great. So yeah, go ahead.
No, it's an interesting story, and it's reality. Everything that you guys have mentioned, even in terms of the strategy. I was just reading now here a comment from Dennis, mentioned that he's a new trader, 4 months in, still playing with demo accounts and entering competitions, not to compete with others, but to reach my own set target. For example, 10% account at the end of the competition. My recommendation, just one point that I would like maybe to mention here to Dennis is, Dennis, like if you're 4 months in, like you don't even need to think about competitions or whatever. You just need to focus on developing your strategy and try to review as much as possible what you are doing on a regular basis. I think we start thinking too much about the outcome in early stages. I don't think that's going to help you. In early stages, try to focus as much as possible on the process, and let kind of the outcome come as a consequence of the good things that you are doing on your own strategy. 4 months, it's really most likely the strategy that you are even developing right now is not going to be the strategy that you're going to be trading in 1 year from now. It's quite rare that someone that starts in 4 months already has a strategy that they're going to trade. At least some adaptations out of it they're going to make. So yeah, try to focus more on process. I don't know if like just word competition, and I don't really know if that's kind of the right thing to do on the phase that you are right now in your trading.
It sounds like maybe Dennis is using it though as like to elevate a paper trading account, to make it feel a little bit more real. And in that sense, I think it could be actually helpful, like you said, not to compete with others, but to progress to your own target. If you're doing a paper account, sometimes traders get frustrated feeling like it's not actually real. And it does take it up to the next level if you can say, okay, it's still not real, but at least it's like, you can compare it with others. But I think especially 4 months in, the best thing you can do is take as many trades as possible and have a connection with those trades. And by that, I mean like not just pushing the button for the sake of pushing the button, but really trying to take a trade and see how it plays out, and do that as often as you can in order to, really get that experience. But what about for you, Derry? When you said you've been now profitable for 7-8 years, something like that, after your initial learning phase where you were developing, how much has your strategy changed, or what you do changed from the beginning of that 7 to 8 year period?
As soon as Pedro started speaking, I probably been through every strategy you can think of, and you sort of get to 4 months in is very, very early for me. And that's what I say to most of my students and things, is like 4 months is nothing in reality in this industry. And Pedro's probably right there, where his strategy, without a shadow of a doubt, Dennis, you may have found something now that's working for you, but can guarantee in a year's time that will probably change, or you'll make adjustments to it if it is what you're sticking with. But into regards to what Dina said as well about the sort of with a paper trading account, it's 100% the way to go to start. But when you haven't got the emotional connection with it, then, which is the issue, to start and get that paper trading account and obviously learn and put into practice what you're actually learning is really good. But to have that emotional connection is very, very hard with it. And also something Dina mentioned there was take as many trades as you can, but also I'm massive on journaling. If you're not journaling, you can't go back on that and find out what's working, what market conditions I prefer, what pairs I prefer. It's all about getting that back-tested data and collecting the data that you can see yourself to understand where you need to head. I need to eradicate this entry method because of this, this, and this, and I can see that pattern in my journal. So I think journaling while you're doing that is like utmost important.
Mm-hmm.
Yeah,
Do you put a lot in your journal, or what? Like, do you journal a lot, like almost like a diary entry journal, or what do you include? Okay.
I include screenshot before, during, and after the trade. And then I also put how I was feeling like emotionally before, during, and after the trade. And I also put, for example, I've got a routine I stick to every day. And if I take a trade, whether that be win, loss, break even, I will even put in there my run up to that trade. So I'll say this morning I woke up 10 minutes late. If it was a loss, that could have potentially been something that damaged my psychology going into that trade in that day.
Mm-hmm. Okay. And is that multiple trades a day, or are you more like a swing trader then?
No, I line time of price from occasionally the 4 hour, but usually the 1 hour all the way down to the 1 minute. My entries are on the 1 minute, but obviously looking for liquidity points on the hour, 50-minute, 5. So I'm usually in and out within the hour, and usually only 3 to 4 trades a week maximum, and 1 trade a day is my strict rules. Whether that's a win or a loss, I step away for the day.
Wow. Okay.
Yeah.
That's hard for a lot of traders to do, to do one. So even if you take a loss, you'll be done for the day.
Yeah, I'm done. That's it. I switch my computer off, because the reality of it is, like, everyone's got different trading plans. And I think that's, again, one of the most important things from the offset. If you've got a strategy that you're finding works, is having that trading plan in regards to not only the strategy, but also the amount of trades you take. And you'll find that through journaling. You'll find, okay, I'm at my best when I only take, some people maybe different, personal preference, which is the beauty of trading. You can mold that to yourself, So, 1 trade a day for me, whether that's a win or a loss, and I'm done for the day.
Mm-hmm. Well, we have high impact news coming up in about 3 minutes. So I want to keep an eye on that, especially with the indices and gold moving quite a bit today. But, well, not the indices, but they may move, based on that news. But I do have a question for you about, obviously, like, the higher your win rate, the lower your R multiple is going to be on average, and vice versa. The lower the win rate, the higher R multiples you can go for. So if you're trading, 3-4 times a week, no more than 1 trade a day, have you like, is there a certain type of win rate you would prefer to keep because you trade so seldom, or does that not come into play for you?
Yeah, of course. So I tend to stick around the 55 to 60% mark. That's where I like to stay. If I'm not staying around that area, then I go back on my journal and look at like sort of market conditions, because I only trade 2 pairs as well, which is EU and GU. And sort of go back and I know Q4 most years market conditions for me are absolutely horrendous. So I try to drop my trading a lot through Q4 every year, because I know from back tested data and the seasonality that I've got with that tends to happen. But like my risk to reward is usually a 1 to 3. And and that's where I tend to around that mark. Sometimes can be up to 1 to 6 if we go to like standard deviation or whatever that may be after we've taken a draw on liquidity. But with the market conditions at the minute, more recently it seems to be around the 1 to 3, with draws being tighter and things like that. You know, like EU and GU now are having quite large expansions, which is making the draws bigger, which has been bigger risk to reward this week in specific.
Mm-hmm. Is that like a limit order that you set then, or are you looking at a target based on price action? How do you know where to take your profit?
So I take profits at draws on liquidity. So whether that'll be an internal draw or an external draw. And when we get to that internal or external draw, depends, say if I'm trading from the 1 minute, if we get to say a 15-minute external draw, I'll then take 80% of my position off and leave 20% run to standard deviation then. And that's pretty much trade it. Like obviously we align it from sort of like a 4 hour, 1 hour, 15-minute, but won't always hold to the 1 hour draw. We'll just get out at like the low hanging or high hanging fruit. Again, for me, I know I've seen Pedro's screen there and it's giving me anxiety from a personal holding the trade that long. But again,
no, this is for the future. I'm not in this trade. This is actually for the future. We'll see. That I want to try to sell it from there. But maybe there you can share your monitor. I think there is a button there. You are not doing it right now, but maybe it's easier for everyone to maybe try to see exactly what you're looking at. I think the news may have just come out. I'm actually interested in 15 minutes to listen to Christine Lagarde, what she's going to say. So the unemployment claims, it's between the same level, nothing much in here. 2017, that's okay. But retail, this is in Canada, it's okay. Who cares about Canada? And the interest rates just stay the same. Okay. I'm not really sure how to do this. I think it's guests, right? I think if you go to guests, I think you're going to be able to share your monitor. Let me just try to see in here where guests are.
I have clicked share. Is mine not showing now?
No, 1 second. No, we need to change the scene so
Is it the
we can
master
go.
scene?
It's here. I think it's this one maybe. Let me just.
Okay.
Yep, nothing. 1 second. We need to. No, 1 second. Okay. How do you do this?
So Martin is asking about if you learned from Gil Ben-Hur, or how did you learn from his videos? I when I started with the Fivers, I did Gil Ben-Hur's course. He has about, I think it's like 5 or 6 videos, and it's listed on the Fivers website and also on YouTube. And you can just search Gil Ben-Hur supply and demand or Gil Ben-Hur, and it's excellent. A really, really great course on using supply and demand. So you could check that out if that's something you're interested in. But I think they want to know specifically, Pedro, if that's where you learned what you do.
Yeah, so it's interesting. So Gil Ben-Hur, he was part of a forum back in the days, like 2014, 2015. It was called Read the Market, and that's actually the first time I didn't really speak with Gil, but that I knew it from back then. So that's maybe where we kind of learned from the same source back in that. So it's called Read the Market. It was an open community group. Now it's paid for. It's actually on the website of Forex Factory. Maybe you could find there. Then he had his own website as well. But yeah, we kind of learned the similar concepts or similar way to look at the market from back then. But I never really. I saw some of his comments from like 10 years ago, but I saw some similarities, of course. Who cares about Canada? Go ahead. Derry, show us what you are looking for. Maybe we can also. Have you taken your train today, or you go? Oh, usually you trade London. You have, okay.
I haven't this morning. We stayed away this morning purely because just market conditions for me when we came in this morning. Doing Frankfurt and London we were in sort of this area. We did, for me this morning. We pushed through. We swept all liquidity to the upside. We'd taken this high out here, but we hadn't quite had the displacement at the time when I jumped on this morning. So. We didn't trade this morning purely for that reason, and obviously it's heavy and high impact news today, so I tend to stay away on those days. I just don't like to be in trades when there's news, especially like today. There's like 10 red folder events, so I just stayed away this morning. But like Monday's example, Monday's trade and yesterday's trade, I was hoping to catch this yesterday on the live session. This was just before I couldn't get on the session yesterday, which is a shame, but caught a 3R there yesterday. But Monday's example, just from like a higher time frame perspective, what I tend to look for is from a 1 hour perspective here, I use EU and GU sort of for what I call SMT divergences. So obviously we had the sweep of the high to the upside on EU on the hourly. EU did exactly the same thing. Sorry. We came back down, we swept the low. So as soon as I sweep a low, whether that be internal, so an internal low here, or an external low here, I'm always looking for a potential reversal from those areas. So we swept the low. EU didn't sweep the low, which gave me confidence that potentially we're going to push the upside because we put an SMT in. Essentially, for me, I look at this and say, okay, if this hasn't swept the low, this is just going to push the upside, which is going to essentially, in simple terms, drag GU to the upside with that. But from there, then I was waiting for, this was obviously through Asia session, what I call a change in the state of delivery, and a run through of order flow or an inverse fair value gap. So we had the run through here, but before that we had a break of the last bullish candle. So we ran through that and displaced higher and continued displacing higher through the fair value gap. And as soon as I saw that, I knew then from what I trade is that the draw on liquidity for me was this high, the 1 hour high. So dropping down then to sort of a 15-minute perspective, again, you had exactly the same processes. I just drop it down to see if we've got exactly the same confirmations, which if you go from an hour to 15, you usually have the same confirmations from there. We had the change in the state of delivery, the run through with a fair value gap here, which was obviously through Asia session. SMT, again, obviously holds because it's still the low that was on the hour. And then from a 5-minute perspective, then we had what I call a turtle soup put in just here. Let me just zoom in on this. 2 seconds. Split screen. I had what I call a turtle soup in this area here. So we obviously had a sweep of a high here. So a manipulation of the high, then a manipulation of the low. And then from here, then I'm obviously looking to enter positions from the 5-minute perspective. That's telling me we want to push higher in line with obviously the 1 hour and 15-minute. So we had a run through of this fair value gap here, which obviously creates that inverse fair value gap. We came back, tested that fair value gap. And from there, then obviously when we get this rejection wick here, I'm straight into the 1 minute to obviously get my entries. Sorry, let me just get this bigger. 2 seconds. From there, and then looking for my entries. And the entry I took was this entry here. So it was just a simple. We had coming out of that 5-minute, then obviously that's that 5-minute inverse fair value gap. That was the high that got manipulated. Then the low's been manipulated. So both sides has been manipulated liquidity wise. Obviously we respected that. We rejected from there. And then we had a run through or a change in the state, as I would call it. So a break and a displacement above the last bullish candle in that price leg. We've obviously left behind this fair value gap here. It displaced too fast for me to get in on the displacement. So I got in then on the retracement of this fair value gap here, obviously targeting then the 50-minute high, which was here. So that's essentially how I trade all the way from higher time frame down to the low. We could have held this trade obviously to that hour high, which was sat there. But when I'm in a trade and obviously trading with live and things, we usually go for 2 to 3 hour. That's in our rules and things. But the 1 hour high was sat here. So that was the draw for me.
Yeah. So M76 is asking, I think you replied to it, right? So what kind of strategy are you using, SET or close to it? I think everyone can see that now. It's really close to it. You adapted your own style into the concepts that he explains, as everyone should do. So no, that's great. That's a great trade.
Yeah.
So when you're looking, because you mentioned that you only open one trade per day, so what actually kind of makes you decide between the pound dollar or the euro dollar in the moment when you're looking at them?
Do you know, for me, my screen's frozen a sec. For me, it's usually, obviously, again, with time in the market, it's usually the aesthetic pleasing pair. And what I mean by that is I prefer, if I've got, like I said there, on the 1 hour, we had a sweep of the low on GU, but not on EU. I prefer to take the pair that swept the low already, just in case EU, for example, wants to come and sweep that low first and then go, although I'm heavy on sort of SMTs and things, if GU swept that low first, I'll get in that before EU obviously does that.
Okay.
But yeah, it's more of an aesthetic thing for me. If I look at a pair and sort of look at it and go like between EU and GU, yesterday morning was a good example of that. Was yesterday morning, I believe. Yeah, yesterday morning we sort of came in and it was sort of in this area here, whereas on EU we did have a bit of price action there. So sometimes we'll get sort of the accumulation on either pair that seems to be what I call a lagging pair, where we'll have this happening. And then if we've got more expansions on the opposing pair, clean price action, then I'd take this pair here, if that makes sense. So it's just cleaner price action for me and seeing what, again, I always say I don't predict, I react. So again, I could switch bias when I'm in the markets 3 or 4 times before I enter a trade because I'm reacting to what the price action's telling me, not predicting. Like at the minute, I can predict that this low is going to get run because what that's telling me is we've had a change in the state. We've literally swept the high on from a 15-minute point of view as well. We swept the high, you can see that already. So swept the low, swept the high. So again, what I call turtle soup, changing the state of delivery to the downside. So that for me is a sell model. Now the closest liquidity point for me there is internal liquidity here, or low resistance liquidity is this. And then obviously external liquidity, I'll be looking at this low here. So for me at this moment in time, I'd like to see this get ran. But again, until lower time frame give me that confirmation that we are definitely heading to that draw, I wouldn't predict it. I just react with what price is telling me. If price then tells me on a lower time frame that we're putting in a change in the state of delivery to the upside and we respect that, then I'll switch my bias and I'll say, okay, then if the lower time frame is telling me that, then I know that potentially we're going to go and rebalance before we then take that low.
Yeah, it was a pity that move happened during the Asian session because I was looking for shorts as well.
Yeah, I know
for shorts, but it happened at 4 a.m. in the morning or 5 or 6 a.m. or whatever it may be.
Yeah,
like, come on.
And Derry, could you explain to us what is a change in state of delivery? Is it like a Quasimodo, or explain what that is?
Right. So changing the state of delivery for me, if I'm in a bullish market, I'm looking for a break and a close below the last bearish candle in that move. So for example, here I'd be looking for a displacement through this candle here, and the same then if I use this example from Monday in a bearish market when we swept the low, I'd be looking for then a displacement through the last bullish candle of that move, which is this one here.
It's similar to a market structure break or a market structure shift.
Very similar. Right. Just different terminology, isn't it? That is the only thing. It's just different terminology, but it's very, very similar. Yeah, like if I drop this to a lower time frame, like a 5 minute, you'll see that this is clear structure in this area, inside this candle.
There's an interesting question here from Kentrio. Like, did you, because that trade on Monday or Tuesday, whatever, that you open, it ran much further away than you close it, right? Like maybe back in the days, maybe that would affect you. Right now, does it still affect you that you close the trade maybe too early or not, or you just follow your plan?
No, because for me, if I'm above every high and low, no matter what time frame you're at, that is essentially what I call, again, different opinions and different strategies and things, what I call and stick to my trading plan as liquidity. So you can essentially get, with what I trade, a reversal from any of those areas. So if I was to hold that to the 1 hour draw, and more recently with sort of the market conditions, I'll show you, like this week's been pretty good with going straight to the draw. But more recently, with market conditions, what seems to happen is you'll get that expansion, but then you'll get this happen and it'll trickle up to that draw. Whereas this week we have been going straight to the draw. So I know, going off market conditions and the way I feel and the way I like to trade, is that if I'm going to hold that to that high, I could potentially be in that trade for 3 to 4 hours, which obviously I know as a trader will damage my psychology because I don't like to trade that long. It sort of triggers something in my mind that says, get out of the trade, and it just messes my psychology. I've got my trading plan, I stick to that. So I tend to go to, if I'm trading from, like this was a 5 minute, as I call turtle soup. So obviously I took it to the 5 minute and 15-minute draw. But of course, a lot of my students and things and other people that trade this strategy leave a 20% runner to the external draw, because the reality of it is you're trading from a 1 hour perspective, just your entries are on the 1 minute. So the model is essentially from the 1 hour, but it's just a personal thing for me to stick to my trading plan. And obviously I know what triggers me psychologically, and staying in trades for 3, 4, 5, 6 hours for me is a no-go. And that's a personal thing. Some people love it. Yeah. Some people absolutely love it. But for me, So I hope that answers your question, Martin. Was it Martin that asked that? Yeah. No.
And Derry, I'm just realizing I was looking at your picture before, but just kind of generally looking at it. And now I'm noticing, I think that's Donald Duck's grandfather in the back. It just like my brain just turned on what I thought it was an abstract art, but now I recognize it. So here's another question for you.
Yeah.
I like it though. That's
I appreciate it.
not what I expected. It just kind of clicked into focus suddenly for me.
Some days when I'm having a bad day, I can just turn around, and say, that'll cheer me up.
That's right. That's right. I forget what his name is though.
Yeah, I don't know either, to be honest.
Okay,
I just like the top of it says relax. So that was for me. Yeah.
That's a good one. Okay.
Hippopotamus said it is the Uncle Screws, the money man. Maybe that's his name.
There we go.
By the way, Victor, welcome to the chat. Okay, welcome back to the conversation. I know you went quite smoothly. No, you didn't say anything. You're just listening.
Yes, I moved from shadow to shadow. How is everyone? Deary, welcome to the stream. I didn't want to break the flow of the conversation, so I didn't say anything before. But I'm happy to be with you. Please carry on, and I will try to contribute as much as I can whenever I see an opportunity to do so.
Okay.
Yeah. Danny, was this the question that you wanted to ask?
Oh yeah, there's a question.
Was this the one, or was something else?
Oh, yes.
Okay.
Do you think SMT divergence can be a strategy on its own? Because I think it happens often and it's high probability. That's from Martin is asking that.
Again, this is, and do you know, I'm a very honest person. And I will tell people honestly, again, if you get success with something that is against everything that you've been taught on YouTube, do it. If you've got that back-tested data to say, okay, SMT divergence on its own works for me and I can get it to work, then stick with it.
Right.
But and this is the thing about trading is what people don't understand. We were talking about this earlier, Dina, is although you've got a concept, you can mold that concept to get it to work for you. Mm-hmm. And people don't actually understand that. They think, okay, a strategy is a strategy and it's got to be stuck by black and white, but it's not like that. My students, just going off an example, have got so many different entry methods, but the concept's all the same. And it's just about molding that and getting what can work for you. So if it works for you and you've got the data and you can consistently profit with that, then of course, yeah, SMTs are very, very strong. And I use it as an extra confluence, but I do know people that do use it as a straight strategy.
Mm-hmm. I think that's one of the things that's really important in trading is there is no one way to do it. A lot of times we hear traders talking about, oh, this is how you X, Y, and Z. Pedro and I both shared perspectives on gold today that are completely opposite, right? Yeah. But both can work depending on your time frame, depending on your exit strategy. There is no right or wrong way to do it, and that is very daunting for a lot of traders because it means that there is a piece of you in anything that you do. I guess it's probably like dancers talk about, bringing yourself into the dance. I'm not a dancer, so I don't really understand that perspective so much, but I understand what it means from a trading perspective. But I do remember, starting out, that was really hard for me. I just wanted a strategy that was profitable and I'll, leave myself at the door. And that's just not how it works.
No, yeah. No, I totally agree. I don't know if Pedro and Victor have got anything to add there, and it's a hard concept because, and again, trading for me personally goes against everything you learn in life. You go and be a tradie, for example, and tradie in the UK, in the US, it may be different. And for people listening, for like example, I was an electrician. There's one way to do it. If you wire that wrong, then the house is going to blow up,
Right.
Whereas with trading, there's so many ways that you can mold around that. And I think it's a hard concept to grasp because everything in life teaches you there's one way to do this, there's one way to do that. And most things, professions in the industry, for example, a brain surgeon, there's one way to perform a certain type of operation, whereas in trading, there's not one shoe fits all.
Mm-hmm. Yeah, absolutely. Absolutely. I think there's some questions about the NASDAQ. So maybe we want to take a look at that. We're still before the US Open. So we have about 45 minutes or so, just under 45 minutes or so to go before the US Open, and at 9:45, there's high impact news, and 10 o'clock, it's medium impact news. So this is our high news day today. So maybe you want to take a look. And, I know you said that you stick to GU and EU, but your analysis would be the same if you were trading the indices. Is there any particular reason? Is your strategy more suited to Forex pairs? You just prefer Forex?
Okay. So I do trade futures as well.
Oh, okay.
I do trade futures as well, yeah. So New York session, I tend to divert to NQ and ES. And again, the same thing. I use NQ and ES the same way as I use GU and EU. Exactly the same.
Same thing. Okay.
Yeah.
That makes sense.
Yeah.
So I think, Pedro, I think they're asking about your take on NQ specifically. I don't know if you want to take a look at that.
Yeah, I think I was looking for. I think you mentioned that it was about to go short. 1 second, just do this. The Lagarde backhand. Where do I bring this one? Is this mine? Yeah, this is mine. It's mine here. Yeah, because I'm focused now on Europe because of Christine Lagarde. What is NQ? Yeah, NQ actually reacted. So S&P it was maybe a bit more bullish, and NQ I actually didn't take the trade, but I was more interested potentially in a shorting here because we just fake out slightly the top, and I think maybe there could be some reaction. So depending on maybe how price may react from here, maybe for the opening we may have another reaction like that. So I wouldn't ignore just for now any potential sells on NQ, just because taking this top can be just a little bit of a trigger of collecting liquidity to potentially go down, and we actually managed to take some lows in here before. So I'm actually curious, but I'll be playing with cautious. Today, actually, I'm most focused on the euro dollar and on the XY, just because of what's going on the ECB. But maybe for the US opening, I'll be paying attention to see what will happen. For example, if price doesn't really react from here or something like that, and it just goes up, maybe you can still have that move. If price may come here and start jumping, we may have a continuation to the upside in today's session. So it depends on where the low is going to react from around the US Open, to see if that's actually more to break the highs or to actually then even go further down. I'm going to be looking for that. I don't have a specific level at this point on for the lows. I don't like this level personally. Yeah, I need to see a little bit more. I don't know about you guys, what you're looking on NASDAQ or in this, but maybe more important than that, maybe is try to see a little bit on the euro dollar, since you are talking about like literally Christine Lagarde is just speaking right now press conference about the interest rate. What is your take, guys, now on the euro dollar? Maybe Victor as well, you can share, or Derry for the moment.
Sure. Since Derry, I think the people in the audience are, you're new to them, to our audience. I think it makes sense for you to, they're eager. I'm pretty sure they're eager to see, what are you seeing in the market on EU, for example, or GU, one of those two that you trade every day. How you break down, like how do you approach the market? I know you have been talking for some time already about, the strategies and how you've molded to your, what makes sense to you and works better for you. But let's say today you come in fresh. What are you looking for?
So for me, when I come in fresh in the morning, I tend to trade Frankfurt and London Open. That's predominantly what I trade. Outside that, anything past like say 9:30 UK time, I stop trading there as well. That's part of my trading plan. I say I find the volume dies then leading up to New York session, and then the volume comes back. So I stay out. But coming into the session, as soon as I get up, first thing I do with a PC is where's my draw. So instantly I'll come in, like I'll just use Monday as an example because it was it's the cleanest trade that I've taken this week. So I'd mark out my high and I'd mark out the low. Obviously the low already got ran when I come in, so I knew, okay, obviously I was in this range, that low has been ran. And with EU then the same, the low has obviously held, but just put in the SMT. I did just cover this, but I'll go over what I do coming into the market. So again, I would mark out this high, mark out this low, coming in to the session, and then I know then, okay, where are we more likely to head? Well, if we mark out this low here, GU has swept the low, EU hasn't. So when we sweep a low, more than likely we're going to go now sweep the high from the strategy that I trade. So we've put in the SMT, we swept the low. EU has held that low. So now for me, it's about, okay, when that low has been swept, I've already come in, I've seen that play. I came in and obviously we were running at the time in Frankfurt session, we were running through this fair value gap here. So we'd had the change in the state through Asia session, running through that fair value gap as we come in. Now, one thing to be wary of, let me just move this across so it's full screen. One thing to be wary of when I trade is obviously we can get a rebalance. So what I mean by a rebalance is 50% of that current price leg. So if we are, when I came in, this was a 7 a.m. candle. If we are on that price leg there, currently I would have gone from this low to this high to see where the rebalance would have been. Is it going to rebalance first and then push higher back into this fair value gap and take the high or not? So for me, it's about understanding which the lower time frames tell me. Are we going to rebalance and then take this high, or are we going straight to the high? So from there, then I'll just go straight to the 5 minute just to give a bit of an example of why I took this. I did just explain this one now, but again, just from the full run through. So for me, are we going to get a rebalance or are we not? So as soon as I get something I call a turtle soup, which is one of the strongest confluences for me, I know then that is telling me literally, I don't, like I was saying, I don't predict or react. So we swept the high, which manipulates the high. We swept the low, obviously manipulation of the low. But then this is the key indicator for me is the shift in order flow is, and what I mean by shift in order flow is a run through of a fair value gap. So essentially, what I see when we see this is sellers have pushed the market down to manipulate, and now the buyers are coming into the market now to push through and disrespect this fair value gap or this inefficiency of the market. So obviously this inefficiency gets disrespected to the upside. So that for me then is the first indicator. Okay, the 1 hour has told me we've swept the low. It's heading towards that draw. We've put the 1 hour model in at the low. We've had the disrespect on the 1 hour as well of the fair value gap. So for me now, the 5 minute is telling me, okay, we've disrespected this fair value gap. Buyers are stepping into the market, so I'll just wait from there. Do we come back into that fair value gap and get a reaction? Yes, we do. Okay, that's my first indicator. And then I'll literally put a check on 5 minute and just drop down straight into the 1 minute. From there then, sorry, this is lost. From there, and then obviously 1 hour's line, 5 minute, and then we're going into the 1 minute from there then, because I've checked off my time frames and my analysis from those pairs are complete. What I wait for then is exactly the same thing. So what a lot of people misunderstand, and I think it's the same in most strategies, is whatever you're looking for on the higher time frame, the market's a fractal. So whatever you're looking for on the higher time frame, I'll be looking for exactly the same on the lower time frame. And a lot of people sort of misconstrue that I'm looking for something different on the 1 hour to the 1 minute. I'm not. It's exactly the same process I go through. So the 5 minutes give me what it wanted. This was that 5 minute fair value gap that I looked at. So it ran through this here. This was that 5 minute fair value gap. It came back into that, and we've rejected from there essentially. So first indicator 5 minutes ran through, and then we come back, we reject from there. So that's holding now. That's respecting that fair value gap to the upside. So what I wait for then is a clean displacement of a change in the state of delivery, or an inverse fair value gap. Again, a disrespect of, in this instance, a bearish fair value gap, which opens up a bullish fair value gap. So changing the state of delivery for me is almost like a market structure shift. It's the close, at the break close above the last bullish candle in a bearish run, and then I just wait. I do get occasionally on the close of the bullish candle above that, changing the state of delivery, but in this instance I missed that. I waited it then for obviously the rebalance to come. That rebalance came and I got in then on the open of that fair value gap. Obviously, stops below this low here. That was the most recent low. That should be the protected low. And then obviously targeting the 15-minute high that was sat here. So for me, when I enter a trade, again, a lot of people, and it's just time in the market, is when I see this happen, so I'll draw this on. When I see this happen, this high gets swept and then this low gets taken while I'm in the trade. This gives me more confidence that we're going to push to the upside. A lot of people would sort of, especially as just time in the market, would sort of close the position here out of here. But when I see this, we swept the high, so manipulation high, manipulation low. This, when this happens, especially put in an SMT on EU at the time as well. So where we'd taken this low here, EU didn't take that low. It had this. I would go back on it, but it's so far back. It didn't take the low. So again, when this happens for me, it just gives me more confidence to say, okay, this trade's going to the upside, and then we get that change in the state of delivery again to the upside after we swept that low. So when it comes back in, I've just got full confidence. So we swept the high, swept the low. This is going to, or with confidence, conviction, more than likely going to hit TP. I obviously can't guarantee that, but I'm very confident in the trade there. Whereas a lot of people, when it comes back down and sweeps the low after sweeping the high, would be very cautious and close the trade out. Whereas when I see this happen, it's my eyes light up.
I understand. And do you have some stats in comparison to when it doesn't do that? How much? What is the difference that it will be to your next target, whatever that may be? Do you have some stats? You say like when it doesn't sweep the high and the low, it will take my target. My win rate will be on that. Those setups will be 60%. But if it does do the both, it's gonna jump to 70%. For example.
Yes. Yeah. So we were just talking about win rate earlier. So I like to keep my win rate 55 to 60%. But I find when this, again, you can do everything from hindsight. You can do anything from hindsight, right? You can look at it and go, I did this, it did that. But when this plays inside the trade, this it takes that up by like that extra 10% for me to sit there and go, this is pretty much, I know you can't guarantee everything, but going to play because I've seen it happen so many times, and it's just the repetition of that happening. So I would say this around the 70% mark. I've got my journals and all that, and I can get all these stats written down for people for the next session. That's no problem. But yeah, this for me just gives me full confidence. When I see this happen, the low gets swept, the SMT put in whilst I'm in the trade, my eyes light up and I sit here, just watch it play.
Perfect. And that is on Monday. Of course, that was a trade you were in that played out very nicely. What about today? I think you guys talked about it a little bit already. But where are we according to your models, your strategy? Where are we currently? I know you only take the signals, or your signals are bound to be in the beginning of London session. But what did they do during this morning, and what are you waiting for the next session?
Yeah, so today, in specific, when I came in, we did have a sort of what I call a turtle soup play on from a 1 hour perspective. You see, we swept the low, swept the high. When I came in, obviously this morning, we didn't quite displace through this before I got on. For me, I like to see the model from a higher time frame perspective play before the session I come in. So what I mean by that is if we had a displacement through here at say 6 a.m., I would then be waiting for either a retracement back up to balance to equilibrium and then take short to take the next liquidity low out, or I would obviously wait like I did there for a 5-minute soup to come in, 1 minute soup, and then take that to the draw if it's telling me it wants to push, like reacting, not predicting. But this morning in London, I specifically didn't take this because there was high impact news throughout Frankfurt and London, or 8:15 the high impact news was, and for me to actually say from a higher time frame perspective that I wanted to go short, I would have had to seen the hour candle displace and close below this change in the state of delivery. So obviously by the time this hour candle closed, it would have been 8 a.m. and then the news comes within 15 minutes. So I just stay completely away from there then.
You mentioned something, displacement. That's a term you use often. Could you explain to the audience what you mean by that displacement? Of course, a lot of people knows what displacement means, but in your particular use of that term, what does it? When do you have displacement, and when do you not have displacement? Because you mentioned you note the you were putting, I think it is the candle. Let me put, if I have the same time frame as you, it was roughly around 7, or maybe in your time that would be 6 a.m. where you said that we didn't get displacement through that area. But what are the criteria for, how do you define displacement?
Yeah, so for me, a displacement is a break and a close below the change in the state. So for example, this is the 5-minute time frame. And obviously everything I do is predominantly based on the 1 hour. So I've got to see everything on the 1 hour before I can move down the time frame. If I haven't got the 1 hour, I don't do anything. So displacement, this is like obviously 7:05, the 7 to 7:05 candle. So this was that change in the state on the 1 hour, this horizontal ray here. This candle here, obviously on the 5-minute, is telling me we are displacing through it because we've closed below. But a displacement for me is a clean break and close below. So yes, we've got that on the 5-minute, but again, everything I do comes from a 1 hour. So for me then to even validate that we've got a displacement, I would have to wait for this hour candle to close below this change in the state of delivery. And that wouldn't have happened till 8 a.m. Obviously news coming at 8:15 was okay, we'll stay away. So displacement for me is just a clean break of a change in the state of delivery and a close below that. So it can be any sort of close, if the candle closed in this area, I class that as displacement. If it closed in this area, that's still displacement, but it's got to close body below, not wick below as well. If we wick below, then obviously that could be a manipulation, and I'd stay away and still wait for the model to cleanly displace candle close and trade below that change in the state of delivery.
Perfect. I understand. So a close, you define it by a close on the H1 beyond that level that you have that dotted line. What is that dotted line? What is it based on?
This is
Just
what I
give
call it.
me a second. I have to go
go
actually
on.
at the call. I didn't know. So since there are quite a few of us in here, I'll let you carry on. It was really nice to meet you, Derry.
Yeah, you too,
Diane,
Pedro,
it was a pleasure again to be on a live stream with you, Victor. Today we don't close it together, but I bet you're going to find the right trade on euro dollar once again, just like last week. Guys, thank you very much. I'll see you everyone next week. And for anyone that speaks Portuguese, we're still going to have our Portuguese live stream at 5 p.m. later on. So yeah, thank you guys. I'll see you.
Ciao,
Pedro.
ciao, Pedro. Bye bye.
Hi, Pedro.
All right. Yeah. Yes. So you're explaining what the dotted line was. That
Yes.
which you use to define displacement on the H1 close or not.
Yeah, so essentially it's what I call a change in the state of delivery. So what I look at is the price leg that the most recent price leg. It's essentially like a market structure shift, but I'll look for the last bearish candle. So the last attempt for the buyers to push down before we had that push up. So essentially the last bearish candle in a move to the downside. So again, if I had, let me just get a clean one, which is clear for people to understand. This one here is probably the clearest one, just as an example. In this move here, this is the last bullish candle in that price leg down. So I'm looking for a disrespect and a clean displacement above that last candle. And the same in a bearish market, I'm looking for a break and a close below that last candle there, which is
And
this.
you're using the bodies for that, not the low or the high of that candle.
Yeah, exactly. Yeah, I don't use the wicks. Obviously, for me, a wick is just can be a manipulation. But again, that's just to my strategy. You know, I know a lot of people do use them, but I see them as a manipulation.
I see. Awesome. So you didn't get on the hourly the displacement that you were looking for, and therefore you couldn't have a signal that day, meaning today.
Yes, exactly. Yeah, exactly that.
Okay. So is displacement then the basis of all your setups?
So it's either a sweep of a high or a low, and then a displacement. So, for example, now either we would get, in my opinion, now from what I trade, is we've had that change in the state of delivery to the downside. We've put that market maker sell model in after we swept this high here. So we've swept the high. We've had the displacement to the downside. Now, for me, next targets would be this low here. But again, that's just from an hourly perspective. I'd wait then for 5 minute, 1 minute to tell me that either we go into rebalance to equilibrium. So equilibrium, this price leg means 50%.
Before you continue, you mentioned two terms here: rebalance and equilibrium. Could you explain what is each one of them? Rebalance, what is that to you?
Yeah. So to me, a rebalance is 50% of the price leg. So the most current price leg you're at, we take 50% of that, and then a rebalance to obviously balance inefficiencies in the market, which inefficiencies are to what I trade is an FEG within the market. So as you can see here, usually, or the majority of the time, 50% of the price leg will be where a fair value gap is sat, and that's what we look for. So a rebalance is just a rebalance to 50% of the most current price leg to obviously fill in inefficiencies in the market.
And when is it the rebalance complete, or when is it done? Do you have to have a close? Do you have to does it have to reach somewhere besides the 50% retracement?
It can be in or around. So essentially, again, it's all about I don't predict, I react. So if, for example, we came to this area just below that 50%, and then we dropped down to the 15-minute, 5-minute, and we had a displacement on the 15-minute, and then we had a retracement. So if we come into almost 50% of that price leg, so we rebalance in and around that area, then we get a market structure shift or a change in the state of delivery, as we call it, then that's enough indicator for me to say, okay, 15 minutes told me from that area, we are now putting in a sell model. What is the 5 minute saying from there? What is the 1 minute? So for me, it can be in and around, it can be above or below, but in and around that area. And the most probabilistic areas when you're trading it is from, obviously, if there's a fair value gap in and around that area. So it can go just above and then we can get that change in the state of delivery from a 15-minute perspective, and then that will give me enough confirmation to say, okay, I can start dropping the time frames now because we've had the rebalance. The 15-minute is giving me the change in the state of delivery to the downside. Now, what's the 5-minute doing? The 1 minute, okay, it's all in direction or giving me the bias to the downside to take this low.
Yes. You mentioned besides rebalancing, which we just now explained, which is reaching that 50% retracement or almost, and then have that market structure shift. You also mentioned equilibrium. What do you mean by equilibrium? And if you could, explain that to our, the viewer who just came in, who's very new to the Forex market, who knows nothing about anyone or anything. What is equilibrium?
Equilibrium is literally the same. I don't know.
What is the difference?
So there is no difference. Equilibrium is just 50% of the price range. It's just the equilibrium of that price range, which is the 50% essentially.
Okay.
Yeah.
All right. I understand. And that brings me to another question, Deary. I really enjoy watching you break down your strategy.
Yeah.
How when you say almost, right? You just now you mentioned if it almost gets to rebalance the level, the 50%, which is a hard line, which is 50%.
Yeah.
If it's almost, how do you distinguish when is it almost and when is it not almost? In other words, how precise or accurate or objective does price action need to be for you to be confident that this is a valid trade or not? Because before you answer, obviously we know that some people, I'm not going to say anyone,
Yeah.
need to have like objective like.
I was just thinking the same thing, Victor. Go ahead.
This is a good question. I actually like this question.
I for example, I have an insatiable desire constantly to objectify everything of the plan. So almost to me is something that I get stuck there. It's if I were a computer, I would go blue screen at that moment. I need clarity. I need object. But that's just me, and not everyone is like that. Others, they thrive when it's not precise. So where do you stand as a trader in that spectrum? Because there's no wrong or right. It's just where everyone is different.
Yeah, so I'm exactly the same. Everything for me has got to be perfect. Hence why, like, you're probably looking at that going, but you've just said 50% in and around that area. But for me, if I don't get, so for example, if we get back to 50% of the price range and we don't get a change in the state, I stay completely away because that is, the trade's not ready. So in this instance here, if we came back to 50% of this price range here, or in and around, like you said, if I don't get any lower time frame tell me that we want to push to the downside, I stay completely away. But what tells me that it's rebalanced to where the market wants to go is the 15-minute giving me that change in the state of delivery to the downside and the displacement through that on the 50-minute time frame. If I don't get that, then I stay away. So yes, it's not perfection in regards to the 50%, but of course that's sort of the way that the market moves on occasions. But I'll always wait for the 50-minute to displace to the downside. And then obviously when it displaces to the downside, I'll then drop. If we get a retracement then back to a fair value gap, I'll wait then for the 5-minute to tell me from there. Then it wants to push lower. Then I'll drop into that. So it's essentially, and I always used to say, I don't know if you used to see those dolls that they've got like one big one on the outside, then you open it up and then there's another one inside, and then you open it up and there's a smaller and smaller and smaller one inside. That's essentially what I do, is go from 1 hour is the big one, then 50-minute is the medium one, 5-minute is the smaller one, and then the 1 minute is the extra small one. So everything I do is literally, it's just time frame inside time frame condensed. So every process I go through is literally from the hour, 15.5, 1 minute, all exactly the same process. But what you're saying is right, because it's hard to comprehend how, if it doesn't get back to exactly the 50%, how I actually trade that. But it's the confluences that I get from a 15-minute and a 5-minute that tell me this is in and around the 50%. I want to go from this area, essentially. Like I keep saying, I don't predict, I react. And if I was to say it's going to go from the 50%, I'd be predicting that, instead of reacting with what the market and the price action's telling me.
Perfect. I like that. I like that analogy you made of that. Those Russian
I love analogies. I love
that's a really good. It's hard to understand. I mean, we all understand that conceptually that time is fractal, right?
Yeah.
That's hard, but sometimes it's hard to kind of practically put that into perspective. And I think that was a perfect visual for us. And so, do you I heard you mention the 1, the 5, the 15, and the hourly.
Yeah.
You look at the 4-hour, the daily at all, or is it kind of,
I do look at the 4-hour on occasions if price action on the 1 hour, for example, is not the cleanest. Obviously, with the higher up the time frames you go, you tend to be able to see like highs and lows cleaner. So if we're going through bad market conditions or we just expand into the upside or expand into the downside, then I will go to the 4-hour just to get a clear view on what is actually going on. But usually straight from the 1 hour perspective, I will look at the 4-hour just to see where it's at, but I won't do any of my marking up on the 4-hour unless, like I said, we'd be in bad market conditions, as I call, just expand into the upside, like from an hourly perspective, if we were doing this. And there's obviously a reason that's happening. In this instance here, I'd look to the 4-hour, then I go, okay, it's coming to take highs further up that you can't see on the hour, obviously, because that's way back. But just to get a clearer view, if I can't see what's going on inside the 1 hour. Does that make sense?
Mm-hmm.
It does. Deary, I love it. What you're showing us right now. What do you need to see, or what does your strategy or your approach tell us about, what expectation do you have for the rest of the session and perhaps tomorrow? I know you're not predicting, and no one is predicting.
Yeah.
We're reacting, but what does, with the information you already have, the data we already have up to this moment, does it tell something about what is more likely to happen, even though that's not a prediction?
Yeah, 100%. So for me at the minute, with what I can see currently, I would like to see, and from what I trade, we're either going to get a rebalance of this price leg, like I was explaining earlier, and then a takeout of, obviously not a takeout of this low here from a liquidity point, or we're going to get something happen within sort of like the 5 minute, 1 minute, 15 minute. That's just going to take us to this low first, and then potentially continue to the upside. So with me, I always, no matter what low gets taken, whether that'll be like a low resistance internal low like this or an external low down here, I always expect a reversal from those areas after we swept. Again, don't actually expect it to happen, but prepare for it to happen and then look for trades from there. So at the minute, I'm either waiting for on EU or GU. EU's actually rebalances now, but there's nothing there too. But GU again, from sort of a looking at it from the eye, is more aesthetically either a rebalance and then a takeout. That's what I'd like to see happen, or I'd like to see it continue where it is now, take out this low, and potentially EU hold where it is. If that happens, then obviously GU would have taken the low, EU would have potentially stayed at this area, put in an SMT, and then I'd be looking to go long, then to take highs, because we've got the sweep of the low on GU, it has on EU, and then I'd be waiting for obviously the model to be put in on the 1 hour perspective, then to take longs to take that high, if that happens. But that's what I'm looking at the minute.
I like it. Do you consider any other time frames then? Because you have a very strict criteria to your signals. It has to happen in the morning. It has to happen before a certain time. London open, and if it doesn't happen, then you're not interested. You go surfing or do other.
Not in the UK. It's too cold in the UK to go surfing.
Do you have you try applying the same process just to another time frame, maybe something bigger, perhaps looking for those displacement, those market structure shift on the daily combined with a weekly, perhaps? Or have you thought about or have you tried them and or do you use them in your strategy? Does that add to your confluence, or perhaps you can expand on the TPs or things like that because you have more information indicating something is more likely to happen than otherwise?
Yeah, of course. And this was, we actually touched on this just before. So going back when I'd say just before I sort of went to the in and out of trades a lot quicker, where we go into shorter draws on liquidity, I found myself, when I'm in trades personally, like I'm very, very strong mindset wise, but one thing that I'm massive on, and we've talked, is psychology. And I found when I was holding trades for longer periods of time, I had that urge to either close too early or hold too long. And I wouldn't sleep then. I would wake up in the night looking at my phone because you'd be in trades for days and days. So then I quickly realized, obviously from a psychological aspect, I need to eradicate that so it doesn't affect my outside life and things, because trading can quickly, especially in the beginning, affect your outside life with the stresses and the anxiety of being in trades. And especially when you're not conditioned to the money and seeing the monetary value move, it can become very stressful. So I eradicated that, and it's something that I stuck to. It damaged my psychology sort of in trading. Now I could probably hold those trades and forget about it. But because I've done that for so long now, I just stick to my roots. That's what I know, and that's what I like. But of course, when you talk weekly, daily, they are obviously stronger conferences. The higher time frames you go up, especially in the strategy I trade, and probably 80-90% of the strategies out there, if you get a displacement through a low here, for example, on the daily or the weekly, of course, that's going to be a stronger displacement. Same as this, I can see instantly here we displace, when you look at it from a weekly perspective, weekly is we displace through this change in the state of the delivery here, and then continue then to the next draw. If you're in that trade there, that's a pretty big trade to catch. But for me, it's just the emotional side, and I just stuck to that since I became profitable. But that's the reason for it. It's just, again, it goes back to the personal preference thing where, yes, I know the trade could push further, but also, am I willing to take that risk? And this is what I know, this is what I've practiced, and this is what my data suits.
I like that. You knew yourself. You had a reflection upon how you are and how the market makes you feel, and how little you slept when these trades were open. And you knew that if you were to trade this way or decided not to change anything, that the chances that you're going to be walking like the figure behind your back, Scrooge McDuck, the chances of that happening would be very small because it doesn't fit with how you are, right? So I like the frame, by the way.
I have to jump in just real quick. So first of all, there was a famous trader that said something like you sell down to your sleeping point. So that I've heard that before. But I thought before you said your picture said relax, and I'm noticing now it says Rolex.
No, so it says relax with the Rolex sign above it.
Okay.
Yeah. So in the yellow, it's Rolex, and in the background, the very background, it says Rolex in like white writing.
I love that. I love that. That's hilarious. Okay. Playing tricks on my eyes again.
It's full of surprises, Diana. Deary, another question. Actually, I love having a guest on here because we get the audience get through our questions, and actually, you guys at home or wherever you may be, maybe on a transatlantic flight, if you're watching us, type in the chat, and we can ask your question directly to Deary. This is your chance, Deary. How do you stick to your plan? That is a major thing with everyone. And everyone has a solution, but it still is a problem. How do you stick to your plan?
I'm pretty a simplistic guy, to be fair. I've got, you can probably see it here, there's a lot of stuff I've got just on pad and pen. And when I first started, I stuck that on my pad, and every time I went to trade, if I thought that was outside my rules, I would literally just turn to my pad and just stick to that. But it's, again, about becoming disciplined to that. And that comes in, I was mentioning this before, is my routine pre-market open up at the same time every day, because if I don't, I know that can affect the routine that I've been in for so many years. So it's just about you have to rewire your mind essentially to be able to do that and stick to your plan, because you will have the urge. It goes against all human nature, trade, and everything you do is all against human nature. So for me, I'm a really simplistic guy. Is I would always have a sticky note on my desk saying, "Don't be an idiot," and stick to your plan. And then I'd look at my plan on my book. Then so it's really simple. I just literally have my plan written down on my book, and I'd have a sticky note saying, "Don't be an idiot," on my screen. So again, some people are different, but that for me was a simplistic way I did it. And I just stuck to that. It takes time to build that. It's not something that happens overnight. But it's just about having those reminders. And I don't know if anyone's read the book Atomic Habits, but it's about compounding those 1% to then make something that's going to be 300-400%. You're not going to get that linear growth. You're going to get sort of the rocket. It's all going to compound, and then absolutely you're going to hit the roof with it. And it'll all just fall into place. And another thing that you'll notice is, from a journal perspective, is what I did was I separated, obviously sticking to trading plan. Part of that becomes over trading and trading to your plan. So what I did was I opened 2 demo accounts, and I had one where when I had the urge to trade, even though it was outside my trading plan, I actually just took all the trades I could to get rid of that urge. And the other account, then I had a separate journal for that, and I just stuck to my plan. And what happens is, although you're taking less trades and you have the urge to trade on the one you're sticking to the plan, is you'll quickly see in the journal, okay, the one I'm over trading on is blown 2 weeks ago, and the one I'm not over trading on, sticking to my plan, and that then psychologically got me over it. Okay, I know I got an urge, but that urge is actually damaging me.
Yeah.
So that was another way that I did that.
That's a great
Awesome.
idea. Yeah, you're like misdirecting intentionally
Yeah.
that energy. Like I think I said before, a dog, when they get up and they, they're stressed, they stand up and they shake off their energy, right? That's exactly what you're doing, but you're doing it in a place that's safe.
Yeah.
You're not actually losing money in that account. But it also is a really good reminder, like you said, after 5, 6, 7, 8 trades, that doesn't work that well, or maybe it takes a bigger sample to help you remember, oh yeah, this is why I don't take these trades.
Yeah, exactly.
You mentioned three things basically. One is journaling. You showed your pad that you always journal, right? Whenever you do something, you have that urge, you enter a trade that's not part of your plan, you journal. And that journal makes it possible for you to look back and decipher, discern, assess, what is happening to your P&L, to the results of your actions when you do follow the plan and the occasions that you do not. And you also mentioned reminders. You put on some reminders in front of you to help you, cues to help you go back to the plan. I love them. And especially, I think that's very, very powerful. That shaking that you mentioned, Diana, that is the, that feedback loop that we get from our data, right? Because if we don't journal, you won't have data, right? You wouldn't know what's happening. But with the data, doesn't mean automatically it's going to magically change anything, how we think. And you mentioned rewiring ourselves a couple of times. And that's exactly what's going to happen if we do that habitually, right? When you go back to the data and you look what difference it makes when you do something following the plan or you don't. And you start looking and understanding that one favors you and the other one does not. And but in the moment, if you don't do this, if you don't teach yourself, you don't wire yourself in the moment, somehow we convince ourselves that this is the right trade because there is an opportunity here. I have to do this. I don't care, it's not part of my plan. This time is going to work. So I really like that. So journaling, reminders, and that feedback loop to rewire ourselves, how we think, and the value that we interpret from these actions or these behavior that we have. I love them.
I love that you also said that you showed us your actual pad that you write on. So much of what we do is digital on the screen and whatever. And to have your reminder literally as a tangible thing that you can touch, even if it's a Post-it or what. I'm a big Post-it person as well. I think that's such a great idea to have it off the screen, to literally have it in the room with you is really, really great advice for everybody.
There is
dopamine and things like that as well. And I find obviously with screens and stuff, you can always go away. And again, reading off a pad will not give you sort of that infectious dopamine in regards to, again, away from the screen as well. I'm massive into that and sort of like understanding dopamine and like dopamine addictions and things like that. So I think having it on a pad as well, obviously, if you want to go over that in the evening and stuff like that as well, is it takes you away from the screen time. As traders, we're at the screen all day, every day. So it's just sort of like a soothing effect as well when you want to go back and read that. So I obviously have it digitally as well, but in the pad for me has been crucial for me.
Awesome. There's one person, Tom. Tom is asking, Deary, what is your pre-market routine?
Pre-market routine. This is actually someone I know as well. My pre-market routine. So if I get on the charts 7 a.m. every morning, I wake up 5:45. The first thing I'll do, my wife goes for a run about 5 o'clock in the morning. So I know when I go downstairs, 5:45, that's about the time she walks through the door. So I'll go and speak to my wife downstairs, have pint of water to hydrate, and then instantly come upstairs, shower, obviously get ready, and then I'll sit on my PC. I usually sit down on my PC about 6:30, half hour before Frankfurt Open, analysing the markets and seeing where we go in. I also then journal, obviously, feelings, how I'm feeling for the day, that sort of thing, how yesterday was. I'm also obviously really into Atomic Habits, obviously got my checklist for the day and things like that as well. I'm massive into that sort of thing. So I sort of get all that done before I jump on for the day. It just makes you feel good. Even just what people don't understand, and if anyone hasn't read the book Atomic Habits, it's such a good book. It just makes you realize like compounding bad and good, but it's the little changes, and even just writing something down before you come on the chart, even as simple as shower, brush my teeth, make the bed, just those 3 things that you can literally sit there and tick and go, okay, that instantly puts you in a good frame of mind. And it sounds crazy, but when you do it and you start compounding those small wins that become big wins, it is absolutely paramount for where I am and what I've done. But yeah, that's my pre-market. 5:45, I get up. I know my wife's coming through the door then, which is good to see. If she's not there at about 10 to, I start ringing her saying, is everything all right? Because you don't know what's going on. And then up, shower, book, journal, and then straight onto the charts.
So basically, you have a quite fixed routine, and you start your trading day with journaling before anything else.
Yeah. So as in journaling, like feelings, emotions, goals, that sort of thing. Only like 10 minutes. Things, to-do list, that sort of thing. Even just simple things like there's a plug socket here now, and being an electrician, my wife's on to me to fix it. And I've put it off for 2 days, but that's something that I need to put in my journal. Just building those habits. But anything electrical, because I've been an electrician in the past, I don't want to do it. I'm like, I don't do that anymore.
Nice. All right. Go ahead.
Well, we just had the Open, so 13 seconds ago or so, the New York Open just happened. So it was a little bit quiet, but we're just getting started. And then just a reminder, in about 15 minutes, we have high impact news, the flash PMI, and then in a half hour is the new home sales, which is, orange folder news on Forex Factory. So maybe things will start to pick up here.
Yes, we do have indeed. Today has been a lot of in the morning. We had a lot of EU news that was released, and the market didn't have spikes, but we did have some nice moves from the early London session into where we are currently. What tips do you have, Deary, to your younger self when you started? What are the biggest lessons that time and experience and pain has taught you, present, Deary, that you would be able to give to your younger self? In other words, to people in the audience who are still not there where you are at right now.
I think specific to this industry and trading, I think is don't rush and don't compare yourself to anyone else. Obviously, everyone's on their own journey. I found myself rushing to try and catch up with other people, thinking I was going to be a millionaire overnight and all this, when in reality, you're on your own journey. You've got your own time. So just take your time with that and understand the process. And if you don't enjoy the process, what's the point on doing it? I found myself a lot in the beginning not enjoying the process and getting stressed, anxiety through the roof, not sleeping and things like I was saying there. When really it's something that you should enjoy. The losses are as important as the wins, because without losing, you don't know how to correct those losses. So I think definitely try and enjoy the process and go at your own rate. You're not everyone's the same. Some people may become profitable traders a lot quicker than someone else. I know some people that have contacted me in the past that have been trading 6 years and I'm profitable, and then I know other people that have somehow managed to nail it in 12 months. So it's just one of those things. I think, to give myself advice, enjoy the process, take your time with it, and don't compare yourself with anyone else. Also, the big thing for me was I was never ever going to stop. So this is just something that I had ingrained in me. If I was to give advice to anyone else, is always have the end goal in mind. And no matter if you put yourself in the position so many times, luck is going to become a part of that, and it's going to fall into place for you. So you can put yourself in a position one time. What's the reality of that happening? It's not going to happen. You put yourself in that position 10,000 times, then of course that's going to happen,
It takes putting yourself in the right spot, though. That's a really good point. When you're showing up and you're following a process like you outline, which is so rigorous, that's where you're showing up again and again and again, but in the correct spot. So I think that's really, really excellent advice.
Yeah.
Another question. I think what will be popular with the audience is what is the importance of backtesting in your trading routine, uh, and the building of the system you currently have in general. What is the importance of backtesting to you?
Um, the utmost importance. And again, for me, that was essentially like my go-to was backtesting, and specifically backtesting. A lot of people, when they start backtesting, they go and backtest, but they backtest random sessions. So what my advice to that would be obviously backtest the sessions that you are able and willing to trade. But for me, in my journey, it was obviously important because obviously I would journal my backtest, would have a backtest journal and obviously a forward test journal as well. So it's being able to spot those mistakes. And not only that, when you back test and you do like a full 3 years worth of back testing or 3 years worth of data, you understand, like I was mentioning earlier, like Q4 for me, I don't trade that often because I know market conditions for what I trade are absolutely horrendous. So I think not only does it improve your trading, it also improves your awareness around the markets of understanding. We're sort of going into Q4. I know my strategy is not the best. Price action is absolutely awful for me. So it just gives you that, not only the backtested data and the data of how well your strategy works, but also the understanding of the market conditions in certain times of the year, if that makes sense. So for me, definitely backtest, and I'm a massive preacher for that as well. Is like the utmost important.
Do you how do you when you journal, and let's say there is something that you did do or do not do that was not according to plan, right? Because we're all humans, that
Yeah.
those things do happen. How do you manage those situations? Do you just let it be and accept it for what it is, or do you keep a second journal, one which is something different?
No, do you know what? I've been doing it so long now. I tend to understand when I've gone wrong. I still journal, but I tend to sort of take that in the chin. But also, what I tend to look at more often than not now is what was my routine leading up to that day. Because more often than not, when I go back on my journal, the days that I've taken trades that I usually wouldn't have taken are usually down to something that's happened leading up to that. So the actual process before, obviously my routine and things like that is usually, I know I took a loss on live session going back 2 weeks ago, that when I looked at my routine before that, I was having my bathroom fitted out with the plumbers coming in, and I was running back and forth up the stairs, letting people in, and I took a loss on a trade that I wouldn't have usually taken, and I knew because I journaled, and I journaled my feelings before what my routine was before that trade every time. So I knew when I look back at it, the reason was I was rushing, was trying to pull my phone out to place the trade. I was looking at the charts. Then I've only got one confluence instead of all confluences I'm looking at. I've only got the 1 minute, and it just all spirals from there. And again, going back to that, it's about compounding the bad habits that I picked up from the morning when I should have just stepped away and gone, okay, well, I've had this morning, just don't trade today. And again, no one's perfect, even as full-time traders and traders that have been in the industry for, I don't know how long we've been in the industry, Victor, but we still make mistakes. And it's about having ownership with that and understanding, okay, that was my fault. This is why this happened. This is why this happened. Don't do it next time. Everyone's human, same as a professional NFL player or whatever it may be, football player, whatever world. Some days they're not going to have the best days, even though they're professional at the top of the game. You know, and that is the whole thing. People think as full-time traders, you're going to go out and you're going to absolutely hammer every trade and win every trade. It doesn't work like that. It's about probabilistic outcomes and understanding where you're going wrong and adjusting those things.
Yeah,
And people are
very well.
human, right? We make mistakes. Unless you use a bot or an EA, we make mistakes, and that's just part of it.
Yeah. 100%.
And that last incident that you brought up as a example, that bathroom fitting, what was the lesson there to you? What rule that you implement, or you're going to implement to avoid that in the future? For example.
I thought you were saying, for example, on my journal on that specific day, I basically wrote, if I am rushing, do not trade. So if I'm rushing to get to my PC in time, do not trade. I got to be at my PC and sat at my desk half hour before every session, which is what I usually do. And it's just one of those things where it's like big red writing, don't do that again, essentially. But I put those rules into place again. Like, it's one of those things that you do stick to religiously, but occasionally, like I was just saying, is you are going to make those mistakes where you've got pressure from, you're holding a live session, these things are happening. I have to hold this live session. And then I've obviously laid down to my downfall, which I shouldn't have done, if that makes sense. It should have been to my live session things. Look, I'm not trading. This is the reasons why leading up to it. I'm rushed. There's people knocking the door. There's people banging next door, So just step away from that.
Mhm.
I like that. I like that very much. Perfect. All right. The trades that you mentioned, you mentioned also futures in NQ and ES, and you mentioned that you trade them equally the same ways with some nuance, I suppose. Uh, is everything like I mean, for example, holding time? Are you holding the same number of hours or whatever period that you typically do in the London? Do you do that as well on the New York session? Do you have a specific time of the day at which, if you don't have a signal on that on that New York Open, that you're not going to take any trades? Are these rules also applying to your afternoon session as well?
Yeah, of course. If in the morning, 7 till 9:30, if I don't get anything, that I step away, and then the same for New York again. Because I obviously trade forex and futures, I'll obviously look at the pairs coming into open and see which one I prefer or is more aesthetically pleasing or cleaner, in other words. And then I'll trade either futures or FX. But in New York session, I'll go 2:30 till sort of 4 o'clock. And that's my cut off there if I don't get anything between that. Because the reality of it is, futures especially, those big moving expansions usually happen in and around that open. You see it time and time again. So I sort of stay away then. Volume for me sort of dies down at 4 o'clock. It does come back 6 or 7 p.m. UK time, obviously I'm talking now. But I stay away from that. And that's the time I like to go away. Obviously work a lot of hours, so spend with my wife and stuff, just take your mind off charts and things. So those are the two times I specifically stick to.
Perfect. I like that. Are you seeing anything? The market is open, Deanna. Are you seeing any opportunities that we could be sharing with the audience, or perhaps something happened, some I don't know, change in the market structure, perhaps on the lower time frame, something that makes sense, that is relevant for the audience?
I right now the market at ES anyway, the market is just consolidating around this level here. So we have yesterday hit all-time highs, blasted through it. Really, really strong price action yesterday. And today there are a couple news events. We already have a couple of them out of the way. We have another one coming in 4 minutes, which is another high impact red folder news event, and then another one in about 20 minutes. So it looks like the market is just kind of holding in this consolidation area and just kind of stuck here for now. So there was a little bit of a sweep of this hourly swing low. This is the overnight Asian into London session. Price came down and swept and, kind of pushed higher from there, but really not a whole lot to say here right now, just kind of waiting for the market to pick up some steam still. And it's just a little bit slow. I track ADX, and ADX is quite low. It looks like we're just in this sort of holding pattern for now.
What strategy do you trade, Dina?
My strategy, I trade, I would say, a momentum strategy. That is my primary strategy, but I also look at, it aligns well with ICT.
Yeah, that's why I asked, because you mentioned the sweep of that low.
Exactly. So I pay a lot of attention to swing lows and then also daily lows, and how price reacts around there, and highs too, of course.
Yeah.
But so yeah, if you're in ICT terms anyway, you're looking at this sweep of liquidity here. It wasn't a super, big sweep, but this is the entire Asian session, London session, price dipped below and then pushed higher. So as a level to level trade, this would have worked pretty nicely, but basically we're just in this chop zone from, around 63.93 to 64.07 or so. So price can continue and maybe break out. Maybe this was enough. But price is very much at all-time highs, and we're still inside yesterday's price action and just seem to be waiting there. So we'll see, but I was thinking that perhaps because we have these high impact news events, that maybe that would kind of jumpstart the market. Had one, didn't really do anything, had the open, nothing really happened. Flash services PMI coming in, I guess, another minute now. So maybe that'll be what jumpstarts the market. Or maybe we'll get some kind of negative news event that will really flush the market down lower. But we're really, really high up in the sky right now. And so it's a little bit hard to continue going long here, but not a market I would be interested in shorting. There's been a lot of strength in the indices, but yeah, so that's what I'm looking at.
Nice. I wanted to show my screen for the those chart lovers out there, those quasi enthusiasts. Let's see. I'm gonna show you guys in the my screen, and yes, that is indeed the one. This is Aussie CAD. This is different than the euro dollar or the pound dollar that I typically show you guys, but this is the setup. This is the area that I'm looking at. We have a fresh order block on the monthly time frame. Right, without looking at the market structure on this time frame, it is the monthly, but we do have a reason to expect some selling coming in. That was the immediate retest, and we did have officially. This is still an immediate retest, but the order block is still fresh. I remember that conversation, Deanna, yesterday, or was it Monday? Was it
Got the days
day before
confused
that?
as well. Your guess is as good as mine. I don't know.
I like the honesty. On the weekly time frame, there isn't really much to trade in terms of the that to me that order block is is already something that I would not. The number of bars since its creation is way too many. So we are in a higher time frame area of supply, even though it doesn't have alignment. We have a fresh order block on the daily time frame, as you can see. And what does price do? As we get back into that order block, you can see we created a quasi, the quasi being this area here. That's the neckline. And you can see very nicely how the we created with the fib, or we can create with that fib tool, right? That equilibrium, or this, what was it? The rebalancing in your terms. But they're the same, the 50% retracement. And if we identify the structures, right, I didn't put in all of them because we did have one here as well. But still, we had one price didn't react to, right? See that here. But the next one, very beautifully. And what does price do? There you go. You see it here. You can see as price comes with a lot of power, many candles consecutively, and stops and changes and creates a bearish order block right there. That's not coincident. That has to do, of course, with what we have to the left. That's the entry order block on the quasi. And there you go. You have here a new indication of the H4, confirming that there is an H4 order block there on the quasi, and that could be the beginning of at least a drop, not necessarily a complete reversal, because the market structure is still bullish. If you look at it from zooming out, it is still bullish. We didn't create from this high. We didn't take out, these swing points, but still, the distance we have traveled before creating that structure allows us to have a nice drop and a lot of profit if we were able to catch something in this area. And if we go to the lower time frame, as I always do, let's look at the H2. We do have that order block right there, H2 order block, and price comes back to retest that. Look at that. Comes back to retest that, and then moves out and closes there, right? And actually, it gave you another opportunity by that second candle. And if you go to the lower time frames, you can see that you had actually multiple possibilities of getting in, and they're indicating a possible move to the downside, right? So if that would be that is the setup that I wanted to show you guys. It tells me that I have an area. The H4 is confirming. We have reasons on the H1 and H2. We have enough alignment to start looking for an entry. If you haven't had an entry yet, actually, just by looking at here at this, I didn't see this before because, of course, we were streaming. But there, look at this. This is an outside bar, and we are currently testing. So there are multiple reasons or multiple ways and moments the market is telling us that it is stumbling upon something here. It is hitting a zone, and of course that's a supply zone. And we could see we don't know, but what market is telling us right now, unless it changes, it's likely to have some kind of a drop in the next couple of bars. And the order block that I banned with the outside bar is this H1 order block right there. And we go, let's see if we have a quasi in there on the new order block, right? It starts from here. So that means I am able, yes, let me double check that. Yes, I am able to, this is a quasi in my book. This is the neckline. There you have it. And don't want to move that. We did have an order block here that hasn't been retested yet as an entry order block. I'm going to take that away. Let's see. There we go. That would be an entry order block for me on the 5 minute. And besides that, there isn't anything, at least not on this time frame. It's also visible on the 15. And the 15 hasn't been triggered either. But that depends on your entry model. You may have a different entry model. Mine hasn't triggered on this instance yet. After the I'm referring to the outside bar that was created, not at the H4 that did confirm already, right? So it depends on how deep your entry model or what time frame your entry model uses for entry confirmation. But that is something that I wanted to show you guys. And in this case, my target, it would be, since I don't have anything on the H4, I would be targeting that. But that is a bit ambitious, looking at the momentum, this push. It is quite likely that at some point, it will be just a retracement and then a continuation. So I would be just going for the FTA in this case, and that FTA is somewhere in this area. We have this order block, of course, that was left behind. But if you see on the H2 as well, we have actually an area that is a little bit higher. And in that case, I'm going to be taking that as the target. There we go. So that is the, as you can see, it's a very small piece, but if it fits with alignment, you can get in on such a trade without knowing what's going to happen. We don't know, but with some confidence, because you know that these on the larger number, these have good possibility of hitting your targets. You're going to say, Diana?
Did you say FDA?
Yes.
Was that it? Can you explain what is FDA?
FDA is the Federal Drug Administration.
Oh, sorry.
No,
I didn't know what he meant by that either, Dina. So I'm glad you asked.
I thought you were referring to something in your
the strategy.
On the chart.
Yeah.
No, yes, I am. I was. That was a little joke. I said.
Missed the joke entirely.
I said FTA, the first trouble area. But yes, that was the FTA. But I said it FDA because I knew that would confuse people. So
missed it. Well, you did. Yeah, I think you confused both Derry and I. So well done.
Yeah, so that is the first trouble area, and the concept is when you're looking for a target, you want to be targeting the first trouble area, the first thing on a relevant time frame, and that is to me the H1, the H2, H4. But you can obviously, in this example, for example, if I look get an entry here, and I go back, right, for everyone watching, I go back and I look at structures or order blocks that were left behind, and I don't see anywhere any demand zone that was left behind other than this one. But understanding the market structure, this is quite a big move. And especially the market structure is bullish. We are making higher highs, so it doesn't make sense for me to target that as a high probability trade. So instead of doing that, you go to a lower time frame, but one that still makes sense in terms of time frame. So not something on the 1 minute or the 5 minute, but something, if you spot something on the H4, it needs to be something relevant. So meaning H4, H2, H1, and where you can get the And in this case, we can see that there is on the H2 one structure here, one order block, and another one there. And on the H1, there isn't one here, but there is one below. And from all of them, the first one we're going to be heading into is the H2. So that will then become the first trouble area, the first area that I expect price to have some hesitation before, even if it continues to go down, it will have some kind of reaction. And that's where I want to have my TP1, right? So not Federal Drug Administration, but the first trouble area.
I love that. I'm gonna try and remember that. I'll probably get it wrong, but that's a great way to think about it too, right? Because there's areas of resistance and areas of support. It's not always just one line in the sand.
Yes. Actually, the whole idea, it's just another application of supply and demand, right? Because if I'm trading this short, it's because I expect some kind of supply. I recognize or assume that there is a supply where I'm currently at, and I expect price to move when we hit supply, right? Supply can only be an area above us. When we hit it from below, we expect a reaction back to the lower side. And that's the opposite when you flip that over, a demand area, a structure, when we hit it from above, and it can only be from above, otherwise it wouldn't be demand. When we hit it from above, we expect some kind of a reaction. And in advance, there is no way we can know, what kind of reaction that will be. Is that just a little pop and then we continue? Or is that perhaps the beginning of an actual reversal? And since we have this very bullish move, you want to be very careful with going against that. You have momentum against you in turning considering this big leg. So it doesn't make sense for me to, for example, expect that the market is going to do a V-shaped recovery in this case, yes, and go all the way back and retrace that whole move. That's not very likely. So it would make sense a lot more respecting the momentum within the structure, realizing that price might indeed have a drop, and manage my expectation by expecting something reasonable. And reasonable is just the first area.
And Derry, here's a interesting question for you, because you kind of touched on earlier that you only take about 3 to 4 trades a week, and that you only take 1 trade a day, win or lose.
Yeah.
So are there days that you avoid related to news, or maybe a day that your data shows that you aren't your most profitable days? How does that work?
Yeah, to be fair, this morning was more of an example of news. If news wasn't a factor this morning, I definitely would have traded. But this morning, or today in specific, I'd stay away from both sessions just because that news is just something that I don't like to see. But I usually trade or come on to trade 5 days a week. If we don't get entries, then I stay away. If we do get entries, obviously I capitalize on those. But 5 days a week, but on high impact news days, I tend to stay away. Like I was explaining earlier, if we'd had this displacement sort of coming into Frankfurt, then I would have looked for something before that 8:15 news to then push lower, which it did. We had the displacement, the change in the state of delivery, pushed lower. But for me to get in that trade again, I would have had to wait for the closure of this candle to even start dropping the timeframes to actually see what was going on within that. And that closed at 8, and then news being 8:15, I would have been in the trade 15 minutes and potentially would have been manipulated. And then obviously slippage and things like that with that as well through high impact news can be criminal. So that's the reason I stay away on days like this. It's just a personal preference. I've been stung too many times at the start of my journey with slippage where you're risking 1% and you end up losing 3-4% because you're holding through news. So I just think personally think it's bad practice if you're not a news trader,
Yeah, and I think that highlights the whole concept that, Victor, we were talking about, I think it was yesterday maybe, the idea of like the spectrum, right? Because for me, I love high impact or any news events, but specifically high impact news events.
Yeah.
Not that I'm necessarily trading them, but I'm watching for them and how they create activity in the market. So there again, like we said before, there's no one right way to do it. But you can find what works for you and pretty much tailor it to whatever you want. So thank you for sharing.
Yeah, 100%. I am going to have to shoot off because I've got a call in 5 minutes, but it's been a pleasure meeting everyone. and hopefully we'll see you on the next one and get some trades potentially.
Yeah, Derry, it was great to meet you. Thank you so much for sharing your experience and your journey with us. I think it's super inspiring. You know, being an electrician is amazing and that's a great job, but to see that you ultimately were able to pursue something different and achieve what you wanted is really impressive and really inspiring. So thanks for being so open with us.
I appreciate that. I've enjoyed speaking to you as well. It's been really good. It's been fun as well. That FDA will stick with me, Victor, mate.
I like that.
I'll use that on my next session.
No problem.
I better remember that one too. That's great. Victor's always coming up with good ones like that.
It's been fun, to be fair. I was not apprehensive, nervous jumping on. Obviously, the first time again. One of those things I'm not conditioned to being on the Fivers YouTube, but I really enjoyed it. And thanks for having me. Make me feel welcome, and thanks for all the questions as well.
Yeah, well, it's obvious in the chat that everyone really appreciated having you here, and hope we can get you back sometime.
100%. Hopefully weekly.
Yes, the pleasure is all ours, Deary. Have a great day, and thank you for popping in and sharing all the gold nuggets you just did.
Yeah, sorry I couldn't get any trades or give any more on the markets. Obviously, for me, it's a high impact news day. I stay away, so I wouldn't advise anyone to trade something that I wouldn't. But it's been good chatting, and thanks for the questions.
Awesome. Take care, Derry.
Bye. Bye, you too. Bye.
Bye. All right, so we're gonna be to my not my right shoulder, my physical right shoulder. I mean, the right shoulder on the chart. Focus, people. Focus on the chart.
Did you have like extra coffee today, Victor, or what? I feel like you're just like you're on it today.
Let's see. We have just actually we are 24 minutes over time.
Yeah.
But fear not. I will show you guys one quasi for those lovers out there, one quasi that is catching my eye, and that is the following. We do have a structure. We do have an order block that is being retested currently, but it's not part of a quasi, and it's not fresh anymore, so I'm not interested on the daily. So it's not going to be a daily setup. I'm not going to be shorting this as a swing trade, but we do have a fresh order block that was and is being retested. The same thing happened here. You see that beautiful retest on that order block on the H4? That would have been beautiful. I didn't get an entry there in all honesty, but still, you, depending on your rules, may have gotten something for yourself. We do have an order block here that is being retested right now, but there's something else, and it may be tricky because we do have an H4 quasi from the left, and we just had, look at this beautiful LJ Picasso level reaction here. I mean, we do not make this up. Let's see. We have here, look at that. That's the order block that was created. That order block was created on July the 3rd, meaning 3 weeks ago. And look at the precision of that reaction. Look at that. Price comes in, touches it with how much? Let's count some pips, some points here. I think it was before, right? So that must be actually. Can we do that quickly? There we go. That's the structure. And if we go tighter, or not tighter, if we go zoom in, look at that distance of the. This is the first reaction, which is picture perfect, and comes back the second time, the third time, creates quasis on the lower time frame and shoots down. Where does it go? On the H4? Where's that FD? No, not DA. TA. The FDA is right here, right? On this time frame, which is that order block, right? It was the H1, but to me, that it is in the same place. It is overlapping the H4 as well, and that's where price goes and reverses. Beautiful, technical. I mean, what more can you ask for? So we do have an order block here. The trick is obviously to go there and look for the reversal on the lower time frame, but don't forget, I should say, that the actual order block here, the relevant one, is from the quasi, right? So don't get fooled by this order block. But actually, right now we're already going through it. Don't get fooled by how does magician. How do they do their performance, right? They put you to, they misguide your focus. And the market is trying to do exactly that by focusing on this order block, while this is the one that is the relevant test for the market, whether it's going to continue or perhaps have some kind of a retracement. That is all for me for today. It is great streaming with you, Diana, as always.
Always. Oh,
Yes.
James.
We're gonna be coming back, of course, on Monday. That is the YouTube channel of the Fivers. I would like to invite everyone for our workshop session on Discord, which will be held by Rich in about, if I'm not mistaken, about 41. Actually, yes, 41 minutes from now. Any last words, Diana?
Not really. It was a great session today. Thanks everyone for joining us. Everybody was awesome in the chat as always, and it was a pleasure hanging out with you, Victor. I always learn a ton from you, and it's been great. So I hope you have a great weekend, and I'll look forward to seeing you again next week.
Perfect. That is our show for today, ladies and gentlemen. So sadly, we'll have to have a pause in seeing each other. It's going to be left for next Monday. So I hope to see you there. Goodbye.
All right. Take care, everyone.